Welcome, Luke. How are you? Are you at Consensus, sir? Can you speak?
How's it going, everyone? No, I'm not at
Oh, okie
Consensus,
dokie.
unfortunately, in the States, but really happy to be able to be
Yeah, nice to meet you
brought on
finally.
and
Always wanted to meet you. Love your handle. Very cool.
appreciate it. Yeah, it was coined when I was first joining Gauntlet, so I can't give credit myself for the name or the PFP, but it's somewhat stuck. I do have long hair though, so it is somewhat of an indicative picture.
That's awesome. We've got someone on our end, Joseph, who's also got long hair. We call him Solana Jesus because, frankly, he does kind of look like him. So, in some future movie where someone might play you as a character, we'll make sure Keanu Reeves plays you.
Nice. I'm a big Keanu fan, so I'll definitely take that.
So I wonder if you could just kick it off maybe with 10 to 15 minutes. Tell the audience a little bit about Gauntlet, how it started, your road to crypto, your career, how you devised your strategies. What are your strategies? What's the intended purposes? Who are your users? And your vision for the future. And then also maybe wrap it up with, your take on the current market.
Sure. Yes, I put together some notes and some commentary. I'd say more kind of around the current environment. So happy to speak to those. But just by way of introduction, my name is Luke, not the most active guy on Twitter, but have been at Gauntlet for about 2.5 years at this point. Spent my time mostly in the traditional markets on the buy side for about 7 years, and then actually managed a Bitcoin mining venture and prop trading book for a couple years before joining Gauntlet. Gauntlet, just as an overview, is a advisory firm that started really penetrating the lending space back in the 2018, 2019 previous cycle, doing a lot of economic consulting and quantitative research for lending protocols. I'd say probably since 2024, we've started penetrating vaults a lot more aggressively, both on the curation side with lending primitives, as well as some activity side as well. We're really doubling down on that, both in terms of kind of the overall activity and thesis within the industry, as well as our ability to generate and deliver value to the industry as well. My role at Gauntlet is I manage the derivatives team here. Our primary responsibility and mandates are researching and ideating delta neutral strategies that largely are looking to trade basis. So we are very, very active in researching funding rate evolution, what drives the futures market, whether that's with centralized venues or decentralized venues. Obviously, over the past 2 years, there's been a tremendous amount of growth on chain with on-chain perps. And so, really want to be a part of that mission and contributing to the forward-looking growth of derivatives on chain. And we have a handful of strategies live in the public-facing presence. We are fairly active on Drift and deployed initial strategies that our flagship strategy would be Delta Hedged Exposure, the Jupiter Liquidity Provision token, the JLP token, which has been very, very active over the past 18 months or so. And so a lot of that is researching a proper hedging algorithm and hedging engine such that we are not overpaying in transaction costs, given that this is dynamic hedging, but obviously still ensuring that we minimize and target volatility. Our volatility mandates are somewhere kind of around the 5% level. We're not really looking to hit home runs, aren't doing too much directional trading, really trying to build trust, build a track record, and doing that in a sense that's allowing users in a more permissionless sense to find enhanced risk-adjusted return and facilitating that execution on their behalf.
Before you move on, is there any way you could share a little bit of the insights into, the current state of futures, specifically in the crypto space? Like, has there been a notable change from centralized exchanges to decentralized venues on chain? What chains is there been a notable change, like the amount of capitalization or amount of speculation per chain? Like, can you give us any idea of your analysis with regards to those dynamics?
Yeah, sure. So I think in terms of activity, I've been following the derivatives markets pretty closely on chain for the past couple of years. It's my initial hypothesis, if we maybe go back to 22, 23, when L2 started coming out, DYDX had launched, I think V3 or V4. I think the market was still trying to answer the question, what is the right primitive? And I think kind of underpinning this especially with futures or just general trading, is this problem of making sure books are liquid enough to facilitate activity and allow for that risk transfer or trading costs to be relatively cheap for traders. There's almost this kind of duality of some sorts where market makers want to protect downside risk and traders want to make sure that they can execute trades very cheaply. And so back in 22, I think you had synthetics, you had GMX, DYDX was an order book protocol, but there was almost these two primitives, traditional central limit order books, as well as AMMs. And the nice side effect with AMMs was that updating quotes was something that really wasn't expensive. The pool essentially updated itself via either some constant product function or some derived function that was actually dictating where price curves evolved to. And so given kind of the throughput of L2s or chains, it became a very positive UX for traders as well as market makers to not have to worry about constantly updating quotes and getting picked off on the book or on the pool. I think some of the challenges with that, though, with really kind of what GMX had launched back in the day, was really trying to scale the liquidity aspect. And what I mean by that is perp AMMs only can scale as much as the amount of spot liquidity that's on a specific chain. And so if you wanted to facilitate something like multiple billions of dollars of open interest, you needed a significant amount of Bitcoin, Ethereum, or Solana, or bonded against USDC or some stable coin to allow for that growth. I think kind of dating back to then fall of 2023, when Hyperliquid started coming online, there was not too much of a thesis around, hey, central limit order books are going to really start dominating the space. I think that was highly a function of throughput. Solana L1 also, with protocols like Drift having order book models, we started to realize that, hey, maybe derivatives trading isn't going to go in the same route that spot trading went, really with what Uniswap pioneered back in 2018. And so I think where we are now is app chain derivatives venues, Hyperliquid, obviously, DYDX, Lighter more recently, Aster as well, I think really pulled forward and is starting to answer that question around what is the right primitive for liquidity and risk transfer on derivatives venues. I thought that this was maybe more of a 2028 type of question, and I don't think we still are there, maybe more at the bottom of the sixth, bottom of the seventh inning in this game. But it seems like liquidity and activity for on-chain perps is starting to consolidate more around central limit order books than traditional. And I think while there's a lot of novel developments in the Web3 and in the DeFi space, if you look at traditional markets and you kind of think of, hey, if I'm a market maker and need to provide liquidity and I need to facilitate two-way flow, but I may not have a view on price, how much flexibility do I need to ensure that I can adequately manage my risk and my drawdown risk? Traditional markets still very much operate on this central limit order book construct. And that's kind of more maybe my personal view or thesis. But obviously, that's very much a function of how fast block production can occur on chains and really what is the cost for that block space. I think kind of where we are right now is we're seeing multiple evolutions or paths with this, whether it's app chain focused, where the block space is really intended for financial transactions and may not want to be congested with other activity on a chain, or research and development figures out ways in which L1s can really scale and facilitate NFT activity, maybe DePIN activity, GameFi activity, derivatives activity, spot activity. So I think the next couple of years will be very, very interesting to see where things head, but more very bullish that derivatives are finding product market fit on chain. I just think there will, need to be some time before we are confident on, where that, steady state point is.
Can you talk a little bit? I'm always very curious, and this is just for my education, maybe those in the audience who are a little less familiar. What would you characterize as like the key gaps between crypto derivatives and TradFi derivatives? What's missing? What are some things that folks should be paying attention to?
Yeah, sure. Well, personally, my opinion is that I think the invention, like perpetual futures, I traded a lot of TradFi derivatives, earlier in my career, and I can attest that calendar futures can become fairly onerous to have to roll exposure to the next nearby. And you're almost playing this game of chicken with market makers. If you've got a large long position or a short position, whether that's in interest rate, equity, commodity futures, having to roll that exposure is not free And it's something that you need to be very mindful of, especially if other shops start picking up on where you're positioned. So I think also my longer hypothesis is that perpetual futures will actually make their way into TradFi, or there will be some in between. We're kind of seeing that with HIP3 markets as well more recently. I think there's a lot of learnings TradFi can take from perpetual futures in a way that would really benefit market activity and growth on that side of the wall. The big thing that I chew on a lot is when and where are we going to see options markets on chain in a way that's going to bootstrap a significant amount of activity, really bring on a lot of liquidity. And I don't think we've really kind of cracked that yet. We are seeing things like digital options with prediction markets, but is there a world where one can actually invent or define a perpetual option? And what does that actually look like? I think crypto over the past couple of years has used the high leverage nature of futures that you can get up to almost 100x leverage as a means of almost getting option-like exposure with a lot of upside, and really kind of your option premium is the cost of getting liquidated in some conceptual sense. But I think it's being able to expand the usage of derivatives away from maybe just Delta One instruments that will be very advantageous for crypto and for DeFi. And I think that's going to take some time, but confident there will be a spot in the future where we'll see more convex instruments on chain, whether that's going to be in a calendar sense or in a perpetual sense.
Luke, before we take Wes's question, just a quick question for you. Maybe you can explain to the audience, why is it so critical to have options on chain? In other words, why do options bring more liquidity? Why do institutional investors or traders prefer options? What is the issue with high leverage futures? Is it just because of the volatility concerns, the risk concerns? A little bit about that. Maybe you can elevate your answer to kind of educate the audience on the difference between futures and options.
Yes. I think ironically or coincidentally, within Gauntlet, we're getting a lot of questions recently from asset treasury companies and about risk management and hedging exposure. I think traditionally Web3 and crypto has been more of a speculative asset. So, the risk premium is generally something that's paid from longs to shorts. You see that kind of in the funding rate, but there's a demand for long leverage in the asset class and generally not a demand for short leverage. Options become very interesting because you can start in some financial engineering sense, you can part of your book based on some range of price levels, right? And so if you want downside protection, but you still want upside, right? Put options are a very good solution for that. And Delta One futures, right? You basically hedge the entire outcome of future price evolution in terms of, that doesn't need to be your entire book. If you've got, 1,000 Solana, you might only want to hedge 500 or 50% of that, but you still have 50% downside risk, 50% upside risk as well. And so whether it's trading option spreads or just, buying options outright, it allows one to be more creative in terms of how they want to manage their downside risk. And so, it's been ironic, as I mentioned, in terms of more institutional players coming into the space and taking, very much a prudent or risk managed approach in terms of how downside can occur and what instruments are available to cap that downside while still preserving some upside.
Wes, go ahead with a question.
I'm interested in how to best frame this. Two ways, maybe. Two questions. Hadley came in here the other day. Very interesting conversations there. A little bit of a concern about how derivatives may have rehypothecated Bitcoin and paper. But I'm more interested if you could discuss kind of the nexus between synthetic order books in the perpetual market versus coin M spot margin style and oracles responding to a synthetic order book under low volume of spot. You might have high volume perpetuals that causes some flushing because it's sort of like overweight. At what point do oracles respond more to a synthetic casino style perpetual order book? Is there kind of a problem brewing there? And then more on the larger side of derivatives, what is that conversation? How is that conversation going between you and your partners about I guess, rehypothecation and sort of the dilution of the supply into all these different levered derivative inventions.
So you're asking more with respect to things like price discovery and kind of what is leading and how that might impact with more activity in options markets like private options, as well as the fact that activity in the derivatives market may actually create price discovery that's leading back into spot markets.
Yeah, and my understanding is an index is not going to report on the synthetic casino order book like Binance perpetuals, but an Oracle is going to pick that up, but not weight it the same that it weights spot. So under low spot volume market sessions, the dominance of the Oracle response to synthetic order books could be so great that it dominates the spot price, because the spot is picking up Oracle values and DeFi, and it's kind of feeding that into index. So it's like we're incestuously using, casino prices on a spot market through that kind of tertiary connection between oracles. It's my opinion that, like, if you're going to run a casino, it should be responsive only to everything inside of the casino and shouldn't affect spot prices outside. It doesn't have spot. It's using their own house liquidity. It's guessing on prices. So at what point does that liquidity that's wrapped up into a synthetic order book and has nothing to do with the underlying asset actually affect the underlying asset's price? Is there an issue there?
I think it starts affecting the price, when we think of who are the agents that are interacting, in these casinos or in the market. I think the connective tissue to some extent is probably the market maker cohort. And if there's significant amount of activity in the derivatives market, and I think we're seeing some of that actually right now, where can market makers hedge that risk? If there's a significant amount of long exposure that they are accumulating in futures markets or in kind of synthetic derivatives via pools, that needs to be hedged somehow. So that can be hedged at another venue in futures. That could be hedged via spot, basically by borrowing spot and shorting that if they're long futures. And so I think we're starting to see that more structurally, where especially on chain, open interest growth has really increased over the past 12 months. And we're starting to penetrate some centralized market share. But if derivatives markets are dominating price discovery, eventually that needs to percolate back into spot. And I think in first order, that's largely driven by hedging activity via market makers, assuming they have no view on price direction. And really, they're just trying to facilitate two-way flow and hedge as much of the book as possible in the cheapest manner. I think it's something you see more frequently in commodities markets. I think, ironically, the moves in gold and silver over the past couple weeks or past couple months have indicated some of that in terms of how speculative the asset might become and what implications do they actually have for spot market activity, and entering periods where you might see some heavy backwardation in the futures curve. But I think there's definitely some connective tissue. I think price discovery in spot markets leads to, or indicates, more structural positioning, given the high turnover nature of derivatives, and whether that's just short-term hedging or short-term price action trading. And so there's some kind of equilibrium ratio between spot volumes and derivative volumes that we are monitoring. But I don't think it has been too outsized, at least relative to longer run history, whether that was 2022 or into 2023, more on the centralized side, given DEX perps were not that active. But it's a useful indicator if the oven's running a little too hot and you start seeing large open interest growth that is not transpiring back into spot volumes. That could be an indication of some forward-looking volatility that might be, higher than historical volatility, given that these really are just synthetic instruments that are, kind of conceptually created out of thin air.
Yeah. I mean, as a trader, I'm concerned if a casino price feed gets fed into a spot price feed and messes with the market with fake liquidity. I'm also concerned, if the models are made, to profit off of volatility, and if everybody goes long, it actually incentivizes the market makers to borrow the asset so that they can sell it, dump through the liquidity it's actually built up in their synthetic order book, and catch the spread by buying it right back below their liquidations that they're hunting. So the harder we lever, the more incentivized market makers are to borrow and flush.
Right. And you allude to another, I think, very important thing that we're very mindful of. And I think the street is probably becoming more mindful of with on-chain derivatives, right? These are public ledgers at the end of the day. And so anyone can find what the liquidation levels are, or basically snapshot the current state of the market. And I think we saw that manifest a few weeks back with the very, very large liquidations at Ethereum and Solana. I think a couple Saturdays ago, you enter these periods of low liquidity on the weekend and massive price decoupling. Liquidation hunting is probably more of a real thing than it isn't anymore, especially now that you can understand without having an L3 order book visibility. All you need to do is either download, run a node, or have access to current account state to understand, hey, at this price level, $250 million of Ethereum is going to get transferred from potentially a speculator or maybe a delta neutral trader. But obviously it's going to be going to a market maker who's going to need to hedge that risk as quickly and as cheaply as possible. And so I don't think you had this type of behavior that was as significant on venues like Binance or OKX, given those are centralized. But now that we're seeing a lot of growth, and that's, at the end of the day, it's anonymous, but it's public. And that's going to become probably a bigger and bigger thing to be mindful of. I'm curious if there's, going to be a world where you do have true anonymity, but that is still decentralized, because position security is critical to ensuring that the market doesn't kind of, go out of whack, and that you can also, preserve alpha, or, preserve your own views in addition to that.
I know it's a Solana space, but I'm not going to shell Sui, but I think that it's an interesting topic to bring up, that they have this centralized cloud order book that is called Deepbook, and they recently released Margin as a protocol, as Sui in general. They realized a barrier to entry for TradFi was privacy. So they're seeking to do exactly that have the central limit order book with spot margin, provide anonymity, but also surface that kind of detail. And I agree, the on-chain direction is super important, because central limit order books on exchanges like Binance or Bybit, they're most likely probably just giving us a sampling of the liquidations that we're looking at, while market makers that have good relationships with them are not only getting accelerant speed to their market data, but probably also not just getting a sampling of that liquidity. They're getting the full understanding of the liquidity so that they can borrow what's necessary in order to flush that liquidity and maintain the neutral pool.
Right, exactly.
I got a quick question. So when you talk about liquidity on chain, I mean, basically, if we go back to the base elements, it's stablecoin, right? So it's treasury liquidity getting issued by Circle and Tether onto the various chains, correct? And then propagating its way through, like Hyperliquid makes use of Ethereum's liquidity. Solana gets a lot of USDC from Circle. So what's your feeling there? Do you guys monitor that? I mean, I have my own personal monitors, and I've seen lately there's been a much bigger uptick in Solana liquidity coming on for USD, printing on Solana of 250 million at a batch pretty much every day or two. And also monitor another interesting stat using our own engineered tools, and that is the amount of large participant transactions of liquidity between market makers, exchanges, people like yourselves. We actually follow you on chain, and obviously centralized exchanges. And we do it Solana versus Ethereum. Obviously, it's been Ethereum heavy for many years, but lately, over 30 days, Ethereum is 52% of transactions, Solana 48%, and over 24 hours, it's now Ethereum 37%, Solana 63%. So it seems like larger institutions, when they want to move liquidity, are using Solana over Ethereum. Do you have any evidence of that? What is your take on that?
Yes, I think in terms of payment infrastructure providers, over the past couple months to upwards of a year, we are seeing a good amount of increased activity using the L1 as a very, very cheap payment rails platform, of which that doesn't really fragment the liquidity via an L2 network. I mean, stablecoin market cap continues to increase. I think the lull in the market over the past couple weeks and we are seeing that through some metrics, has really just flushed any leverage that was in the system. Our read right now is that there is very, very almost no leverage that's left in the system. However, adoption and stablecoin market caps has not decreased or topped out relative to our estimates of leverage in the system. If you look at spot financing rates, whether that's on Camino or on Jupe Blend or on Drift, we're at low single digits at this point. And so that's a combination of increased supply on the lending side, which is very positive, as well as, in a somewhat unfortunate sense, a lowering amount or a lack of demand for margining or borrowing that lending supply. I think earlier in 2025, Solana stable yields, I think we usually saw were trading at about 200 to 300 basis points higher than EVM yields. There was a demand, some cross-chain arbitrage to some extent between EVM stablecoin financing rates and SVM stablecoin financing rates. And that's, somewhat compressed. But in terms of where we're looking for leverage indicators, both with spot margin rates as well as where funding rates are right now, it seems like the market has really removed any leverage in the system. But the positive thing being, it's not that liquidity is also reducing at the same rate as that leverage is.
Maybe just before we end, let's just jump onto your website so people in the audience can get familiar with Gauntlet. I think we've run over a little bit, and let's talk about your product a little bit. So if you go to app.gauntlet.xyz, correct? So do you have like delta neutral strategies that people can participate in that will give them exposure to up and down markets like we've just had and have remained profitable during the downturn? Do you have such products? And then maybe you can talk about what is the difference in your alpha, your balanced, and your prime products?
Yes. So we have a suite of products. If you hop onto our Gauntlet application page, we have a protocol within the organization that we call ERA. ERA is currently EVM, but there are plans in the upcoming future to become cross-chain in terms of yield sources. We utilize, as I mentioned earlier, lending primitives. So we are fairly active on Morpho on the EVM side, on Camino on the SVM side. And our risk composition is largely across three different buckets: prime markets, which is higher liquidity, larger market cap collateral, things like Solana, Ethereum, Wrap Bitcoin, and lending USDC out to borrowers who will margin or collateralize their loans with those assets. Core markets are, or balanced markets, sit somewhere in between in the middle, where we are lending out to lower market cap, but still deemed safe assets that are being used as collateral. And then frontier markets, we've started to onboard more RWA token, things like lending to brokerage desks such as Falcon X that are paying enhanced yield essentially for longer duration loans. And then on the Solana side, as I mentioned, drift vaults is where there's a handful of delta neutral strategies that we have researched and are evolving and maintaining. A lot of that is using JLP exposure, basically accruing the spot yield through JLP trading fees and borrow rates, and then using Drift's futures markets to hedge out that delta, really with the expectation that price decoupling and downside risk is managed, and that whether the market is going up or down, expecting that that's throwing off a higher spread than the current lending rate. We also offer what we call overlay vaults. And so if you hold an asset like Solana, but you are still looking for yield ideally above the staking rate, what we essentially do is we take our delta neutral strategies and we take the deposit or the numeraire token. If we use SOL as an example, we take that SOL, we borrow USDC and finance spot exposure, and then deploy that USDC into a delta neutral strategy. And so we are using basically the base asset to fund an overlay, and with the expectation and goal of beating some hurdle rate like a native staking rate, and allowing users that still may want to hold on to some beta exposure, whether that's Bitcoin, Solana, or another risky asset, and overlaying enhanced delta neutral yield on top of that exposure.
Fantastic. Everyone, we've got Nick Dukoff in the crowd. Nick, are you there?
Hey there.
There we go. Nick is here. He's from Solana Foundation. He's head of institutional growth. Nick, just hold on one sec. We're just going to wrap up with Gauntlet and then we'll jump into your session. Appreciate your time. So the Gauntlet vaults, for a new user in the audience, I mean, we had neutral trade yesterday, so we've kind of gone through this kind of explaining in sort of basic terms for new users who might be interested in using these products. How would you recommend they go about just getting their feet wet? Do you guys connect directly to a Solana wallet or Ethereum wallet? And then is it purely DeFi or is it custodial where they have to sort of fund an account like a typical hedge fund or prop trading fund? How do they actually initiate it? How do they choose? And what would you think would be the best one of your products just for people to get a feeling for the product?
Sure. So currently EVM-based vaults, those would be and vaults facilitated through the Air protocol. The Gauntlet application, I believe, is an entry point for depositing. So this is also self-custodied exposure. At the end of the day, there's no need for signing up for some internal or centralized account that needs to be funded. On the Camino side and on the Drift side, those entry points would be on the protocol application pages themselves. And then I think to answer the second question, I think it really comes down to understanding, from a user standpoint, what your risk profile is. And what I mean by that is we run 3 different vintages of the Delta Neutral HJLP strategy. We run it at 1x leverage, we run it at 2x leverage, and we also run it at 3x leverage. And so that's going to target different volatility exposure, somewhere on the order of maybe 3 to 5%, 5 to 7%, and somewhere closer to maybe 10 or north of 10%.
Perfect.
And so, well, I won't say there's, maybe one best vault. I think it comes back to what is your risk appetite? And, really kind of from the core principle that risk drives yield or drives return, but still ensuring that we are not providing outsized volatility in a way that you might be exposed to if you were directionally trading. So still trying to say I would say equity volatility, macro equity volatility, depending on the user's risk appetite, we do have varying vintages folks can utilize.
One thing I'd recommend just for users, just based on my experience in the crypto space, what might be interesting is to have a cover page which has like just a basic slider, like a risk slider. The user can put it to the far left, and it will be the lowest risk, have some kind of metrics, and then slide it to the right or to the maximum, which would be the highest risk. And then you could internally manage that based on your products to kind of obfuscate some of the complexity. I think having something like that would draw a lot of adoption.
Yes, I like that idea a lot. We'll definitely take that back and speak with our product team.
And we really appreciate your
great
time.
recommendation.
Perp Jesus, what a handle. I appreciate your time, and let's make a space in the future just with Gauntlet and learn more at a deeper level and get more of an institutional investor crowd in. I've definitely got some ideas. Maybe have neutral traders at the same time, and we can make sort of a community industry space on a monthly or a quarterly where we discuss this stuff and try and draw a crowd of people that might be power users, etc. But
yes,
we really
sure.
yeah, absolutely. It's terrific stuff.
We got Mr. Nick Dukoff on. For those who don't know, Nick leads institutional growth at the Solana Foundation, supporting anything and everything from real-world asset tokenization efforts to capital markets. I've known Nick for just a few months now, but have always enjoyed hearing his perspective on the latest institutional developments in the Solana ecosystem, and just incredibly excited to have him on. So welcome, Nick. Let's start with a little bit on you, your background, what exactly your role is at the Solana Foundation, and maybe how you got into crypto more broadly.
Sure. So I started my career as a securities lawyer in the early 2000s, working on some of the bigger deals after the .com bust. So I worked on things like the MySpace acquisition by Fox in 2006, and, was very interested in entrepreneurship. But I thought it was important to hone my skills as a lawyer, kind of do the Malcolm Gladwell 10,000 hours thing. And so I did that for a little over 4 years, and then left to start a company in the cloud computing space. We sold that company to a public company in 2014. And that's actually when I started getting into crypto. My co-founders of that business ended up starting Unchained Capital, which is multi-sig custody for Bitcoin. I was an early angel investor in the company and, messing around some Bitcoin at the time. But it was really Ethereum, which had the mint the following year in 2015, which really kind of opened my eyes as a technologist, as a smart contract blockchain. That was really much more interesting to me than Bitcoin. And that kind of put me down the crypto path, but I stayed in more traditional software venture capital land until 2021 end of the year, which is when I went full time into crypto, and have been in crypto since, first as a VC, and then I joined the Solana Foundation in the summer of 2023.
It's always interesting getting the perspective of someone who's had such like a diverse range of experiences, but who came from tech or more traditional background first. I'm curious, what was maybe your first like intro or first moment seeing Solana itself in action? Like what actually got you into the Solana ecosystem?
For sure. So a friend of mine, Joey Roth, he's got a lot of various projects going, but he had an NFT project on Solana in early 2021. And he was like, hey, I want to, send you one of the Genesis, one of my Genesis NFTs on Solana. And I hadn't really spent much time on Solana yet. So I fired up a wallet and he sent me the NFT and I started messing around, trading tokens on Solana. And it was just like abundantly clear to me almost instantaneously, this was a chain that felt more like the internet, not like a blockchain. Like Ethereum, I love Ethereum, but it's a blockchain. Solana just feels like the internet. And that was really eye-opening. And that's when I really started leaning into the Solana ecosystem.
Yeah, it's fascinating because I've described my first experience of the Solana wallet similarly. I had a friend and we were just doing a transaction. Like I sold him a bike and he sent me some Sol. And I just remember going through that and thinking to myself, like, this is exactly what I wanted Ethereum to feel like, but it never really got there. And it was just this like really magical experience, for lack of a better phrase. I'm curious, for those in the audience who may not actually know, just it'd be helpful to walk through what exactly the Solana Foundation does and what the difference is between labs, the rest of the ecosystem, and just clearly lay that out for folks.
Sure. So there's a few entities that, either have the word Solana in it or related. I think people often get them confused. So I'm glad you asked the question. Solana blockchain was built by Solana Labs, totally Raj and the team there. They were based in California. It was a US company. They did a token genesis event, of course, which sold the token. And they gave 20%, I believe, of the token supply to create the Solana Foundation, which is where I work, a Swiss nonprofit tasked with the mission of supporting the growth of the Solana ecosystem. And I think that is like a very broad mandate, and it has meaned different things at different stages of where the Solana community and ecosystem is at. So there's Solana Labs, there's Solana Foundation, and then there's Anza, which is the builder and maintainer of the Agave validator client, which was formerly known as the Solana Labs validator client. They also work with others building independent validator clients, like the Jump team building Firedancer. And those are the three entities. Solana Labs and Solana Foundation have no direct relationship other than the fact that Raj is a director of the Solana Foundation, and the Solana Foundation was created with a gift from Solana Labs. One of the things we talk about internally a lot is the Solana Foundation is actually, among pretty much the only folks on earth that got their Sol without taking risk. And so we were given it as a gift. And so we take a great deal of responsibility for it. This is why I think historically, especially compared to, some other foundations out there, we're very small. We're only 60 some odd people. We tend to be very thoughtful with how we spend the Sol that we have, because we really want to be here forever to support the Solana ecosystem in whatever way it needs at whatever time it is.
Yeah, super helpful overview. In the words of Ben Parker, with great power, in this case, great Sol, comes great responsibility. You guys have obviously been fantastic stewards for the ecosystem more broadly. But let's double click into that. The exact phrase you used was supporting the growth of the Solana ecosystem, which, as you said, is just a pretty broad mandate. I'm curious how you guys evaluate success criteria for the Solana Foundation. Like, what are you looking to accomplish over the next 3 years? And maybe 3 years from now, what would be a great scenario for you guys in terms of evaluating success?
Well, so there's relative success and absolute success. I think we take, as a result of our balance sheet and mission, take a very long-term view. And the long-term view, of course, is to win internet capital markets. And internet capital markets is the idea that on the one hand, all global investors, on the other hand, all global assets can trade harmoniously in a single liquidity venue at the speed of light at virtually zero costs 24/7. And I think the data supports something like 80 to 100 million monthly active wallets on Solana. That's like 1.5 to 2% of all global internet users. Obviously, it's not necessarily one wallet to one person, but even if you discount it and say that's 1% of internet users, we've got a lot of wood to chop. So how do we know we get there? Well, we've got 99% more on the all global investors meter. And then as far as all assets go, I think, we are pretty unique in that view. People ask me all the time, like, why did you support Monad's launch on Solana? We want all assets on Earth to trade on Solana in the same venue. That's the stated vision, and that's our mission.
Yeah, very helpful. Marty, Ted, anyone
Hey,
have any
Nick, how are you
questions
doing?
before I
We've
pivot?
had Nick before. Nick, nice to see you again. It's been, what, a year? When did we have your space? It was like a year ago, right?
Certainly in crypto time, it's been a year for sure.
Yeah,
That might have been a week.
I've been watching closely, sir, and you're doing a fantastic job. I wanted to just touch on some, overlying Solana type things. I monitor stablecoin like religiously. I've built a whole bunch of AI tools that do it for me using my engineering team. And I've noted that it looks like the uptick in Circle issuing USDC on Solana has really increased in starting this year. Is that something that you guys have been pushing? It appears as if it's now on a 24-hour rate being used by large institutional transfers more than Ethereum.
I think we definitely are focused on growing stablecoins on Solana. I don't know that we pick a favorite. We love Circle, we love Tether, we love Paxos and USDG, we love PayPal and PYUSD and many others on the network. Last year, I think we grew from like 4 to 15 billion stablecoins on the network, had something like $1 trillion of stablecoin transaction volume, and are trying to get to 100 billion in stablecoins at Solana this year. So that'd be like 7x growth, which I think is achievable.
7 to 8 growth, right?
Yeah, yep. Ambitious but achievable. And yeah, so I think I did see a chart today. I didn't validate the underlying data, but that Solana, I think, has seen among, if not, either the number one or number two most net inflows year to date. I think us and Tron and Ethereum mainnet has seen the most net outflows. We've seen something like 2+ billion net inflows, and Ethereum's had like 7 or 8 billion net outflows.
And then something we touched on before that I'd love you to reiterate. So when you're approaching institutional investors or institutional clients in the name of adoption, is there still headwinds in Solana being considered sort of the meme chain and those types of narratives? Or have you seen, since we've spoken, more of an acceptance that Solana is internet capital market here to stay, built for speed and all the cost advantages? Can you tell us from your own perspective as an institutional salesperson, what is the sales pitch doing right now? How's it going? Is there friction? Has the narrative changed? Where is Solana in the institutional mind space?
Well, it's a growing mind share, that's for sure, which is great. I think the objections have changed over time. When I first started the foundation, coming on 3 years ago, the last outage was 2 years ago or something like that. Knock on wood, may we never see another. But the objection back when I started was, the outages, and that certainly made things more challenging in the institutional context. I think the core devs and the broader engineering ecosystem has really helped harden Solana, and I think it's truly institutional grade. And I think today most folks see it as such, and so we get that objection much less than we did when I first started. Then the success of meme coins, Pump.fun, and of course the Trump token last January 2025, people would say, oh, well, Solana primarily retail, primarily meme coins, not a serious chain, not serious assets. We actually think a very different view of that, which was, hey, Solana has more users and more DEX trading than any other blockchain. It doesn't really matter what the asset is. People are putting capital at risk, and people are proving that the network can handle both the volume of transactions and dollar volume of value better than anyone else. And I think that that narrative actually really worked, and institutions did see how that translated. And now I think increasingly people do view Solana and Ethereum as peers for institutional usage of blockchain. And we're now at something like 1.6 billion RWA on Solana. That's up almost 9x year over year. We were at like 170 million this time last year. I think you're really starting to see it in the data, and that puts us at like number 2, I think, or 3 behind Ethereum, and maybe right around BNB chain as the top RWA chains.
That's a great segue. I think the rise of Solana in RWA is impressive. I watched that as well. What asset classes do you think, when we look at like the Larry Fink tokenize everything hypothesis, what kinds of asset classes are you seeing most interest in? Is it tokenized securities, treasuries, private credit, real estate, equities? So like, what do you think is the next big asset class? And do you think it relies, I mean, this is also a great segue. Maybe you can talk on this. We had Kristen Smith from the Policy Institute yesterday. Do you think a lot of this pivots on market structure and regulation? And do you think you could talk a little bit about what do you think post-Trump signing such a bill would do for your particular domain? Do you think institutions would be more open to tokenization, volumes, investing, etc.?
Sure. So I think there's a few categories that are particularly interesting, though. As I mentioned, the vision of internet capital markets is all global investors, all global assets, same venue at NASDAQ speed, zero cost, 24/7. All assets means all assets. But I would say where there's product market fit today is in a few buckets. One bucket is yield assets that are fairly liquid and low risk. And so this is like why money funds, AAA CLOs, things of this nature have found, I think, pretty clear product market fit on chain. Then another bucket is like higher yield, a little less liquid assets that can be looped. This is like private credit. And I think we've seen a lot of interest in that part of the market. And then the third bucket is tokenized equities. I think this is where we're going to see just an explosion of growth over the next few years, with players like NYSE and DTCC and others saying that they're going to be coming into that space. On Solana today, you've got Ondo Global Markets, you've got Kraken X stocks, you've got Remora, others tokenizing equities as well. And so we're already making headway there, but have a lot further to go.
Nick, I'm curious on the tokenized equities front. I mean, I think a lot of the pitch on tokenized equities obviously starts with the idea of greater accessibility, right? The idea that you don't have to go through an intermediary. Anyone with an internet connection can now trade their favorite stocks, etc. But from an institutional perspective, right, if you're Citadel or Millennium and your centralized infrastructure works just fine, you don't have accessibility issues, etc. What makes institutions uniquely interested in tokenized equities based off the conversations you're having?
Yeah, I mean, I think it goes back to the vision of internet capital markets, all global investors. So I'll just give you an example. Right now in Pakistan, there's 300,000 people with a brokerage account and 40 million with a crypto wallet. And so when you're Citadel, you want somebody on the other side of your trade, and you want as many people as possible to create as much liquidity and vol as possible. And so I think the promise of tokenized equities on a blockchain like Solana is really bringing, way more investors to the market, 24/7, investors of all different shapes and sizes. And I think someone like a Citadel ultimately, probably benefits from that.
Yeah, interesting. Marty, go ahead.
Yeah, Nick, maybe you could just give us your feeling on the market structure and clarity and its effect on institutional adoption.
I think obviously we'd love to see it passed. It seems like, Coinbase, has some pretty strong opinions on some aspects of it. Obviously, some of the banks have some strong opinions on it. I think it's a difficult path to getting passed, but I think it would be great if it gets passed and would be an upside surprise. I think one of your questions around it was what happens if Clarity Act gets passed. I don't know what the betting market's odds are today, but I think it would be an upside surprise. So I do think you'd see some flow come to crypto if that happens. And As far as institutions are concerned, they really need pretty clear, bright lines as to what they can and cannot do. The Trump administration has done some really great things to clarify what is no longer impermissible. Like obviously under Gensler's SEC, nothing was permissible. Everything was in a security. Genius Act was passed, which still rules need to be made around a lot of what that legislation permits. I think clarity will go further into providing those clear rules of the road that institutions really need, at least domestically here in the US. And so I do think you'll see even more institutions coming on after clarity, though everyone I think is already very much moving fast post-Genius.
I saw recently your post about the Citi Bill of Exchange, right? The Citibank Bill of
Yes.
Exchange, the full life cycle on Solana. I think that is very insane. I'd love you to explain step by step, what exactly does that mean? Tell the audience exactly what that means and why it's so significant.
We've seen a couple use cases of on-chain, on Solana corporate debt by large, globally, systematically important banks, the GSIBs. JP Morgan in December executed a commercial paper trade, $50 million on Solana. The issuer was Galaxy. The buyers were Coinbase Asset Management, Franklin Templeton, and JP tokenized and led the sale of that commercial paper. And then Citi just announced, and they had kind of indicated that they were investigating Solana at Breakpoint 2024 in Singapore. And now it's public what they have been working on, which is on-chain trade finance. So today, if you want to borrow, if you're a corporate treasurer and you want to borrow from JP or Citi or your bank, you call up your banker, they put some paperwork together, you may negotiate it, have your lawyers review it, they fund it, and then you've got the loan that you need to repay, and then it's repaid. And this is like multi-step, a lot of paper. Now on chain, click, 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 you can run the full life cycle on Solana. I think what Citi has done is really innovative. They did this in partnership with PwC, which is mentioned in the paper. And I think it's the beginning of what could be really exciting use case. In these two examples, trade finance and commercial paper, I mean, these are enormous markets that these large banks can bring on chain. And it's very exciting that they would choose to do it on Solana.
Absolutely. Another question I wanted, since we spoke last, and the advent of Firedancer and all those initiatives to reduce latency, institutions must clearly care deeply about uptime. Obviously, we spoke about that. That problem seems to have been solved with the multi-clients. I think we now have 6 clients on Solana when we used to have 1. We've had them all here on the conference, actually, so everyone should be intimate now with them. Jito, etc., Agave, Firedancer, Harmonic, now new block builder, etc. They care about uptime. They care about finality, especially for internet capital markets, finality and deterministic performance. So how has the communication improved? Do you have more positive input from the advent of Firedancer, the speed of finality? And does that differentiate Solana still, as we always thought it would, as an L1 and possibly as a future NASDAQ? How has the performance and the evolution of the actual software evolved since we spoke last, as far as institutional understanding?
So I think you're talking about a couple different things. One is obviously the validator clients, and then the other is the consensus mechanism. So Alpenglow, which is an update to the proof of stake, proof of history consensus mechanism, splits voting and non-voting transactions, reduces the cost to participate as a validator in the network, and decreases settlement from 400 or so milliseconds to 150 milliseconds. That's very important because it crosses a key threshold, which is 200 milliseconds, which is what the human eye sees as instantaneous. So you're going to have Solana in the very near future be able to trade as fast as the human eye can see. And that's very exciting. Then on the resilience and throughput side, you've got the various validator clients that are being developed, including the Firedancer one by Jump that you mentioned. This, of course, leads to resilience and redundancy in the network, which is very, very important, and also increases theoretical throughput from 100,000 TPS to 1 million TPS. I think we're now averaging like 4,000 plus TPS actual day to day. So if you think about current capacity of usage today, there's still like 20, 25 times capacity on average that Solana network could handle today without FireDancer, but with FireDancer, that increases it pretty radically. I think the view is, when you create something capable of that kind of throughput, you'll get novel use cases that we haven't even seen or thought of. And that will bring more utilization of the network. And by the way, the network has, even amidst this kind of crypto bear market, has been going up and to the right. We were doing 100, 120 million daily transactions on the network a couple months ago. Now I think there's like 150 million plus routinely. So people are using the network.
Absolutely. And the last thing, since we spoke last, there were no Solana spot ETFs. Has the approval of spot ETFs influenced the regulatory environment, do you think? And did institutions issuing spot ETFs and treasury companies and accumulating Solana as a treasury, do you think that's influenced and made your job easier? And do you think it's pushed regulatory acceptance and part of the push to have clarity? What do you think drives? What is the cart and what is the horse?
Yeah, so last fall, around right before Thanksgiving, Bitwise BSTOL was the first of the spot staking ETFs to be approved. That was during the government shutdown. They were very clever and got their product listed on the New York Stock Exchange, and it's done phenomenally well. A number of issuers followed: Grayscale, Fidelity, VanEck, Franklin Templeton, Invesco, and others. So now you've got a lot of great financial institutions and crypto native asset managers that have Solana ETFs in market. These are just now beginning to be sold in the wealth channel. When you think about like who's buying these ETFs, I think it was announced publicly just yesterday that Goldman has bought 108 million. It's institutions, it's endowments, it's pensions, it's family offices, it's high net worth individuals. And yes, some of those may have previously, bought spot SOL via crypto exchanges, or, maybe even on-ramped and bought it on chain. But this really makes it much easier for regulated institutions, more risk-averse institutions, and in the wealth channel where people, are talking to their wealth advisor, has made it just radically easier for people to buy. And I think there's been, around $1 billion of net inflows notional into those products in the past couple months. And it's just the beginning. So I think it's very, very exciting. As to how that influences regulatory, if at all, I'm not sure that it really does, but it certainly puts Solana in the conversation, because I think, you got Bitcoin with Ethereum and Solana that have the most issuers with those products out in the market, educating their customers about Solana, which is a huge deal. I mean, when you've got folks like Fidelity that now have a vested interest in, kind of educating their customer base about Solana, I think that only does good things for the ecosystem.
That's excellent. And then Nick, a little bit about like future outlooks. I'd love to hear your personal opinion. So you've described Solana, Lactoli, etc., as internet capital markets, or the venue for internet capital markets. And I would say that, in my opinion, that requires 24/7 trading. Okay, check mark. Atomic settlement at low latency and high settlement times, check mark with the Help and Go. Regulatory clarity, check mark with the Clarity Act. Institutional adoption, check mark. ETFs, treasury companies, global access, check mark. What do you think is the end state like financial system in your head, Nick Dukoff? What do you see? How long do you think it'll take? And are we on track?
Well, so I think the thing that's still missing maybe is like one or more front ends that are kind of universally adopted. So, and there are companies that are making some headway here, Phantom and Jupiter, et cetera. I think we need more builders who have just made it insanely easy for users to buy assets and then trade those assets. Cut out a lot of the cruft from some of these apps and just make insanely simple and insanely slick front ends for Solana. I'm sure there are builders, probably even builders listening in on this call today, that are working on this, and we support you. I would love to see you grow your applications, because ultimately that's how we're going to get from 80 to 100 million monthly, 800 million to a billion monthly.
Yeah, I mean, we had Jito on and they mentioned Phoenix. Do you know Ellipsis Labs?
Yep, this is the Perps exchange.
Exactly. They're just a fantastic team and they're apparently building what they call Phoenix, Solana's on-chain perp app, kind of hyperliquid killer. Still completely no access if you go to their website, but apparently this is like the thing. So I don't know, maybe I'll send you a DM and maybe you want to contact Ellipsis and see what they're doing. But I think that, yeah, I'm bullish on that one. I just like the way they're rolling it out, super secretive, apparently working very closely with Agave and Jito. So they're really trying to nail this down. What about the Solana Seeker phone? Do you see that institutionally as some kind of something in your arsenal? Do institutions even care about the mobile side of Solana?
You know what? It actually comes up a lot, surprisingly. And I do want to go back to one of the first questions.
Sure, go ahead.
Solana Labs builds the Seeker phone. It has nothing to do with Solana Foundation. Just want to clarify that. Related to the Seeker phone, again, that's Solana Labs, has nothing to do with the Solana Foundation. I mean, and it brings it and makes it real. And I think obviously the future of everything is mobile, right? And so to have someone like Toli who, had this vision from the beginning, came from Qualcomm, is pushing the industry forward, and Solana being a key part of that as to how crypto will be used on mobile phones around the world. I think that's really cool. And, it does come up because the key decision makers at a lot of these large financial institutions also need to have kind of their own view of Solana and Solana's place in the market. Many have bought a Seeker phone themselves and use it. And, the feedback has been overwhelmingly positive.
I mean, personally, I've been using a Saga phone since day one with a Stables.money virtual Visa card with Android Pay and Apple Pay on my phone. And I've been living on stablecoin on Solana for 3 years. So
Love it.
if anybody ever wants to know, like that dumb question, is crypto usable? Just send them to me, Nick. I'll tell them. Another question I had for you was, if you had to pick one non-obvious use case that Solana will dominate the next few years, like what do you think that'll be? Like we may not see it coming, like agentic finance with this X402 protocol, tokenized equity, maybe digital ID, on-chain settlement. Like what do you, Nick, can you share any alpha? Like is there something we're not aware of, some narrative coming along that Solana is interested in?
I think the thing that makes Solana so special, one of the many things that makes Solana so special, is that the vision has remained pretty unchanged. Yes, we've come up with a name for it, Internet Capital Markets. I think Akshay is credited with that from on-chain NASDAQ, which was how Toli framed it when he started Solana. But the vision, I think, has largely remained unchanged. And I think we're making incredible progress, still a long way to go. But the network is compounding, and there is a flywheel component to this, because going back to the idea of all global investors, all global assets, the more assets we have, the more attractive it makes it for more investors to come trade on Solana. And then the more investors there are trading on Solana, the more attractive it makes it for more asset issuers to bring their assets onto Solana. And I think you're really starting to see this happen more organically. And I think people vastly underestimate how hard it was to get here. Not to say we don't have a long way to go. We do, a long way to go to get to the end game. But, you hear folks talking about like all these new chains, Arc, Tempo. Just yesterday, Layer Zero came out with one. None of these chains are even live yet. They don't even have a single transaction to their name. And now you've got Solana, where you've got millions of people around the world, thousands of new assets being added every day. And I think this is really a flywheel that is compounding organically. And they say compound interest is the eighth wonder of the world.
And then finally, let's not forget DoubleZero. I think I'm a big Austin Federa fan. He's coming on the show later today. I think that is yet another thing in the arsenal that nobody else has. I think very few people, and I'm sure most institutional people, have no idea that internet capital markets or any kind of global 200 millisecond settlement app is possible on the current public internet. And the solution by Austin, this DoubleZero private network, makes it all feasible. And it's a Solana thing. Is that something that comes up in institutional conversations? How do you feel about it? Are you close with Austin?
I am close with Austin. We work together at the foundation. I saw him a couple weeks ago. I think it's great what they're doing. I think it's just another example among many of when, we used to have this kind of fat thesis at Solana, founders, applications, tokens, and, making sure that we continue to attract great founders like Austin that are building great, important applications like DoubleZero, issuing those tokens on the Solana network, like the DZ token. I think that's absolutely squarely in the bullseye of what we are seeking to do and support at the Solana Foundation. And there are thankfully thousands of people like Austin in the ecosystem building great applications and launching tokens.
Terrific. And then before we wrap up, I saw you are on Trade Talks, right?
With Jill?
Yeah. Are you planning to do that more regularly? I really enjoyed your spot. Tell us, are you guys getting more publicity? Are you going to be more on the mainstream news, Bloomberg? Is there anything?
I think I saw Lily on Bloomberg today. People should go find
Yes,
that.
I actually played it for everyone. Lily was on Bloomberg today.
Lily is just the best. Definitely, she's just so great and articulate. Has such
She gave Wall Street the nice tagline you guys have been
Yeah,
saying.
she
Like,
gave-
Bitcoin is the asset, Solana is the infrastructure.
There we go. That's the tagline. She nailed it. Then I also saw I saw On the Road Internet Capital Market podcast, right? With Robinson, also being on the space, a friend of ours. And Visa's, it was Catherine, I believe, from Visa, right?
Catherine actually joined the Solana Foundation last month, added some key talent to the Solana Foundation, and she's leading digital asset product. Has some very exciting things cooking, so stay tuned.
Nick, I've got a few parting questions for you, if you don't mind. The first actually is maybe going back to some of your institutional combos, which is I've found, at least in my role at DFDV, there's sort of like two sides to the equation when explaining to institutions. One is explaining Solana, the technology, the infrastructure, what it does, what's being built on it, etc. And the second, from an institutional allocator perspective, is thinking about how Sol actually fits in a broader portfolio. And pushback I often get is like, well, Sol is pretty volatile, just, it's beta to Bitcoin, etc. in the broader context of my portfolio. I'm curious how your conversations have been on this front and maybe what some of your key areas of pushback are on that.
I think people increasingly get the story. I mean, if you look at the metrics, Solana on all key metrics is up and to the right, developers, transactions, volumes, stable coins, RWA. I mean, pick your favorite KPI and Solana probably is up and to the right on it. I think when you couple that with the staking reward rate of Sol, the asset, it's a pretty compelling story where you've got both high growth and high yield. And there are very few assets on the planet that are both high growth and high yield. And I think that's the story. I think that's how a lot of these asset managers are selling the ETF. And I think it's a story that's pretty easy to grok.
We're in the middle of working on a relatively new valuation framework for thinking about Sol from an investment standpoint. Obviously, would love to share that with you once it's ready, get your feedback and your reactions. One of the things that stood out to me was actually looking at, we're trying to compare Solana to the digital networks that I think a lot of tech investors are familiar with today. So whether you look at Snap or Meta or Roblox and look at the, I'm going to call it like average revenue per daily active user in quotation marks, right? Or look at the fees developed by Solana per daily active user, daily transacting user on the network. And Solana's somewhere around like 8x the magnitude of Meta if you actually did the math, which has been eye-opening for a lot of investors that we've spoken with.
Yeah, we've always, I think, believed that, it should be FANGs and the S is Solana.
Yeah, Nick, I mean, it's quite interesting. We did the math yesterday. If you take the total amount of stable coins issued on Solana, if you take the total value of tokens on Solana, it comes to 46 billion. If you look at the market cap of Solana today, it's 45 billion. Isn't that interesting?
Zooming out, going back to what I was saying, if you look at all the metrics, they're up and to the right, all of them, like hard to find a metric where it's not pretty exciting, that paints a pretty exciting picture for Solana. And then, of course, the price metric is down. I think a pretty clear picture emerges when you overlay Solana KPIs and price.
Another question I had before you go that I think is really important for you to discuss is, I've been having this pretty much ending most of the talks with this, is during these downturns in the market where the dollar price of the token, which is so a complete different closed loop to the blockchains itself, does it affect people's opinion of the technology and the software? Does it affect people's view of the future? Does it affect the conversations you have? Or are people understanding that this is software, it's got its own life cycle, it's only improving, and the dollar prices are completely in another world on the financial markets, decoupled, burdened with regulation and manipulation and whatever you want? Is there that separation, or do you still find that, these downturns, sentiment goes low and your job gets much harder?
Marty, you're a smart guy. I've always loved following you on X, and I think you post a lot of thoughtful things, and you've got some wisdom. And, the idea is to buy low, sell high, right?
Yes, sir.
At the very least, if you get the buy low right, you're in pretty good shape. And if I think about, we're not even barely 3 months. I don't think it's been 3 full months or just about since the Sol ETFs came out. Only $1 billion or so of flow has come. The wealth channel's barely been activated yet. And so if I think about, the next billion of inflows, they're going to have a basis under $100 in Sol. I think these are going to be very happy people. And I think they're going to tell everybody they know that they're happy people. They're going to feel very smart, which is always a good feeling to have. How many people do you know that say, oh, I bought Sol at 8 or 10, after FTX, and then they love Sol forever, right? And I think you've got a moment like that right now where you're going to have billions of dollars coming into these products, and of course the spot as well at, double-digit price. And I think hopefully that ends very well for them, and that creates a whole new class of Solana super fans.
There we go. That is about as bullish as it gets. Any final thoughts and questions? DK, you want to wrap it up? We've got 8
I have a
minutes.
last one.
Yeah,
Well,
go.
let's fast forward to 2030. What does Solana look like to you?
We've got this vision for internet capital markets, all global investors, all global assets, single liquidity venue, 24/7, super fast, super cheap. I think we've made over the next few years more headway towards that. I like to think that there are 1 billion users on Solana. I think it's quite possible. Is there hundreds of billions to trillions of assets on Solana? I think for sure.
Nick, one final question before you go. We've recently realized, like everybody, like Jack Mallers or any Bitcoin maxi or even Michael Saylor, Jim Cramer, that Bitcoin has been tracking BlackRock's IGV or
Yep.
S&P software ETFs almost exactly right through what we thought was a crypto bear market, no differently. And now we see in October the 10/10 event, and now we realize actually Microsoft also dropped 30%, so did all software. It wasn't crypto specific, it was just large institutional traders trading it as a software stock. What's your thought on that? Do you think that that's something that resonates right now? Do you agree with it? Do you think it changes? Do you think we eventually decouple? Or are we just a software stock?
I mean, Solana is pretty highly correlated to Bitcoin with a beta, right? So it's like Bitcoin on steroids in either direction. Recently that direction has been down. It does the same thing on its way up. So if you think we're close to the bottom, you want something that's correlated with a high beta on the way up.
There you go.
I've always had this view. I mean, we were talking about this earlier today that, AI agents are going to need to send, millions and millions of transactions at any given moment, and there's really only one chain that can handle that basically without blinking an eye. It feels like at some point the sentiment on software will turn, and probably the sentiment on crypto, when folks realize that AI and crypto very much need each other, and at least Solana feels the best position to capture the majority of that growth going forward.
I mean, listen, you got the whole industry is smaller than NVIDIA.
Yeah. Yeah, that's good framing.
There we go. Okay, Nick, I think that's about it. Anyone got any questions in the group here? Wes, Ted, anybody out there?
No, I'll keep it short and appreciate his time and respect his time. Thank you for everything you're doing for the Solana ecosystem. And I'll add that we still don't know how X Money might incorporate Solana. And we know that Solana is already the payment rail, the institutional rail, the everything rail. So as we can speculate, maybe X Money could be a catalyst. But yeah, thanks for your time, Nick.
I'll introduce myself real quick and then pass it along. So for those who are joining us just now, I am DK. I am the Chief Strategy Officer of DeFi Development Corp. You're the very first non-BTC DAT, the very first DAT to kick off our treasury here in the United States, and actually the top performing crypto stock of 2025, sitting on roughly 2.2 million SOL today. Founded by a team of all former Kraken Crypto Exchange employees, including our very own Joseph Onorati, CEO of DeFi Dev Corp, who I will allow to introduce himself right now.
Hey, thanks, TK. Appreciate it. Your radio voice continues.
I've been working on it. I actually have an AI like filtered microphone here. It's not
I'm
my real
highly
voice.
impressed. I think you have a future in this game.
That's clear. Anyway, thanks for having me. Like you said, Joseph at DFDV here. Well, I think we'll probably get into a lot of background stories here in a minute because y'all are about to embarrass me, I think.
100%. The whole point is to try to take you to max embarrassment over here. Let's see how far we can go.
All right, let's get into it.
Oh, well, hold on. We have Pete Humiston as well, who decided to join as a speaker. So I don't know if he's able to speak right now, or if he's out of commission still. I know he was out for a bit, but Pete, you there?
Yeah, I'm here. Thanks. Yeah, no, I got a deviated septum surgery abruptly yesterday, so I'm good to go today. Still trying to recover a bit, but yeah, in the house. Pete Humiston, CMO at DFDV. Like DK alluded to, I started my career at least in crypto at Kraken, and then bounced around the space for quite a while before begging Joseph to hire me. He actually hired me at Kraken. He was my gateway into crypto, so I'm forever thankful for that opportunity and this one here too. And then yeah, I come from the TradFi world. I worked at Jefferies in sales and trading, and funny enough, DK was actually a client of mine. So it's funny, some 8 years later, we're working together as opposed to me trying to convince him to consume our resources and go out and spend a bunch of money on drinks and fancy dinners.
For those who don't know, Pete actually pitched me NVIDIA back in like 2017 or something, before it was like the most consensus long on the planet. He was super early on that one. And I don't think he imagined that it was going to take off the way that it did because of AI, but thesis was still more or less sound. And had I listened, I would have made generational wealth. So shame on me.
Yeah, should have full ported my portfolio into NVIDIA myself.
Yes.
Crypto did that, so whatever. It all worked out anyway.
And
don't worry, guys. Plenty of opportunities for generational wealth.
True. And I'll do one thing to embarrass Pete here, because I'm going to spend the rest of the time embarrassing Joseph. For those who don't know, Pete is actually our bodyguard here at DFDV, because the dude is a trained fighter and yoked out of his mind. It's like if you took Stone Cold Steve Austin, fused him with The Rock, and that's Pete Humiston for you. All right, let's get into this. Joseph, you ready?
Yep.
Let's do this. So, look, point of this Winter War Stories session is to get into the good, the bad, the ugly, everything that you've seen given your rich history in crypto. I think it's funny. A lot of folks talk to me in my inner circle, and they're like, Dan, you've been in crypto for a long time, like more or less since 2017. I'm like, that's not that long, actually. There are people who go way, way back, and you certainly fall into that category, Joseph. So take us back to the beginning. How did you first discover Bitcoin, and what made you go all in on working in crypto?
Yeah, okay. Long story version. So back in high school, I played computer games, a lot of computer games. One of the games was Ultima Online, which was one of the first massively multiplayer online games. It's a precursor to World of Warcraft. This was in 1999. And I used to trade stuff in the game. There's a virtual currency in the game that the developers implemented, and everybody would use it for trading. Over time in the game, the value of that currency was going away, but there was hyperinflation in the game. And I had a business. I would buy and sell high-end items in the game. I'd come home from school, I'd log into the game, and I'd go, buy and sell stuff. That's like what I did for fun. And every day the prices would go up. like 10% a day kind of thing on the server that I was on. And it was getting like really unwieldy to trade large items. Like there's like pack horses in the game. There's like pack horses filled with the currency in the game to trade. People are trying to find ways to like get larger denominations of the asset. And then one day I logged on during this hyperinflation period, and some of the other people who were trading were quoting in a different asset. They had just switched which currency they were using. I was like, oh, that's weird, but it kind of makes sense because this asset has been stable and it's like reasonably transferable, like it fit the other qualities of currency. Of course, I didn't understand that at the time. I was like, 15, and I wouldn't say very educated for sure at the time. And then the next day I logged on, and almost everybody who was selling a high value item had just switched which currency they were using. They were using the other asset, new asset, not the asset that the developers had ordained as the currency in the game. And I thought to myself, oh, that's kind of interesting. Oh, well, I guess I'll quote the new asset. And like that spontaneous transition that was coordinated across a whole economy in this virtual environment, it wasn't like a top-down decision. Nobody posted on the forums. Nobody like lobbied to the developers to say let's switch the currency. It was organic. It was bottoms up. It just happened. And I was fascinated with that, and I didn't understand it, but it stuck with me. So find myself several years later, go to university, end up in an economics class. And the economics class had like this enormous explanatory power for me. And kind of for the first time, I was like, oh, I kind of get what happened here. I read about spontaneous order that Frederick Hayek wrote about, kind of fell into this economics rabbit hole, essentially, monetary theory focus. Then years later, I go to graduate school, and I end up writing about monetary theory with a focus on money and virtual economies, like the computer games, or exclusively the computer games. And then sometime later, I think it was 2011, somebody from my graduate program sent me a article, the first Wired article on Bitcoin. And they said, hey, it's like this stuff that you used to write about, it's virtual currency. I said, oh. And I've read the article, and I was like, wow, this could replace the dollar. And of course, thought back to my original hyperinflation story. And this is pretty interesting. So that kind of got me interested, but I just had a pure academic interest. I hadn't been involved in technology outside of playing computer games and writing some scripts to like cheat at games or whatever.
I mean, what year is it now at this point?
2011.
2011, okay.
Yeah, and then later, it was 2013. So I continued to kind of study Bitcoin, but I didn't really pay attention to companies in the space. I didn't care about that. It wasn't a business. It was just like academic for me. Then in 2013, I was going to networking events, and I ended up at a Bitcoin meetup. And there's 3 guys there. Me, the guy who organizes the meetup, and a guy who wanted to buy drugs on the internet. So the guy who wants to buy drugs on the internet leaves, and I talk about monetary theory for like 2 hours to this guy, the host of the event. And he says, you can actually work in the space. Like, you seem like really passionate about it. There's like businesses and stuff here. You can get a job in it. And I'm like, what, really? It's like kind of the first time it occurred to me. Then I kind of took that as like very serious advice, and I just got obsessed. I learned about all the businesses that kind of existed at the time, which is basically Mt. Gox and Bitstamp and CA Vertex, the first Bitcoin exchange in Canada. Kraken was founded by them as well, where I later ended up working. I just got obsessed and down the rabbit hole and, mining and trading and writing arbitrage bots on Mt. Gox, and just did everything I could in the space, pretty much immediately from there.
This is an insane origin story, and I actually I don't think I was fully aware of the full origin story till just now. And I'm thinking through all the different things that had to happen. You had to play this MMO. Economics was interesting. Study that. Someone had to send you this Wired article. You had to go to this networking event, and luckily 2 other guys showed up. Otherwise, you may not have never known that you could actually work in this space. That's pretty cool.
Yeah. I'd say it was pretty cool, but sure would have been cooler to start working at it in 2011. I'll tell you that.
I'm reminded though, like around that time, 2011, 2013, and actually 2013 was the first time I had heard about Bitcoin from our mutual friend and colleague, Thomas Perfumo. But he had heard about it from a mutual friend that we had in high school who was using it for various purposes, probably more aligned with the guy who left that networking event, if you will. And he accumulated a ton of Bitcoin. Like I think he basically took his MacBook, like plugged it into his dorm room and had the thing running all the time, was just sapping up all the electricity from the college. And he had this choice. He was like, all right, I'm graduating now. It's the year 2013. I want to start a startup because I'm a software engineer. And he's like, well, I don't really have any money, but I've got all this Bitcoin. I guess I could just like pay for my startup using all the Bitcoin. And let's just say one of those major life regrets for him. Crazy to think it was that there were only that many people at that meetup. Okay.
Yeah.
So you mentioned you were CEO of the first Canadian Bitcoin exchange, 2013. Tell us what that looked like. Just paint the picture for us. Take us back in a time machine. What that was like, how many people were there, just what it felt like to work in the space back then.
So it was a little later in 13. So there was a big price run up for Bitcoin back in April of 2013. I think it went up to like $40 and then back to like $2 or something around, but it's not far off from that. And so I felt like I was coming in late, like there were all these people who'd been through like this crazy bull market then, and I came in after April. The company had, it was probably like 5 or 6 people, but they were starting to be kind of overwhelmed with the demand. And the guy who founded it, his name was also Joseph, and he had ran a sex hotline, like a phone sex hotline business before. And that sounds a little weird for the space, but it was actually pretty good because he had accepted high risk payments. So like I worked at exchanges for a long time, so maybe I just like think this is natural or whatever, but for everybody who hadn't worked at exchanges face a lot of fraud. The exchange has to deal with fraud prevention, and this is one of the reasons that it has been hard for exchanges to get and keep bank accounts or payment providers historically. It's because you basically mix a system where payments are reversible with a system where payments are not reversible. And that can result in fraud. Like you buy Bitcoin with a credit card and then you charge it back on your credit card, for example. Say, oh, I didn't make that purchase, it wasn't me. But it also could be like somebody steals a credit card and then uses it to buy Bitcoin, and there's no way to get the money back because it's in Bitcoin. The high risk payments piece was pretty interesting. He also had this belief that you needed to have a phone number at your company. So he was a big believer in this. So one of my first job was customer service on the phone in 2013 for the exchange. And the conversations that come in are just fascinating. Man, like people who have been accused of being Satoshi called this phone number. And people who turned out to be like they're crypto billionaires now would call this phone number back then. So it's pretty cool conversations there. And then I think there were 5 or 6 people working at this company. Some did payment processing, some did customer service, some did software development, of course. And maybe one of the things that stood out the most was I remember when we received our first $100,000 deposit at the exchange. And we're going like, what the heck, is this real? Who has $100,000 to put into Bitcoin? And then the first $500,000 deposit. And this is all in 2013, around like when Ross got picked up for the Silk Road stuff. And Bitcoin was going to $600 for the first time during that congressional hearing where they said, yeah, we don't need to regulate Bitcoin. It's already covered by the FinCEN rules. It's money. And the price runs up from that. This is when we were on the way to the $1,000 or so all-time high. And then we got our first $1 million wire. And like to put this in perspective now, like the institutional investors, like the market makers in the crypto space, are sending like millions of dollars in stable coins to and from the exchanges every few minutes, right? There's so much volume traded on the exchanges. These numbers are tiny, but for us, it's like, what the heck is going on here? Like, there's really something here. That's kind of one of the things that stands out. I got one about a market maker conversation we had. It's kind of funny.
I want to hear that.
Okay, so it was Cumberland, which is DRW. So DRW back then, I don't know what they do now, but back then they did like 17% of the volume on the NASDAQ or something. Like, it was a huge market making firm. And they had this branch of the company, like a side business called Cumberland Mining. I think they'd done mining first, but then they pivoted into market making on crypto exchanges. They were opening accounts at like all the exchanges, and they came to CA Vertex. And I remember being on a call with these guys, with the other Joseph. And remember, I just said that, we were shocked. Oh my gosh, we got a $100,000 wire, right? So $100,000 is a lot of money back then for buying Bitcoin. And these guys said, hey, we want to make markets on your exchange. We'll quote big orders on both sides, whatever. And we say, well, what kind of size are you talking about? And they're like, oh, we'll probably be able to quote 150K on each side of the book. And we're going, what? $150,000 liquidity? Like, that's a lot. And so, then they talk about settlement. And, we want to trade on credit, basically, and then settle later. And I hadn't worked in finance before, just crypto first. And neither had the other guy on the call. And we're like, what's settlement? Like, this is, like, I don't understand. Like, you said the Bitcoin and it's there. What do you mean settlement? So there's embarrassment number one, at least. And so anyway, these guys say the 150K orders on both sides, and the other guy, Joseph, on the call stops and says, what? How much money do you guys have? The guy from Cumberland says, more than God.
Oh god, that's got to be a core memory, a core quotation. Who says that? That's amazing.
It became one. Yes. Who says that? Well, it's Mike Komransky. I think that's how you say his name. It was him who said it on the call.
More than God. That's got to go in my arsenal. That's great. Man,
I
crazy
recommend.
time.
Yeah, it's a good one.
I've got to ask now. Okay, so it's 2013. You decide, all right, you're working in crypto. What did your friends and family say at the time? Like, my friends and family thought I was a little crazy for joining Kraken in 2022. I can only imagine if I had decided to go into crypto a decade earlier, what the feedback from them would have been like. I'm just curious what those conversations were like, and did people think you were crazy? Did you even bother explaining to them? Was this something they just weren't going to get? How did that go?
Oh yeah, I was explaining it to everybody, man. I'm like full on evangelist. Yeah, most people had no idea what I was talking about. It was early, right? So they had media form their opinion for them. And if you had heard of it, it was, in some not great context, right? Like, that's associated with buying drugs on the internet or gambling at the time.
Right.
So
Right.
I got some of that, but for a while it was just evangelizing to kind of whoever was close to me. But then beyond the circle of who was close to me, I was quite private.
For those who don't know, when I usually introduce Joseph, I say, all right, he was CEO of the first Canadian Bitcoin exchange. And then there's this funny transition period where you end up at Kraken and you meet Jesse. Maybe tell us a little bit about that history, that transition, how you ended up being employee number 24, 5?
Somewhere around there. I think some people came and left before me, but yeah, it was somewhere.
Yeah, how did that go about?
Well, okay, so at CA Vertex, there was a, shall I say, security incident, and the founders of the company, they put me in as the CEO somewhere around there, and they didn't get along very well. And so it was like a lot of drama, I'd say. And they basically said, sell the company, or shut it down. And actually, they told me to shut it down. And I said, well, can I sell it? I said, well, yeah, if you can find a buyer, you can sell it. We found a buyer, and we went from that conversation to transaction closed, keys transferred, etc., in 6 weeks, which I thought was pretty cool. And then I worked at Coinsetter, which was the acquirer, for just a little while. And then I started a couple other businesses. One of them turned out to be a market maker kind of business and a OTC trading business. And then I was using Kraken, and I was pretty excited about Kraken because I was excited about Ethereum. And Ethereum had, I think the pre-sale for the ETH tokens was in 2014, if I remember correctly, and it launched in 2015. And I had met Vitalik at a conference in Toronto where they were kind of working on Ethereum. And Anthony DiOrio, who was one of the other co-founders of Ethereum, there's like 8 co-founders, but Anthony hosted like a co-working space in Toronto called Decentral. And whenever I was in Toronto, I'd go to Decentral and just hang out. And CA Vertex had actually rented an office in the Decentral workspace in Toronto. So I had like some knowledge of these guys. I knew some of them, mostly Anthony though. And so I was really curious and, had followed Ethereum. And then when like the chain launched, not all the exchanges had listed it. And there was Poloniex back at the time that was doing kind of the most volume. But Kraken had fiat trading pairs. Like you could trade dollars or you could trade euros or whatever to crypto. And they were the only exchange at the time that had a dollar Ethereum pair. And I was like, oh, this is crazy. Like, I think this is going to be super popular. And this is the only place where you can buy it basically as like a normal person, somebody who doesn't already have Bitcoin. So I just kind of got excited about Kraken. And I had the same guy who hosted the meetup. I asked him to introduce me to Jesse and just email intro. And Jesse just offered me a job in the first email response. Like, oh yeah, okay, sounds great.
That sounds like a very Jesse thing to do. Like, I actually can completely imagine that interaction happening.
Yeah, it was cool. I had to get interviewed for like 5 hours after that, but not with Jesse.
I'm hearing all these names, like meeting Vitalik back then. Like, I mean, what was that even like? What was your first impression of that guy?
Man, he's young. That was my first impression.
That's funny. I think that whenever I'm on a call with Parker internally and I'm like, dude, this guy is just like, he looks like he's 10 years younger than he actually is, and he is younger than I am. Like, for a while, I used to be the youngest guy on most teams, and then somewhere along the way, I transitioned to like not being such a young guy. Sorry, I know like I'm making you feel old
I
in this
also
process.
remember that.
Yeah, but interesting. Man, this guy is young, but like just a prodigy. That makes sense for Vitalik. I've actually never met him. I've seen him like running around at conferences and things like that, but I've never actually had a conversation with that guy. I have met Mr. Joe Lubin, and we've chatted a bunch before. He even has one of our DFDV hats that he wields around at conferences and things like that. But
excellent. I'm sure that's your fault.
yeah, absolutely. My whole goal as CSO is actually to just plant these hats at every competing DApp possible, especially the Ethereum ones.
Tom Lee one was circulating on Twitter a bit. Nice job on that one too.
Oh man. All right, let me not veer too far off course here. All right, so Jesse offers you a job, you interview for 5 hours, you're at Kraken. I mean, you were at Kraken for how many years then? That would have been 2016, and you left when again?
24, yeah, it was 8.5.
8.5 years. I mean, let's walk through. All right, so the whole point of this is to go into winter war stories, and I'm kind of just going more into your background than anything
That's
else.
right.
But
We need to get back into the fun stuff.
So we do need to get back to one fun thing before we go into Kraken. So let's walk through the first crypto winter that comes to mind for you. And everyone here should be very familiar with the event. But I'm just curious what it felt like, what happened, what you were thinking when you were going through it. Like, paint that picture for the audience here.
Yeah, you're talking about the Mt. Gox bankruptcy.
Correct.
Okay, so I mentioned before this was the run up in 13 with to $600 during the Fenson hearing thing, and then on up. I don't know, various exchanges had different prices. $1,000, $1,200, somewhere around there is all-time high at the time. And that was cool. But what came after was not so cool. And this is kind of I guess I kind of joined in a mini bear market, like it was a short one, right? It was only a few months long between April and, I don't know, February or something for the big dump. And so the exchange, like, we had overwhelming demand, right? Like this happens at exchanges. There's some giant multiple of new incoming clients, giant growth in incoming deposits. There's just an enormous amount of work that needs to be done. And it's like, this is not a super intense software company with like everything automated, right? So there's a lot of manual processes. We have to scale up. But we're like paranoid about hiring random people who, you know, might be able to like rip off the exchange somehow, right? So we're basically hiring everybody's cousin. You know, it's like whoever you trust enough to have them like help out is being brought in. And then at one point we were growing the total client base by 15% per week, every week for like 8 weeks straight. Yeah, man, it was nuts. It might have been more
God,
than 8 weeks, but I, you know, looked at the data and it was 15% a week for 8 weeks.
dude, that is
Oh,
wild. I mean, for back
that's
then
nuts.
too.
So anyway, then of course the other end happens where we peak and then nobody wants to buy Bitcoin anymore. There's no more deposits. There's the trading volume dries up, price tanks, companies probably holding Bitcoin, and say, okay, well, we got to lay people off now. I did the projection on the runway for the company and how lean we need to get, and we need to go down to like 4 people to break even. This is like the worst bear market for the exchanges because there weren't altcoins. It's not just like, oh, nobody's like, I feel like altcoins have cushioned the exchanges quite a bit in the bear markets. Like, at least you can trade, you know, Bitcoin to ETH or whatever. But back then you couldn't.
Right. It was just
It's like,
Bitcoin.
okay, well, we got Litecoin, you know. So that one was rough.
I'm reading an article. I
Hiring.
mean, I've got to just. I'm going to read this for folks who maybe don't necessarily like appreciate the history here. So I pulled this Wired article. It is dated March 2014, and it talks about Mt. Gox. Mt. Gox is a messy combination of poor management, neglect, and raw inexperience. Its collapse into bankruptcy and the disappearance of $460 million, apparently stolen by hackers, and another $27 million missing from bank accounts, came as little surprise to people who had knowledge of the Tokyo-based company's inner workings. A Mt. Gox insider, quote, the CEO, liked the idea of being CEO, but the day-to-day reality bored him, says one Mt. Gox insider who spoke on the condition of anonymity. Before I even ask you the follow-up here. Bitcoin promises to give a bank account to anyone with a mobile phone, no ID required. It's clearly an amazing and potentially world-changing technology, the first viable, decentralized, reliable form of digital cash, but it's also a technology that was pushed forward by a community of people who are unprepared or unwilling to deal with the basics of everyday business.
Well,
Yeah. I mean, you're right. Like, this was probably the worst. But was this like a moment for you? I'm curious if like doubt started to creep in when this all happened. Like, was this a moment where you said, have I made a mistake? Is this dumb? Like, or were you pretty level headed while this is all happening?
no, I've been like absolutely committed since I did my rabbit hole thing, right? So it just like made sense to me. Like, I've been committed to sound money as a principle since, I don't know, undergrad, and I think this is like the if the if an economy could transition to a sound monetary system, whether it's Bitcoin or gold or any sound money, then I think there's incredible benefits. And I've been evangelizing this for 20 whatever years now. And when I ran into Bitcoin and understood it, I thought, this is sound money, but it's better. because it's unstoppable sound money. And it doesn't matter if the government approves it or not. It doesn't matter if somebody doesn't like it. It's like one of these technologies where there might be rules, but the technology is so good and unstoppable that it's just going to go around the rules, and then the rules have to change because it's created a new reality. And I feel like I understood that very early on, and the price didn't matter.
That's
And
fascinating to me. Like, okay, so I can understand being very committed to it ideologically. I can understand thinking like, no, this has to be like, I don't give a shit about the price. But like an event like this happens, and even if you're ideologically committed to the cause, were there ever any doubts that like Bitcoin could survive this, or were you like, no, I feel pretty good about
No, I
this?
didn't have any doubt about it. I just said, man, these guys really slowed us down. I said, man, if Mt. Gox hadn't blown up, we might reach the promised land 10 years earlier. And I thought the same thing about FTX.
Interesting. Reach the promised land 10 years early. It's certainly possible. I mean, it's tough to say like what the trajectory would have looked like excluding that event, but that's interesting to have that framing.
It matters a lot less, right? Like years later, okay, Mt. Gox sucked, but whatever. Did it really slow down adoption that much? Nah, it was kind of a speed bump in hindsight now. But, when I was in it, I was like, man, these guys really screwed everybody in the world because we could be realizing the, dream of a sound monetary system, much earlier. I was really bothered about that, but I didn't have any doubt that, we're going to get to a sound monetary system,
right,
and that it's, probably through Bitcoin.
So we have 25 minutes here, so I'm going to be mindful of time here. We're going to move on to next winter here, which is, I guess this would have been 2018. I have I'm going to say not so fond memories because this was my first crypto winter, actually. And this is like really the first time that I was heavily involved in the space, and I owned an irresponsible amount of Sia coin. For those who don't know what that is, I will spare you the lecture. You can go and Google that. But I just remember everything started acting like crap, like early January 2018. Everything crashes 90%. At this point, you're at Kraken. And maybe talk about what that was like compared to, the Mt. Gox winter, and what you guys specifically had to do at Kraken to get through that winter.
Yeah, it's the same situation, man. Like, not to the same multiples, right? Like, I doubt Kraken was growing 15% per week in total client size or count. But it's the same idea. Like, the exchanges can't keep up with demand during the bull markets, so they hire, and then to try to match the demand. And then on the other end of it, there's layoffs. So that's kind of my primary, second bull market, or second going into the winter, situation. Similar story. And we had an office at the time, and I got a bunch of pictures from the office. Like,
were you based in the SF office at that time, or were you in Canada still?
No, I never worked out of the SF office except for like, fly down for a couple weeks or whatever.
I see. Okay.
Yeah, the company was almost completely remote.
Right. And there were what, like just a few hundred people at Kraken at that point, or?
Yeah, 17 is, I think, when Kraken went over. Yeah, it was really fast. Like, it was like to get to 100 took, years. Then to get to 200 was like months. 300 was like, another couple of months. It was just kind of a growth frenzy there. And it was on a magnitude, just like so many more people had heard about crypto than the previous cycle. So when the price started running, kind of, this is how the cycles work, right? It's like everybody wants to buy the top, and the flood of users comes in, and the percentage growth was, not as wild, but the total count was, amazing.
What was the sentiment like? Okay, I understand you've never personally doubted crypto would survive. I mean, you have to have balls of steel to go through 2014 and think like, okay, it's just going to slow us down, but this is inevitable. But what was the sentiment like internally at Kraken? I imagine Jesse shared the same mentality as you, but talk about employees more broadly. You mostly feel surrounded by OGs who shared the same mentality as you, or there's some people there who were going through winter for the first time and they were freaking out. Like, what was that like?
In
2018.
Yeah, look, if you worked at a crypto exchange in 2018, it's because you had conviction, right? Like, you would have heard about crypto in the winter, and then like they at least Kraken wasn't hiring people who weren't into crypto already then. That kind of happened later when we said, oh wow, like all these people from these amazing San Francisco companies, Silicon Valley companies want to come to work in the space. And that didn't happen in the 17 bull market. It was too early. That was in the 1 in 21.
Right.
So maybe I was like totally nuts, and like if anybody expressed doubt to me, I'd be like, heathen, let's fire that person.
That's your criteria for firing someone. That's actually pretty good.
Yeah, that might have happened. I'm not saying that happened. That might have happened. And so I don't remember that in the 17-18 cycle. Now in 21 or 22, yes, loads of people are just leaving on their own, like, oh, this business is dead, the industry is dead, I'm out, I'm gonna go back into like not the crypto sector anymore, right? So, and I don't really remember that from earlier. Like, people didn't leave to leave the industry. Like they left because they were retiring, because they were rich, or they left to go work at another crypto business.
Yeah. I remember the 21-22 pullback very vividly because that's when I started working at Kraken. First, very closely with our Corp Dev and Biz Dev teams, and then post FTX, actually with you and Tomas. And I still remember that day. It was like obviously a very shitty day when you have to lay off a ton of people at Kraken. But I do remember our conversation very fondly because layoffs start happening. I'm expecting my screen to shut off. It doesn't. I get a calendar invite from you. And I remember I get on the call. You're like, hi, I'm Joseph. We haven't spoken before, but you're still here, so that's good. You're going to report to your friend. Are you comfortable with that? And I was like, yeah, I guess, because I'd rather have a job. And you're like, okay, cool, bye. And that was the convo.
Man, you make me sound super autistic. Am I really that autistic?
I am not commenting on your level of autism. That's for you to go and tell the audience. Now, I am curious. All right, we can talk about that winter, but I'd rather not just go list by list with like 15 minutes left here. What do you feel separates people and companies that can survive and thrive through a crypto winter versus those that don't? Are there common traits or characteristics that you think make folks resilient, a commitment to the ideology of crypto? Like, how do people just get through it in your mind? Like those that basically didn't quit when the going got tough?
Yeah, I guess I would sort of challenge the question, maybe. So I think it's possible for groups of people, companies, or individuals to survive and thrive through a bear market in other ways, but I'll kind of narrow it. One of the things that I like about working through a bear market or a crypto winter is that everybody who you're working with has opted into it, right? They're all there for the cause, or they care about mass crypto adoption. And maybe, there's like different flavors of it. So mine's focused on this sound money thing. Not everybody's has to be focused on sound money. But you get kind of this like camaraderie, I guess, on the team in the bear market that I think is hard to get in the bull market. So it's like easy to have a team get along when you're winning. But when you're losing and you're still a team, you don't hate each other, it's kind of magical, And I've been lucky enough, I would say, to experience this several times. And I don't know, does that result in a winning team? It sure is fun.
I actually tell people all the time that some of my favorite years working in crypto actually were post FTX when I got to work with you, Tomas, Zach, Nick. Like it seemed like we really got to focus in on the work that matters, zone out a lot of the distractions. And to your point, right, it's really cool to work with people who have strong conviction in the space. They're going to stick around when others are questioning it. So, all right, we've got 15 minutes here.
I'm back.
Marty, you're back.
Yeah, I went and got some lunch.
What's up,
How are
man?
you guys doing?
Dude, you missed a good one. We've been talking about
Oh,
like
I listened in the car on my phone.
amazing.
Okay. I was like, is Marty here, man? I can't believe he's not saying anything.
Bro, I'm
Yeah,
the
okay,
biggest
good
fan. You
here.
don't know that?
Hey, real quick, let me jump in here. We have Tomas, I think, in the audience in case you want to bring him up.
I think he's just chilling as a listener.
But come up. Just
We do not need to force him into a speaking role unless he
Yeah, he was,
absolutely wants it to. So
Yeah, to be clear, he was requesting earlier, and then he missed.
I
it.
am almost sure that was an accident, but if he wants to
Okay.
come up, he'll bug me here in a second here.
Got it. Let's keep it going. This hell of a conversation. Wow.
Yeah, this is, I mean, a lot to take away from this. What's some advice you would give to people who are getting into crypto now and maybe they haven't lived through a proper winter yet? Like, what are some tips you would give them, Joseph?
Yeah, I'd say my tips are pretty basic. Like it would be nice. I have not personally accomplished this, but it would be nice to not look at the price every day. And because adoption isn't necessarily about the price. And don't invest more than you can afford to lose. Right? So you want to be invested, you want to have skin in the game, but not to where you can't sleep over it or something. That's uncomfortable. And I think that if you're in that position, then that's probably a good kind of mentally healthy foundation to come from. And hopefully if you're in the space already, then you probably have some conviction on why you're there.
I was half expecting you to give the advice that everyone should be like eating a bowl of vegetables and getting 9 hours of sleep a night and stuff like that. Those things help. Those things really help.
I agree. Yep, I'm still eating my bowl of vegetables.
I haven't brought this up in a public forum for quite some time, so I'm going to bring it up, which is Joseph eats a bowl of vegetables every day, but with very precise measurements and macros. I remember asking this question, and it was right when I started at DFDV, and you were like eating a bowl of vegetables on a call, and I was like, what you eating? And a normal person response would have been like, oh, I roasted some sweet potatoes and broccoli and Brussels sprouts and seasoned it with this. And instead, I get rattled off like the exact number of grams of every single vegetable and the exact macro count and everything that got thrown into it. Can you tell the audience where you got this from?
Yeah, it's Brian Johnson, the guy who's going to live forever. I basically just eat the same thing he eats, and I eat almost the same thing every day for the first, 1,750 calories of the day. It's the same thing. I've been doing it since, it's like 15 months now that I've been doing this. I think it's pretty great. I don't know if I recommend because, it's kind of challenging sometimes, but it's massively simplifying for me, like removes decision fatigue. Just eat the same thing every day, and I feel like it's nutrient complete. And I still eat whatever I want for the last 500 calories. So
this actually sounds like it pairs very well with, do you remember Jesse at Kraken went on a diet where he was eating a ribeye every single day?
Yeah, that would also be stress reducing.
Yeah, this sounds like the perfect combination, actually.
Yeah, just do both.
All right, we have 10 minutes here, so I'm going to ask just a last few, and Marty, please feel free to chime in since you
My
joined us
comment
just
on that
now.
is that I find it always quite interesting as a 55-year-old who's in good shape, that most people seek nutritional or lifestyle advice from influencers that are in their 20s, which are young and prove nothing. I think it's more important to get advice, life advice, nutrition advice, health advice, fitness advice from people who are over 50, who are looking good, who've actually proven it. So I've always found that interesting. And so I follow a lot of nutrition, lifestyle type coaches that are older. In fact,
I could not agree more with you. And I'm going to.
I think it's quite ignorant to follow a 21-year-old woman or man's advice about what to eat when they probably could kick the can at 32 of a heart attack.
Yeah.
It's more important to find a 90-year-old in good shape without a gut who has low stress and say to them, what have you eaten your whole life? What is your daily
Completely-
ritual? Like, do you watch
completely
television?
agreed.
Do you read books? So that's just a little bit of advice there.
My diet at 19 was horrific, and I was still in like fairly good shape despite that. But I mean, I'm going to take this opportunity for a quick second to plug one of my mentors, Strauss Zelnick. He's CEO of Take-Two Interactive. That's the parent company that makes Grand Theft Auto, the parent company of Rockstar. This guy's almost 70 years old. He is the most jacked 70-year-old I have ever met in my entire life. And he's actually like, he's a good buddy and a mentor. We work out every once in a while. But like, that's an example of someone that I look to for fitness and I'm going to say general life advice. But anyway, not to veer too far off the conversation here. Joseph, is there anyone in the industry today that you really... Yeah, my connection
Say that
dropped
again,
out. You hear
DK.
me?
One more time. It's the phrase you just the same question.
Yeah. Is there anyone in industry you really respect who doesn't get enough credit in your view?
Oh,
Mike Cagney. That's mine.
interesting. Yeah, initial person that comes to mind is the founding CTO at Kraken, who I suspect doesn't want me to name them. Let's see, do I have another one? Yeah, it's some of these engineers who, kind of silently do their work in the background and, have some of the more important, especially security related contributions to, major crypto projects, whether centralized or decentralized. And I don't know, maybe this isn't a great answer, but yeah, I don't know. I got a lot of gratitude there.
Do we want to pose this out there to other people? Like, Teddy, I'd love to hear your opinion. Who would you say is an underrated person, underappreciated person in the space?
Sheesh. That's brutal. I mean, you want to like go for some of the,
Come on, let go, bro.
you almost want to just go for some of the like underrated like legends that are, doing like mining operations efficiencies, like with immersive mining technology, and like some of the key pioneers that aren't really discussed in the, picks and shovels of the protocol, like key devs that are funded, that are looking out for the best interests of bit protocols for Bitcoin. The ones that are doing it for, like Joseph was getting at, the importance of trusting and caring about the protocol versus the price, and have no price factors to them. So I don't even need to name anybody. It's all of them.
All right, you want to hear my take, Joseph?
Yeah, man.
Okay.
Of course.
As somebody who was there from the beginning, literally in the late 90s, building distributed systems, into the early 2000s, the architectures emerged, the papers were written way before 2008. I think that, first of all, the person that gets too much credit is Vitalik Buterin. If you look at when I was there in those days, it was Evan Bachman that really engineered the EVM, the creator or founder of Cosmos, which has disappeared and died, and Ethereum has reigned. And Vitalik took Evan's work. Same as Charles Hodgkinson, took Evan's work as his own. Those two people got somehow notorious, Vitalik and Charles Hodgkinson, and for some reason, Evan Bachman, who I believe is the genius behind EVM, we don't even know about. I know about him. So there you go. Go Google him. Cosmos. It was a bloody brilliant architecture, and it was literally stolen from him. Other people in the industry, I think, don't get enough credit as Anatoly. I think Toly should be a Michael Saylor figure size for his work, especially given the underrated status of Solana in general over Ethereum. I think it's an injustice that Vitalik gets so much attention. I also think Tom Lee gets too much attention. He has no track record of profitability. He has no track record of ever being right. I think Benjamin Cowan gets too much credibility. I think there's a lot of over credibility based on narrative and media, and a lot of dark shadows of people that actually are in the trenches and have built this technology and propagated to where it is now. So anyway,
I want to hear Pete's
Yeah,
answer
go
to
ahead,
this
Pete.
one, and Pete's definitely going to tell us it's Gary Gensler, isn't he?
Go ahead, Pete.
Close. Close. No, I guess I'll take the other side of this and focus more on the capital allocators since we shouted out the engineers. But I think like one of the best in the space is Chris Berninski. He runs Placeholder VC. He was the author of Crypto Assets, which was a book that came out, I think, in 17 or 18. I read it from front to back in one night. I met him in person, super humble guy. He originally led the crypto initiative at ARK, so he worked really close with Kathy Wood. He is a guy who's gotten, some things wrong, but he's really nailed Bitcoin since inception. He was early to Solana, and he's also just absolutely crushed the past 3 bull and bear cycles, where this time around I was kind of kicking myself for not hearing him, give his thoughts for why thoughts after 1010 the top had been in. There's actually a really good video or podcast he did with Raoul Powell maybe 3 months back, where he gave the bear case and Raoul gave the bull case, and he's really good at articulating and just feeling out the cycle. So yeah, big shout out to him. And like I said, super humble, nice guy. Met him in person several times, like absolutely no ego. And I think it's really tough to come across like brilliant people who aren't, ego driven.
Very cool. All right, we've got 2 minutes here. I have 2 last questions, but I'm going to skip one because this question is, what is Joseph most excited about right now? And the last question is, 10 years from now, where's crypto and where's Joseph?
10 years from now? Jeez.
Yeah. Maybe give me a Bitcoin price target and where you expect you're going to be.
Oh, Bitcoin? Jeez. It's in the millions. How many millions, though? I'll go with millions.
Do you think we detach from software stock? And what is the catalyst?
Man, you are really into the software stock thing.
Yeah, the correlation is 0.979 right now.
Man.
I've got an answer. When the AI agents all suddenly decide that Solana is the best chain to transact on, and you start seeing transactions surge on the network as a result of that.
That was DFDV. We're going to move on now to Remora Markets. We've got Daddy Warbucks in the crowd here. Goes by Warbucks. I believe your name is... What is your first name again?
My first name's Daddy, last name Warbucks.
Here we go.
You can call me Daddy.
Welcome to the space. First time. This is really cool. A big fan of Remora Markets. Been watching you guys. I know you're ex-Magic Eden, right?
Yes, ex-Magic Eden. If you guys were around way back then, that was during the whole Magic Eden intern meta, when the account was ratioing OpenSea and a few others. So that was a pretty wild time. I was the original Magic Eden intern, yes, but now leading the resident Chad at Remora Markets. So let's fucking go.
Okay, what I'd like you to do is, for those people on the call that don't know what Remora Markets is, don't know the space they're in or the history of Remora Markets, and most importantly, the giant market they're trying to capture, maybe you want to introduce yourself. What is Remora? Take 10 minutes. Go ahead, sir.
Absolutely. GM, everyone. Thanks so much once again to the MartyParty crew and for having us here on Solana Breakout Day 3. Super excited. I'm actually just dialing in from Hong Kong. We just wrapped up with Consensus. It's been a crazy couple of days, and the overall vibe has been fantastic, Solana and across the board. So what are we doing here at Remora Markets? Honestly, it's pretty simple. A lot of these traditional finance assets that we are all very used to, whether that's stocks, metals, oils, real estate, everything that was pre-crypto, all we're trying to do is to bring it to the masses. We just want to give everybody access to be able to trade, swap, expose themselves, expose their portfolios to everything that possibly matters, right? The idea really came from a very, very simple problem. If you're sitting here in Hong Kong, like myself, for instance, and I'm seeing Tesla go absolutely berserk in the NASDAQ stock market, and I'm unable to really get any level of exposure within my portfolio, how do I position myself in order to get a piece of that action? That's where that idea came from. It was about 4 months ago, back in September. And since then, it's been an absolutely insane ride. We offer the deepest liquidity on chain. We went live with 5 different stocks, including Tesla, NVIDIA, and of course, the King S&P 500. And in around mid-Jan, we also went live with metals. So, I mean, all of you have seen, right, the absolutely insane run that we've seen with gold, silver, and hopefully with copper. Not financial advice, but hey, fuck around and find out, have fun. But yeah, honestly, that was the entire ethos of what we're trying to build here, is allowing people access, allowing people the ability to kind of diversify their portfolio, number one, whether they're hedging against what the crypto markets, what's happening within the crypto markets, or number two, the level 2 angle of what we're trying to do here at Remora is, of course, bridging the TradFi and the DeFi angles. So that's how, honestly, man, that's how we kind of put ourselves apart, I'd say, is there's a couple of players in the ecosystem that may offer stocks. We were the very first on Solana to offer metals, right? But what makes Remora Remora? That's the question, right? So that's where the level 2 angle comes in, that we bridge the best of TradFi with the best of DeFi. We believe that you shouldn't only work to get these assets, right? I mean, buying a Tesla stock, for some people, that's a milestone, right? Trying to get a few $100s in, stacking your portfolio. That's awesome. Now, what if I told you you can actually make your assets work for you? So that's level 2 with what we're trying to do at Remora Markets. We want to make sure that you don't only work for your assets work for you. How? You have these different DeFi tools, yield strategies, yield farming strategies. You can LP. There's so many cool things that we've seen over the last few years in the Solana ecosystem, the crypto ecosystem. So we thought to ourselves, why can't we bring that and marry that with the idea and the fundamentals of traditional finance? So that's where we came with the level 2 angle of what Remora is all about. Now, level 3. This is what I'm personally most excited about. And this is something quite new. I think we've only seen this over the last couple of weeks. So 1 and 2, of course, is something that we have control over, right? We are working to bring a lot more assets on chain for people who can't trade Tesla, NVIDIA, S&P 500. If you want to get it, you can get it through Remora. If you want to fuck around and find out with leverage trading on Flash Trade, right? Or you want to loop our different FLPR tokens, which I'll get into later, right? You can always do that with loop scale. Now, level 3 is something that's out of our hands, and it's a little more organic. So over the last couple of weeks, we started seeing that people are kind of innovating with the Remora assets that we put out into the ether, right? So for instance, Metal Miner X has been a really cool use case. That's like a personal milestone, honestly, for the team. We talk about it often because it's so cool. So this is not an endorsement or anything, but they're basically gamifying the entire process of how you can expose yourself to metals. You kind of play around on their platform and you get deposited or get dropped it into your wallet, some gold R tokens, some silver R tokens. And that's pretty fun. I think that's what adoption is really about. And that's what we've really been seeing over the last couple of weeks. We're really growing that entire Remora ecosystem. But I'll stop there. There's a lot that I mentioned, these three different levels of how we make Remora Remora, what we're all about, what we're building towards. There's so much more to talk about, but I'll hand the mic over back to you guys. Just super excited.
Yeah, I mean, I'm an engineer by trade, a computer scientist, and I've been in blockchain, since day one. So I'm more interested in the sort of like technical low-level stuff. Can I ask you a couple questions?
Yes, and I'll do my best to answer them.
So first of all, if you're trading silver on Remora and it's backed 1-to-1, what exactly is the collateral? Silver stock, silver ETFs, or actual physical silver?
They are silver ETFs.
Okay, and is that coming through Step Labs, right?
Step Labs, sorry?
Step Labs actually the custodian of the ETF. Who actually holds the ETFs?
We work with a brokerage firm based in the States.
Got it.
And so they back every single token that's on chain, that's within circulation, is backed 1-to-1. So whether that's the metal ETFs or the individual stocks themselves.
Got it. So everything is through a custodian broker in the US. So you create the ledger on Solana, right? Let's say you're going to tokenize Walmart stock. So you create a ledger, which most people think of as a token, but it's actually just a program run on Solana that represents something. And you create an initial supply. So you guys decide up front how many, divisional ownership of the collateral you're going to allow. How do you come up with that? How do you come up with that calculation to make like 1,000 tokens to 1,000 Walmart shares? How do you come up with that logic?
So it really depends on the market, right? I think I'll use the example of how we went live with our R metals around a month ago as a good case study. So we went live with a couple of thousand of tokens each, right, within each of these metals. But we saw that there was insane buying power. People were going absolutely berserk behind copper, silver, and gold, and there was just not enough tokens on chain. So we make our own deductions, right, on what we think is a good number to start with. We want to see what the volume is. What do people really engage with, right? When, of course, we pride ourselves in providing the deepest liquidity on chain per stock, per token across the board, across the three main different players. But as more people buy up, as we see that there is growing demand, we then purchase more, we mint more tokens on the back scene, and we bring them on chain. And we see people engage with it, and people buy, people sell, people swap, people innovate. So that's really how it goes. It's pretty simple.
So then once you create the token program, so at the end of the day, basically there's a Solana program address that now maps legally to some kind of a asset portfolio held by a brokerage, but that's a different closed loop. So is there sort of a legal team or lawyers that ink some kind of legal indemnified document to link the Solana program address and supply with the collateralized inventory?
Okay, so yes, absolutely. We do have a fantastic legal team that helps us navigate any murky waters that may pop up and make sure that we are regulatory approved, right? So I think there's a couple of ways to go about it. So one of them, for instance, is the fact that we implement something called the Token 22 standard, right? If you want to be regulatory compliant, that is something you must do when minting these tokens. That's the contract that these tokens must be minted upon, right?
Explain that in depth for the listeners, what that means.
Okay, yeah. So the Token 22 standard basically allows the minting authority, which in this case is us, and every other player that does this within the game, whether they're minting stocks or minting metals, whatever it might be, the right to possibly freeze those particular assets to make sure that we, no bad players, so I suppose, get in hand from these particular assets, right? And if any authority, like say governmental authority jurisdiction, does come to us with any level of paperwork, we are then compliant and we can see what we must do going forward. But luckily, that has never been the case. But yeah, man, it's fairly straightforward, fairly simple, strong legal team. And of course, we are working towards gaining certain licenses, which will be a first of its space. I wish I could say more about it because it's actually pretty exciting.
No, you have to.
But oh, dude, I wish I could. But once we get them, I promise you, I'm coming back on this space and I'm dropping all the alpha here first.
Okay. So other than metals and stocks, are you guys also interested in doing treasuries, stable coins? What other interesting assets? Are you RWAs, and will it all be through brokerages, different brokerages? And are you also looking to do it in other jurisdictions outside the USA?
Yes, that is such a good question. And dude, absolutely. I mean, we don't have stocks in our name, right? Unlike certain other players within the space. For us, the world is our oyster. We started off with stocks, we're going to metals, and we want to see what the market demands. We saw that there was crazy demand for metals. We pivoted quickly. We're an agile team, and we brought it the quickest we possibly could, the first on Solana, to every collector, trader, whatever it might be, right, on chain. Now, next, we're hearing rumblings about oils. We're hearing rumblings about real estate. That's definitely on the table. And, to answer your question about different markets, 100%. The world is so much bigger than the United States. Like I said, I myself am based here in Hong Kong, right? I love the Hang Seng Index. There's so many more markets. There's the Nikkei, the London Stock Exchange. There's so much more to be done. And, the very first level upon which Remora was founded was all about access. It was all about bringing access to everybody around the world, making it just easier for you. Right? You don't have to off-ramp your money to be able to get exposure to Tesla or Nvidia or the S&P 500. You don't have to get, all these different brokerage accounts. It's all within one wallet. It's all in one spot, and we are that one-stop shop for you. So absolutely, different markets on the table, different verticals, asset classes, definitely on the table. A little bit of alpha. Oil is something that we are really properly looking into at the moment. Hopefully we'll be live sooner rather than later. And again, there's plenty more. Stablecoins, not yet. So to answer your question, but otherwise, like I said, the world is our oyster.
Quick side question. So how do you guys handle things like corporate actions? So let's say you have a tokenized stock that has a dividend or does a stock split or is delisted for your tokenized equities. How does that happen? Does the holder automatically receive the benefits? Is there some kind of manual process?
So right now, there is no mechanism to, hand over these dividends to those particular stockholders. That is something we're actively working towards. And I think that would be the next step or, 2 steps later to really give you that feeling of, hey, there's no difference between a brokerage experience versus that experience on chain. So although we don't have it yet, I mean, we just started 4 months ago. There's still plenty of runway. There's still plenty of leeway to work into, to grow into. And that's definitely something we're actively exploring at the moment.
And do you think that, have you studied the latest US Clarity Act with regards to tokenization? Is there anything in the market to do with this? Are these kinds of things going to be in the guidelines that get ultimately approved for regulation? And what is the equivalent regulator in Hong Kong that you're dealing with? And how is that going? Can you maybe talk through all that?
I can't really speak to what the regulatory environment might be in Hong Kong at the moment. So I'm not legally sound or legally equipped with that knowledge to get into the details. But what I can tell you is our team's on it. They were discussing it within the relevant channels. Absolutely not. I'm a degen trader at the end of the day. I enjoy Remora for what it is. I'm here to increase my yield on all these different real world assets, metals, stocks, whatever. But our team's on it. We're looking into it. We're getting into the nitty gritty details, and we're making sure that we're in every way regulatory compliant. So in Hong Kong, the general environment, I can tell you, is really friendly, and it's not just about Hong Kong. There's a bunch of other jurisdictions that are going to look into it. Because I think once the United States, the stock exchange, right, the New York Stock Exchange, they announced it, I think about a week ago, if I'm not mistaken, that they will also be tokenizing their stocks, bringing it on chain. They'll start developing it in about a year or so. So that's pretty damn bullish, if you ask me. That shows that we are exactly on the right track. And that is exactly what the people need. And that is exactly what the future is heading towards. Now, what is the limitation of the New York Stock Exchange tokenizing its own equities? Is that they're just going to cover the New York Stock Exchange. While on Remora, we'll have plenty of other markets included.
And do you guys plan, you can use Remora tokenized equities and metals as collateral, right? Have you made any partnerships with other Solana ecosystem projects like Jupiter or others to allow collateralization with your particular financial vehicles?
We have a bunch of different DeFi integrations, man. It's just pretty exciting. So we just announced one with Compound Ore, for instance. That was our latest one, where users who own the Ore token can deposit their Ore in order to get interest-free collateral for Remora assets and a few other assets and so on. We also have partnered up with FlashTrade that were the absolute OGs. Shout out to the FlashTrade team. You should talk to them about it. Yeah, they were fantastic,
I've known Anas since the beginning. Actually, I did a space with Anas when he first started. Literally, they were writing the code.
Oh, when was that?
Oh, God, years ago. 2 years ago, guys? When was that? 3 years ago?
Two years ago in crypto terms, that's at least 5 years in normal human years.
This was like way back in the beginning. It was just an idea. And look how far they've come.
Wow. Exactly. And Nas and the team have been insanely helpful. So like I was saying, we were the first to bring leverage trading of stocks on chain with the FlashTrade pool. Yeah, up to 5-10x leverage, which is absolutely crazy. And not only that, we also created a sort of index for stocks. So the 5 different stocks that we offer, you can deposit it into the FlashTrade pool and get something called an FLPR, which is a yield-bearing token that basically exposes you to all the stocks within that particular Flash liquidity pool. Now, you already have a yield-bearing token. Now, where's the yield coming from? Is that leverage traders that are using the Flash pool, they have to pay their fees in order to use it as collateral, right? And so those fees go to the owners of the FLPR token. Now, that in and of itself is pretty cool. You get a yield-bearing token. You are exposed to the underlying asset, which is the S&P 500. You have your regular APYs on the deposited liquidity pool. I think that it ranges between 20 to 50%, which is pretty fucking crazy. And on top of that, it's also a yield-generating token, but it doesn't stop there. Then you go with the FLPR token, you go onto loop scale, you loop it, and you're able to further increase your exposure to the FLPR token and the underlying stock or assets. So yeah, man, it's been absolutely crazy. Like I mentioned, there's a bunch of people building on Remora assets. So I mentioned Metal Miner. There's another one we're in conversations with. These guys are also pretty cool. So they came to us when we were talking about gold, and they're talking about offering low risk gold, high income gold, high yield gold. So it's another layer of innovation on what is essentially an asset class that we're offering you to everybody around the world. So absolutely, like I said, that was level 2 of what we're trying to do at Remora. It's all about bridging the best parts of TradFi and the best parts of DeFi together. It's really creating that Wall Street thesis,
It's interesting. We're through the course of these last 2 days, we've had neutral markets. We had a gentleman before who just came on. I don't know if you know Gauntlet, Luke. These are guys that come from Goldman Sachs and Wall Street prop trading funds and hedge funds and are implementing the same strategies on Solana. And I think that you guys should all integrate. There's no reason why I can't see Remora assets also being part of a delta neutral strategy automated for an end user.
Absolutely.
If somebody had long gold and shorted Bitcoin, it would have been the ultimate strategy of all time.
Exactly. And I think that's what people are really getting onto. I was just talking to my team a few hours ago, and we were looking at our Dune dashboard, looking at our milestones, our growth. And it's been absolutely insane. I think to date, so about the last 4.5 months, we've done almost $130 million in volume. We've had almost 15,000 traders, which is insane, over 300,000 unique trades. And it only started to really build up around January. It was when we're bringing in those different DeFi tools, right? The whole leverage trading angle, the looping angle, FLPR. So showing you how it's not just about the assets, but how you can make your assets work for you. And then bringing in an entirely new fresh layer with metals. And I think people are really getting to understand that. Like since then, our momentum has been absolutely insane. Like the inbound, bro, is crazy. Even at Consensus here in Hong Kong, just talking to people, they're just they're super excited. And, people that I didn't expect to know about us actually do. So it's been fantastic. You're absolutely right. It's honestly a no-brainer because everybody looks at crypto and DeFi. Like say, for example, you have your Solana or your Bitcoin, right? At the end of the day, yes, you may get your APY, your yield for about 30, 50%, whatever it might be on a yearly basis, right? But the underlying price of the asset might fluctuate like absolutely crazy. I think Solana over the last month already dipped like 50%, but that doesn't happen in the stock market. I'm talking about more reliable assets that you can not only have exposed to that underlying price, but you can also earn your yield on top. I mean, bruh, it's a no-brainer. Anybody I talk to about this, even my dad, I sit him down, I talk to him about it, he's like, why aren't more people doing this? And I think that's exactly where the world is headed towards. It's not about the asset, but what you can do with it.
Okay, let's talk about the risks. So, I mean, on basically on paper, what do you feel are your biggest operational risks and security risks right now?
I would say the biggest operational risk is not having enough assets. The biggest operational risk is us losing to somebody else. There's not much where we could have any level of security exposure. We've gone through this multiple times on a bunch of different conversations, right? We use multi-sig wallets where necessary. And we have the token 22 authority, like I mentioned, right? So we've got that angle covered in terms of a regulatory safety point of view, in terms of safety and hygiene. And so everything else is pretty well accounted for. And because right now, we are the sole authority right now that are minting these tokens and bringing them on chain, right? Or burning if and when necessary. So there's not much security risk at the moment. I think that only comes when you start sort of experimenting with scale. So when you were talking about, for instance, introducing a mechanism where people can get their dividends for whatever stocks that they may own, then perhaps would that require a level of KYC? We don't know. What sort of risk does that involve when people have to kind of bring in the KYC angle and see how are we going to give them the authority to mint and burn tokens too? So that's where it gets a little bit tricky. I think right now is pretty simple. So there's not much, if any, operational risk at the moment that we are able to see. The only risk I see is us, getting complacent, and that's not happening anytime soon.
It's a little bit of a technical spin here. Big believer in Oracle pricing and sort of the foggy, ghosty unknowns about it. How do you guys get your day-to-day active pricing of all of these equities and RWAs? Like, what is your approach technically? Do you have access to other oracles? Anything you want to share about that? Like, how do you get live pricing? Go ahead.
Yes, we've got two ways to peg pricing, basically. Number one, what you just mentioned, right? We were the first to bring NASDAQ-linked on-chain pricing, okay, through Pyth, of course, absolute OGs. So that's within the Flash pool itself. But we have different AMMs also being run through buying and selling. So, that price might fluctuate a little bit, but we see that the delta is usually only a couple of percent at most. And wherever the delta really presents itself, we actually have a community of people, trading and taking advantage of these arbitrage opportunities where if you see, okay, on an AMM, this token is priced a little too low, people go buy and they sell it within the Flash pool where it's NASDAQ-linked pricing, right? So you have that little money-making opportunity there. And I'm so glad you brought this up, man, because I think in case we are heading off into, a 2-year, 3-year bear market, whatever you believe in, I think it's going to be, it's a fun little side gig if you kind of want to. I think with arbitrage is what that's kind of how we started off. So before we even had those DeFi integrations, people were arbing the shit out of our tokens through the different AMM pools. And of course, with introducing that NASDAQ link to Flash Pool too, it just makes it a lot easier for people to buy and sell. Some have set up bots to make sure that things are priced correctly. Others do it manually. So yeah, there's two different ways to do it. We've created a community for it, and people have fun. And it's just, honestly quick ways for people to earn your McDonald's meal, you know?
So, I mean, we've touched on, I think, everything. The only last line of questioning I'd like to have is for the audience out there and new people that might want to play around, what would you be your sort of roadmap, beginner guide for using Remora, getting involved? And then maybe you can follow it up right after that with, there are other options, right? There's Ondo now, Xstock, Super States, etc. What is your unique edge? Why should people use Remora? Go ahead.
Okay, sick. First off, what are we building towards? I alluded to this earlier. I'll say it again. It's all about being that one-stop shop, right? And in the words of one of our team members, Jerome, his grand plan essentially is to imagine this. All right, you've got a bunch of different asset classes. You've got oils, metals, stocks from all different sorts of markets. Now you have a portfolio where you have an AI assistant that might be able to kind of to deploy asset capital as you ask it to. Like, hey, I think the United States is about to go get into war with Iran, for instance. What stock should I be exposed to? And turns out you have everything available to you on chain right there under the Remora umbrella. That's what we're building towards. And that is obviously a very hard-hitting product-based idea. Now, if I'm going to take a step back and talk more about the vision, it's about, honestly, the evolving conversation, right? Where, say, everyone here that's listening in on this Spaces, most of us have invested into something, right? And you may tell your mom, you may tell your friend that, hey, I bought Tesla today, I bought NVIDIA today, I bought Bitcoin today. Now, what we're building towards is the question after that. And that's supposed to be, what are you doing with it? Right? Because your asset is not just supposed to sit idly in your wallet, in your brokerage account. That's boring. You know, like, get with the times. You need to make sure that your assets are working for you. I mean, look at the state of the economy. I'm a Gen Z guy, all right? Shit's expensive as hell, and I'm lazy because that's what people are nowadays. So we want our assets to work for us. So to those listening in, what Remora is all about is helping you optimize what you already have and making sure you truly, truly get your money's worth in every investment that you make on these different stocks on chain, these different metals on chain, and these different assets on chain. Now, that's the general vision, right? I gave you the hard-hitting product idea as well as the larger picture that we're building towards, the difference we want to bring. And your second question was, how do we differentiate ourselves? Like I said, man, it is definitely on what we do with the real world assets that we have, the RWAs that we have. You mentioned a couple of players. They're cool, you know, they've got a few more stocks than we do, but you know who has the deepest liquidity on chain? That's right, it's us, number one. Number two, you know who has the most amount of DeFi integrations and opportunities for you to actually have fun with your assets and actually make money from them in a lot of different ways. And if one way doesn't work out, you try the other or third or fourth or fifth, and who actually has games built upon their asset classes? That's right. It is just Remora. So that's the way we differentiate ourselves for now. We're going to go harder at this. We're going to bring in a lot more different verticals that I mentioned, right? Oils, perhaps real estate, a couple of others. And I'm just talking about 2026, you know, like I haven't even touched upon the crazy vision that we have over the next few years, but it's going to be good. It's going to be exciting. And that's what Remora is all about. It's in the name, Remora. We're not about less. We're only about bringing in more shit.
Sounds good, man. Let's open it up to questions. Teddy, do you have anything you want to add? Any questions?
No, like if you want to share a little bit of what maybe is coming maybe down the road, 2027 or late 26, and just to love that you're working with Flash Trade.
Yeah,
I see Flash Trade has a lot of fans on this.
yeah. Flash Trade is they've kind of part of the gang here. We've seen them come up, taking a lot of advice from us, and I think you should join in our community. And I think we can help each other. We've got a lot of long-time users here, a lot of traders, and features are what we're about. So we can always give back by suggesting cool features, integrating with some of our other partners, and just keep the train going. I mean, what we're ultimately looking for are killer apps. And I think you guys have started building a killer app.
Oh, thank you so much. And
He was
dude, absolutely.
for an ass. I mean, we knew he was building a killer app, and we got some people in his team that brought in next level features, and you can see they've had 3 to 4 times X growth. So I think the same thing is true here. We can really help you. I think this is a great start. Wes, anybody else got any questions? It's 1:30. We're doing
Yeah,
good.
Marty, hey,
Yeah,
I
go
just,
ahead, Kenneth. Go ahead.
yeah, sorry, just checking. I just wanted to get some more of the history I've been reading. It sounds like a really cool story that he has for the background of Remora being bought out from Moose, and then the play from the people that bought them and how it's rolled in. It sounds like a really good story. I don't know if we missed it or didn't hear it. Maybe I missed it, but I would like to hear a little bit of that. I mean, that's an interesting background for
Here we
just
go.
a couple of years.
Tell us about Moose.
Unfortunately, I was not part of the Moose OG team, so I can't really speak to that. However, we do have some of the gang with us still. So Aram Manzi, he was on a space with us, I think last week or last week from the Remora account. And we were talking about all these different things that we want to build on Remora. So we still have some of the OG team. But essentially what happened was we wanted to scale, and we realized, okay, if we want to scale, we want to there were certain value propositions that we really wanted to focus in on, right? Like for instance, being the first to market with different asset classes. We want to be the deepest liquidity on chain. And so the original team, they realized, okay, if we want to make that happen, if we want to make that dream a reality, then we need to partner up with other players. And that's exactly what happened.
Cool.
There you go. Anybody else? Anyone from DFDV got any questions? Okay, let's go.
Quick question.
Oh, go ahead, Pete.
Thanks, Marty. So you mentioned the oil. As far as I know, in traditional financial markets, it's very hard to capitalize on oil. Can you walk me through how you would do it on Remora?
Oh, it'd be very simple. So the relevant tickers could be BP, could be Shell, these different particular companies. We plan to bring them on chain. So we're still kind of discussing and trying to see which ones it is that we want to bring on chain. So when that happens, you will be the first to figure out. Like I said, the MartyParty spaces will be the first to get that alpha. But once again, it's about exposure to those particular companies that are working within those particular fields and industries, right? So when I gave that example, for instance, if the United States is going into war with XYZ country, then what should I do with my stock portfolio? God, that is such a grim example, but it is an example nonetheless. So you would engage with stocks such as Lockheed Martin, whatever else that could be relevant. And so that's the way we kind of see the future of finance. It's about exposure and being agile, movement, and making sure that that is accessible to everybody around the world.
Cool. Thank you.
No worries. Thank you.
There we go.
Hey, Marty, I got a follow-up.
Yeah, go ahead, sir.
Yeah, so I'm curious. I know we're all waiting on the Clarity Act and all that so that we could be less restrictive and actually use your app and things like that. Because right now it's painful. You have to use VPNs, et cetera. And then you risk the compliance issues related to like businesses that are using the services. So my question is, how fast after the Clarity Act are you going to be able to spin it up where I can access and use your system?
That's a great question. Number one, you actually don't need a VPN. You can just swap into any of our tokens, so our stocks or our metals on different swap dexes, right? So there's no particular app at the moment that we have. All that is our ecosystem tokens out in the ether. So you can go onto our website. You can find that at Remora Markets, go on the X account, drop it a follow, go to the bio, right? Go to the bio of the website, and then you'll be able to see the exact token addresses. All you have to do is swap your USDC, swap your token, swap your Solana into SPYR, into GLDR. And all of a sudden, in 2 seconds, you are exposed to the S&P 500 on chain and you're exposed to gold on chain. It really is that simple. So you don't need a VPN. There's no particular app at the moment. But to answer your question, for down the line, when we do have that app, will we be agile? Absolutely. How can you take me for my word? Because of how we were so fast to market with bringing our metals on chain, right? We were the first to bring metals on chain for Solana, leverage trading. I feel like I'm just repeating myself quite a little bit with the details, but you can definitely rely on us to be the fastest to market, to be the most agile within the market, to give you whatever you want in the market.
Gotcha. Yeah, I'm just curious about the app and all that you were talking about, how it worked. So
This is not a particular app. So if you're listening in and you think we are an application itself, that is not exactly true. So what we are is we basically bring these different tokens on chain. So how you may swap into Solana, you swap into Bonk, or it really is that simple. So if you're
Yeah, I
confused,
apologize. I was saying,
Oh, all
you
good, all
said
good.
it's like the all in one place. So that's what I was saying. Like, I want to get to Remora and then have you guys, manage all the other activities that you mentioned.
No worries, man. Thank you.
Okay, should we step through the website?
Oh, let's.
Okay, so everyone go to remoramarkets.xyz. Let's do a little bit of a 101 here. That's what we like to do on the space. You can invest in global stocks no matter where you are. It's nice and fast and responsive. There we go. You can scroll down. You can see all the FAQs and things. Really cool. Nice design. There we go. It's everything you've just said looks good for traders. And then the products. Okay, there we go. So how do you guys decide which tokens to list? Is there like a public request process? Like, what if we said we'd really like you to list Oracle?
Oh, yeah. I mean, that's a fantastic question. Number one, how do we go about, listing all these different tokens? I would say it really is about listening to our community. Why were we so fast at bringing metals on chain? It's because of the same thing. We had a lot of the existing Remora users, our community telling us like, hey, it's great that we have stocks. We kind of want metals on chain too. I want some of this price action for gold, and I'm unable to go buy it in my store or whatever because there was no physical gold, and it was sold out in a lot of different places around the world, right? So that it really is that simple. So we don't have a formal submission process at the moment, but if you're listening in and you want to learn more about what we're doing, or if you have suggestions on what sort of assets you want on chain, like MartyParty said, right? Maybe it could be Oracle, could be Apple, could be whatever else. Just DM myself or DM at Remora Markets on X. And I promise you, if there's enough demand, we'll definitely bring it on chain. Why the hell not?
There you go. So there we go. You've got NVIDIA, Tesla, Circle, SPY, MicroStrategy, gold, silver, physical platinum. Oh my God, I didn't know you had platinum. That's insane.
Yes.
I always wanted to know, are you going to get uranium and can I self-custody it?
I will let you know once again.
No,
First
sorry.
one to know will be here.
That's a bar joke. How do you self-custody platinum and uranium? Okay.
You let me know.
You got palladium and you got copper. Okay, so everyone, you can see there very clearly, and there's links to the Solana address. I'm going to click one of them. It'd be really cool if that just went to SolScan, but anyway, I'll open up a SolScan. Here we go. I'll open up SolScan, put that program address. We're Solana people. We don't use contract address. What a dumb name. It's a program address. There we go. There's the token address. This is a program running on Solana. People, you know the way I describe it. Solana is a global supercomputer that can run any program by anybody. This is the token program. It starts with FJUG. There you can see it. It's got a price of $414, a market cap of just under $1 million, and a supply of 2,026. Okay, and this is now the representation of Tesla stock in this case. There we go. Am I correct in that? Tesla stock.
Absolutely spot on.
Okay.
Yeah, that was Tesla stock.
How do you come up with current supply 2026?
That's the amount of minted tokens that we have that are kind of circling the ether at the moment. So if there's more demand, then we will mint more. We'll have to purchase them from our brokerage, bring them on chain. Again, the very simple process.
So you do it as people purchase on the site, you mint.
Yes.
Got it. So when I buy, then the value goes from my wallet to a intermediary wallet that you have, which then you send to a wallet of your broker to purchase the stock and put it into what I would call some form of escrow, correct?
Yes, and that's pretty much it. So if there are existing pools where you can buy with the existing liquidity that we've put up in these different AMMs, then you will be purchasing directly from those AMMs first. But assuming that liquidity runs out, then that is exactly what we would do. We would purchase some more shares, mint those tokens, and bring them on chain for you guys to buy more.
Brilliant. Okay, holders 248. There we go. And then you can see all the transactions nice and cleanly. Let me look at the analytics. There you can see the token supply. You can see the token TVL. Okay, very straightforward and easy. Okay, so for somebody that, obviously I can't buy because I'm in the US right now.
Mm-hmm.
But if I was in Hong Kong, under the product section, I'd be able to click purchase.
You be able to click, you mean swap?
Got it. So this is pure DeFi. So you get the
Oh, dude.
you get the Solana address and you go to Jupiter or whatever and you swap.
Absolutely. That's the whole point, right? We want to make it as
Yeah, I
easy as
love it. I
possible.
love it. That's the way it should
Thank
be.
you.
That is true. Yeah, I'm not a big fan of these so-called Web3 platforms that come out that have some form of like, deposit funds with us.
I agree.
I think it's a joke. I don't go near those things. If it's not here's the address, swap it on DeFi, I don't think it's Web3 in my opinion. So
Exactly.
So you get the golden star right now.
Thank you so much.
you go.
I know you can't see, but I'm taking a bow right now.
Yeah, there you go, guys. So you can just basically just take the Solana address, go and swap it. Do whatever you want. Go ahead. Make his name.
Let's go.
Fantastic. That was a terrific presentation. Yeah, I think I'm pretty convinced that this is the future.
Absolutely. I think the entire world agrees with you, and so do our numbers.
So quick
Our
question. Have
volume,
you
our
spoken-
traders,
Have you
everybody.
spoken with Nick Dukoff at Solana Institutional? What are your inroads into the Solana Foundation? Like how are you getting some assistance to grow this? Do you have other institutional partnerships on the way? Are there things you can share about your growth plan? Go ahead.
Yeah, I've talked a bunch about our growth plan, right? About including these different verticals that we want to bring in, what our general vision is and what we're building towards, whether that's from a narrative point of view or a hardcore product point of view. But as for your question in terms of the Solana Foundation, I think they've been very helpful. They've been very lovely. I think Elizabeth Laguna as well in particular, shout out to her, the new ecosystem marketing lead. She's been fantastic and linking us up on a little bit of a Remora roadshow that we've been doing recently on a bunch of different spaces, live streams. She's making sure people know that you can have access to all these different asset classes on Solana. In my opinion, that's going to be the home of all crypto because this is where the world lives. This is where the transactions happens. This is where we're bringing the world on chain, bringing RWAs, real world assets on chain. Now, in terms of Nick Dukoff that you mentioned, I personally haven't had a conversation with him. I think our team might have, but it was a while back. And we've just been so locked in, man, that we haven't really had the time to explore too many partnerships at the moment up until Jan. So over the last month or so, it's been crazy. Even at Consensus, the inbound's been insane. Even back in Breakpoint, in December, the inbound was really good. And it's just been building up. So we're going through them one by one. Shout out Shane and Robert, our partnerships team. They've been absolutely killing it behind the scenes, making everything happen. And we've been working with a lot of different players, but on an institutional level, I'm not allowed to say just now. But what I can tell you, we've got some very, very exciting partnerships on the way. Follow us. Stay tuned for more. It's going to be a great fucking year.
Andrea, are you with us?
Yes. How you doing, ma'am?
Love you. It's been a while.
I only do podcasts with you. Everybody else, no way, man.
We've had the best time. I'm
Yeah,
so
you're-
glad you're part of this, and you're definitely going to be doing more of these with me.
Absolutely.
Ladies and gentlemen, this is the one and only Andrea Perlak, CPA. And you can follow her at Andy Perlak. Is it Andy? Is your husband Andrew? Or is Andy your nickname?
Andy's my nickname because nobody ever remembers Andrea correctly.
There we go.
Yeah.
Andy Perlak _CAG. What does that mean, CAG?
A crypto accounting group. That is my first crypto organization I started, and now we're up to 7. So I always use that as my founding, like where I point everybody. So we have a crypto native accounting firm to help everybody out get their crypto accounting correct.
Okay. So, Andrea, I'm going to set it up by giving you 5 to 10 minutes. Tell everyone about yourself, your career, all the interesting things you've done, all the interesting places you've been, all the interesting things you've seen, your history with crypto, your history with the World Bank, what you do now, how you started this amazing business, and we'll lead into what we're going to talk about today.
I started my career in Big Four, as many accountants do, KPMG, and I was in both the Philly and DC offices, both an auditor and CFO advisory. I switched over to a controller of a publicly traded company in banking for a while. Then I switched to the World Bank during the financial crisis, and I ran their bond and derivative group, which was really fun. Working in treasury at the World Bank is amazing. It's an amazing group of people. But we pivoted towards crypto. After the financial crisis, I felt called to the space when I saw what was happening. All the banks were getting bought out or saved, and the individual people were not. That's why I want to join crypto, and that's how I got over here. I worked with a bunch of different groups actually when I first got into crypto, and finally moved over and started my own thing because nobody knew how to do crypto accounting. We have a really wonderful group of people across the globe. We're in 26 countries. We do a huge wide range of clients. We honestly touch everything we possibly can because our ethos is to work all of the different areas of crypto to understand it better. So whether it's a BTC miner or DeFi or funds that are specific to crypto, the whole 9 yards, everything we can possibly get our hands on, we do. And now I've been doing a bunch of SEC registered clients. And the more fun thing is that I've been doing some CFO advisory work on the inside of companies, really heavy diving into DeFi, real world assets. So I've been really, really excited about that process and have learned a whole bunch. So what I originally wanted to talk to you about, Marty, was fundraising, because fundraising has changed so much from 12 months ago. And I am actually trying to raise for our company right now, which is called Masir LLC. Again, DeFi, real world assets. This is not a pitch, just saying it is very different when you're on the inside trying to raise. I'm also a GP at a venture capital fund. And that perspective, having both sides of the coin, makes it really, really interesting to me to understand the trends and what's working for groups, what's not working for groups, and who's getting the money and how much they're having to give up in equity to get those folks in the pipeline. So that's what I wanted to talk to you about.
Yeah, we want to hear about that.
Awesome.
Yeah, maybe you want to, once you're done with that, maybe you can talk to us a little bit about crypto taxes. I know it's a horrible, yucky subject, but we ask it all the time. Literally, at least 5 times a week, people come on the space saying, what do I do about my taxes? And we kind of say, we're not tax accountants.
Experts.
We're not.
Yeah.
So talk to Andrea.
That's awesome. Okay, so let's do the fun stuff first,
Yeah, go ahead.
okay? Okay, cool. So I don't know how many of you guys have started your own organization, you're builders, and you're trying to raise funds. But what I'm seeing over 2025, so it was a monumental year for venture capital to invest in crypto. So that's really good news for our space, right? If you love crypto, we want money in the door. The interesting thing, though, is the groups that are getting funded are radically different from 2025 than 2024 or especially 2022. It is mostly institutional groups coming in, and they're doing late stage projects. So, for example, Binance got 2.4 billion in 2025. Pretty nice number, huh? I'll take 2.4 billion. Like one company got 2.4 billion. That's to me monumental. Polymarket got 2 billion. Circle got 1.1 billion to expand USDC across the globe. These are really big numbers. So just the fourth quarter in 2025, $8 billion was invested in crypto. That's a lot. The other thing that you see is M&A activity in 2025. So while we technically call that raising, it's a little bit different, right? A lot of buyouts. So people made their money and were able to get out. But we see numbers, if you look at how much you raised in 2025, it's anywhere from 25 billion is the low end of the estimate up to 50.6 billion. And that is more than double of what was raised in 2024. Okay, so if all that money's flowing into big orgs like Binance and Polymarket and Circle, what's happening with the other groups, right? Are they getting anything as well? Are they doubling in size? Unfortunately, the punchline is no. A lot of really pre-seed, seed, Series A groups are having a much more difficult time getting in. The bet seems to be with established projects, and they're going with 3, 4, 5 areas. So one is the infamous AI crypto convergence effort, right? If you have AI in your deck, you are more likely to raise funds and raise funds at a better valuation. The other 3 areas are stablecoins, infrastructure, and trading groups, which is fascinating, right? So if you're not one of those groups, it's going to be pretty darn hard. Notice I didn't say things like NFT or even some BTC. We all know about the DAT-ish convergence, right? Everybody's going after DATs right now. So to me, this is a really interesting time because everybody's leaning towards those late stage projects and leaning away from all the startups. And crypto is, to me personally, it's startups. It's new ideas, it's invention, it's moving fast. What do you think of that, Marty?
No, I think that's 100% right. I think even more so, we've been seeing this correlation with software stock, and software ultimately was a startup culture. I think crypto's just joined that flock. I think it's just there's a new startup software, and whether it's adopted for, its glorified use case, which is monetary system, a replacement for cash, store of value, payment rail, needs regulation, needs time, needs maturity. Which is all happening. I think with market structure sitting in the Senate right now, maybe months away from getting signed, that might be its big catapult. That might be when it divorces from software stock and is seen as more than just software. But I think until then, it's just startups and speculation based, right?
Yeah, totally. And what I always speculate about is if you were an early stage or a pre-seed, seed, again, Series A level, what do you need to do to get investment, right? Like, have you seen anything that has been really successful in terms of groups raising? I mean, I have some ideas, but I'd love to hear what you think.
Through the course of my spaces, I've literally spoken to, I would say I've interviewed 50 founders.
Yeah.
And when we started doing spaces, this is years ago, they were all very basic rudimentary ideas on a very immature infrastructure. And I would say 3 of them are successful and now part of the ecosystem and actually profitable. So I think just like software, which I did before, and I've been through the cycle before in the .com, it's roughly about a 1 or 2% success rate if you really have a truly good idea. And then the rest of it is luck, timing. I mean, look at Hyperliquid. They were a startup that just hit it exactly at the right time with perpetual futures and are now a part of the ecosystem. So they nailed the luck part. They're a good team, but also timing. So I think, and then if you look at Toli, he'll be the first to say bear markets are when you get that opportunity. This is your time to build. This is your time to come up out of the ranks. It's never the time at the top. It's always the time at the bottom when you get the opportunity to build and everyone else disappears because they can't make it. So I see it as both things. I think it's an opportunity. I mean, obviously it's an opportunity for investors because you get $60,000 Bitcoin again. You get a 50% discount. And I think it's a great opportunity for builders because everyone in your space, even if you've got an idea that everyone has, probably is going to go under because their reserves and their collateral is all bought higher and their margin loans need to get paid and they're pretty much going to fold. So you can jump on that opportunity and raise money at a lower basic price. And so I think it's a great opportunity. What I think people don't know is how to raise money. Like, how do you raise money if you don't have a rich friend?
It's really hard. I mean, what I've seen successful or what works the best is honestly just some really good storytellers. You have to have a really articulate person who can speak to groups that don't even understand crypto. The crypto natives will get it every time, right? But a lot of funds are coming out from TradFi. And if you can't explain your product to someone who's not on every DeFi platform, then you're never going to make it. What's the best deck that I've ever seen? I think it was Tether. It was like 4 pages or something. It's just like so crazy simple. If you can boil it down, you have to have that communicator who can talk to folks. And then you have to have the idea which backs it and the tech which backs it. I think there are a lot of groups who have a lot of the pieces in place, the right people, even the right timing, but they need to pivot. And the groups that can pivot to this crazy environment, those are the ones that are most successful. And I don't mean like tweak, I mean like full blown 180s over and over and over and over again. Have you seen a lot of pivoting from the groups that you've seen that are successful?
Yeah, I mean, I'll just go back to the anecdote of the .com. Every startup in the .com was pivoting towards the peak. Everyone was riding the wave of what was hot, the narrative. I always go back to narrative. Raising money is always about a narrative. You know, you don't raise money if you're a profitable country. You don't need money, right? That's growth.
Right.
That's a second, that's not a seed round. So for seed rounds usually have an innovative idea that's unproven. And typically there is no track record. No one's done it before. Weak macro climate, you know, it's a big gamble for an investor. So you normally get a lower seed round and have to prove. It's all about proof. So it's all about the quality of the idea. So if you're chasing other ideas, I think you're going to be less lucky in this environment than if you have a brand new idea. And I think crypto is special because, in my opinion, the infrastructure is very solid. I think the infrastructure has passed the adoption stage and is now in the, you know, I would call it Series C, Series D stage. I wouldn't say A or B. I think especially the regulated infrastructures and chains, Bitcoin, Solana, Ethereum, etc., they're way past. Is this real? Is this going to work? So if you build on those things, and especially if you build a killer app, I think the time is ripe. I think this is the time. I think if you copy another app and make just another decentralized exchange or another perpetual futures exchange, you're not going to have any luck. But
Yeah, this market does feel flooded.
And Andrea, I'd love to hear your thoughts on this, but we've never in our lives been in an era where you have AI. If you can literally go on AI right now and say, give me an idea for a startup on Solana. And it will literally give you 20 ideas.
Yeah, I mean, it is absolutely unbelievable. We cannot do our jobs because, again, we have a lot of different companies that we work with. We can't do our jobs without AI. It is no longer feasible to be in that space. Like, I feel like I am personally burning a hole in the ozone by how much I use AI. I mean, from, 6 a.m. till midnight every night, I'm using something. I'm using Claude or GPT or whatever, right? And we're using it for everything. We're using it for ideas. We're using it to create contracts because we're in jurisdictions like ADGM, right? I don't know much about the Abu Dhabi global markets, but it's common. It's all right there. So if you take a US based contract and you tell it to make it ADGM compliant, follow those regs, it does it instantly, right? Literally financial models that are stunning. We build out of Claude, but decks that are stunning. And I mean, it takes 30 to 45 seconds to come through with these different things, right? You can do an entire company with one person with AI. And it's a complete game changer, which also means that you have to keep your costs down, right? Like, if everybody, your competitors, can do this as well, if you're going out and hiring extraordinarily expensive tech or extraordinarily expensive fill in the blank there, right? You are not going to be competitive if you have the same exact idea. So you have to use it, and you have to use it well and wisely and consistently. So I think that is a complete and utter game changer.
I agree with you 100%.
It's like, to me, like, it's shocking how much we use AI. It doesn't even permeate normal people. I say normal people because crypto people aren't normal, are we? But it's impossible to explain to them what we're doing in terms of AI, right?
Yeah, how is it affecting accounting? My brother is a partner at Deloitte's, and he says it's eroding their staff exponentially at this point.
Yeah. So to me, AI for accounting purposes is a little bit of a mixed bag. I mean, I remember, I think it was GPT like 18 months ago, didn't pass the CPA exam. And it took, I think it was 3, 4, 5 weeks for some people to keep loading information into GPT for it to learn how to pass the CPA exam. Well, now, now it knows how to do things, right? But now what it does a pretty darn good job of is fiat accounting. So if you have to, classify a whole bunch of expenses, it's pretty good at scanning your credit cards, pushing it in the right direction, getting it into your ERP pretty seamlessly. You can actively teach it to make sure that, if you have some weird nuances. Sorry, that's my dog. Sorry, Marty.
No problem.
I have 3 enormous dogs and they're awesome. I love my puppies. But you can teach it fiat accounting, right? Revenue pretty well. What it does a terrible job on is intercompany. So if you in our crypto space, like the typical setup, you have your Cayman org, you have your BVI token you issue out of, then it'll run back through a Delaware LLC with an MSA agreement in between. That's like a typical setup, right? It cannot recognize the flows back and forth, especially in something like QuickBooks, because you have to keep it separated in those 3 different systems. So that does require some manual intervention. On the other hand, if you're trying to do crypto accounting, if you're trying to pull in transactions from DeFi, it's still, it's very, very, very helpful, but it requires extreme manual intervention. We'll have a typical client come in with 100 wallets. Well, we run it through our different systems, and AI produces the fact that we're missing a whole bunch of wallets. There are 1,000 wallets you haven't registered. What are those? So it does identify that there are gaps, but it doesn't know how to fix it. If you're cutting edge on anything, whether it's accounting or tech or whatever, it doesn't feel like AI is able to solve things for you. It just tells you there's a problem. Most of the time, not even all the time. But I can see why your brother at Deloitte is feeling like it's eroding, because we don't need the expertise of an expensive firm like Deloitte. I think when I was at KPMG like 20 years ago, I was a senior associate, was my lowest level, and I was billing out at $800 an hour. By the time I left as a senior manager, I think it was $2,000 an hour. And this is, again, 20 years ago. So those really high rates, no one's going to justify that anymore. There's got to be a really, really, really good reason to do it. The only reason we use Big Four now are audits. If you're a really large organization like Tether or Circle or whatever, you want a Big Four audit firm to come in and audit your financials to make it legitimate. That's why you use them.
Amazing. What is currently your experience with AI, Andrea? Are there specific AI companies already popping up in the accounting industry? Like, what are you seeing? Like, is it just Anthropic, ChatGPT, or are there specific consulting companies, specific specialized accounting firms? And the other question I had for you that I've always found quite interesting is that if you talk to someone about taxation in crypto, you can literally throw a wallet address at a certain software and it can produce a general ledger, an income statement, accounts receivable, do your taxes. I mean, it's all transparent, right?
It depends. Actually, we're talking with our friends at Solana, but Sol is actually one of the harder tokens to account for a couple of technical reasons. But if it's more like a straight up ETH wallet, then absolutely, right? If you have a weird wallet, a weird chain that you're on, then it has a much harder time. So yes, if you have all of your transactions in one wallet, then it's pretty easy. It's pretty straightforward. You can run that into an Explorer, which then feeds into, I would use Claude to do that. Perplexity is also another good one for that. But if you have, none of us have one wallet. I don't know how many wallets you have, but I got a lot of darn wallets. I have probably 50, 60, 70 plus personal wallets for various reasons. One on Cardano, one on Sol. You know how it works for different purposes, right? And it's when you have those intercompany, if I'm moving BTC from one wallet to another for whatever reason, it won't catch the cost basis movement. So if I bought BTC at 92 on one wallet, transferred it when it had gone down to 70, it's showing that in that case, it's a 20K loss. But you would want that cost basis to be carried over to that new wallet. And that is something that most AI programs are not yet capable of doing. So what we have is we have subledgers. We have Cryptio. We have Trace, which just got bought out, by the way, by Fireblocks. So awesome for them. Congrats, guys. We have CryptoWorth. We have Bitwave. There are about a dozen in the space. And what that is, these subledgers, crypto subledgers, they're just an ERP system like QuickBooks or NetSuite that go onto the blockchain, scrape it, try to get the data in, and then you create rules. So if it moves from one BTC wallet to another, it counts that as a internal transfer, and your cost basis, which is important for taxation purposes, is transferred over. Does that make sense?
No, absolutely.
Okay, very good.
I think maybe it's a good idea to open it up. Should we open it up for some questions? So there we go, guys. Kenneth, I want you to ask your question.
Yeah, you knew I was going to have one.
Oh, I'm terrified.
Yeah, I got a question. So that is very interesting. First of all, so I have a little experience in this area recently trying to do my own mess of DeFi looping and K vaults, and the list goes on, handing that over to the CPA or tax people and looking at it, and then it's spitting out saying that I'm probably going to owe millions and millions of dollars because I couldn't keep up with all the prior gains and cost bases for the last like 10 years because of wallet-to-wallet transfers, moving BTC into ZBTC, and it counted that as a disbursement and all kinds of craziness. So I totally get what you said about the on-chain with Solana and all the inherent things, especially like dust and everything else that it's trying to calculate in the transactions. Just personally, it just said like 35,000 transactions. So that's where I started. And I tried every tax software out there, you name it. I tested it all. Then I stuck it into 4 different AI machines trying to figure it out. And exactly what you just said, it's a manual process at the end of the day. And all the AIs turned around and told me this is too big a task. You cannot do it. So I'm with you. And I want to understand a little bit more about how you're solving those problems, even on a business level, because that would definitely benefit a shit ton of people.
Yeah, so I totally empathize with what you're going through. And I'm sorry because you are ahead of both the tech and the federal government. If you're a US citizen and have to file US taxes, which it sounds like you are. So my genuine apologies for everybody else sucking and you not sucking, because I bet your accountants looked at you and said, looping, DeFi, what? K-vaults? Like, what are you talking about, right? The genuine response right now, and this sucks, but it's completely manual. So when we get DeFi groups in, I feel terrible about this. We really try to keep our prices down. We try to be competitive. But what I've found is that on every DeFi group, I've been losing money because it is like there's nothing you can automate. It just doesn't work. So did you try crypto tax calculator? Have you heard of that one?
Yeah, and the other trade, there's like 5 of them.
Yeah.
I gave up. I fired the CPA. I fired the tax people. I fired everybody. I'm doing my own.
Yep.
I spent a lot of money because a lot of them said, like Awaken, those guys look really sharp. The interface is nice. But when I went to go ask questions, it was like, well, you really need our white glove treatment. It starts at $5,000, goes up to 30,000. Yeah, no, I ain't doing all that. It's just I'm a one-man gang that stacked a lot of crypto over the years, and I'm living off of it. So this is too difficult. And what all these companies want and all their stuff they're showing off, it's really cute. But at the end of the day, when you start digging into it, it's not right. So I fixed it. I cleaned it. I stuck it over on my company one, and I got a K1 coming out in a couple of days now. So that's what people don't get yet. And especially if you're on like Solana versus ETH, because ETH is simple, right? Because it's all there. Solana's a whole different ball game. And I got deep into that with Marty and these guys, and then topping off with trading and perps and all that mess, and complicated that on top of that with the looping and the vaults and blah, 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 blah. So in the day, yeah, I had 35,000 transactions, one person, 5, 10 wallets, whatever it was, right? So the people like that Marty educates daily, by the way, which is awesome, is they need this, what you're talking about right now, because all that shit's coming. They're going to look at April and go, oh, damn. And then they're going to talk to their little TurboTax guy or go talk to their CPA lady or whoever. And they're going to come back around and go, yeah, this is great. Yeah, you owe, $500,000. And they're going to shit their pants because it doesn't it doesn't calculate it right. It doesn't figure it out. It doesn't do the math. It doesn't matter what AI you stick it in. It's not there yet. It's a child and it's learning, but it's not quite there. Like you talked about how long it took it 5 weeks to get to the CPA exam. It's the same scenario. We're at the little cusp of this whole tax mess, and it's very difficult. That's my take on it. Sorry, I'm still passionate about this, but it pissed me
No,
off.
I mean, you're honestly 100% correct. And what I've done, and I know this is not a great solution, but I've actually gone and testified in front of the Tax Ways and Means Committee on Congress in Washington, D.C., saying you can't punish people when they simply cannot do their taxes accurately. It just, like, you have to give more waivers to these groups. You cannot penalize and go after these individuals, especially individuals, right? Because what you're talking about is trying to do it correctly, and it's impossible. The tech doesn't exist. So I think it's really, really important. Like the 1099s, no offense to Coinbase here, but consistently the 1099s that come out
Mhm.
of them are inaccurate. The cost basis isn't accurate. So what I always recommend to my clients, especially for folks who are keeping it pretty simple, right? A lot of people just go into BTC or ETH or one of the dinosaur coins and then hold, right? They barely have any transactions. So hold your own cost basis. And if you disagree with what Coinbase sends to you in the mail, there is a box when taxes are done. So if you outsource your tax preparation to another group, tell them your cost basis is incorrect. Hand them the worksheet, circle the number and highlight it and say, this is my cost basis for this transaction. You have to be responsible for your own cost basis. And in DeFi, we can't do that, right? That's like super crazy hard. It's a total, like when you're talking 35K in transactions, honestly, that's not too bad. Some of my clients have millions upon millions of transactions. And it takes, like, you have to keep up with it on a monthly basis. You have an army behind your taxation calculations. So what you're thinking about when you're doing that is, are you making enough money to make it worth the risk? And then to the cost to keep up with your taxes.
You are so accurate right now. I'm loving every bit of that. And you're 100% correct. But people don't know, like on the form to check, please read the Coinly log. It's the source of the truth, not what Coinbase said or what I pulled off of this other, whatever. That's the issue. So, like, just to kind of give it to normal people that are just doing their own, like I personally had to use Coinly for years and it was great. But like I said earlier, when I went into this part of it, it's horrible. And I had to, try to clean it up. And I spent, Marty and Teddy know, because I just disappeared. But those difficulties that you're talking about, you're 100% accurate, whether it's your personal and or the business, that there's a big, humongous gap on what people can actually hand over to the IRS and say, I'm good with this. I signed it, what we can do about the whole damn thing because it's so difficult. And I don't think people I think there's a gap, Andre. There's a huge gap for just normal people. If you've got small businesses or whatever, and if you top in the crypto, it's insane. I mean, it really is. And yeah, I'm glad I stayed to listen to this.
It's interesting because investing in crypto is becoming much more ubiquitous for the average, like, small business owner, right? They want, as a part of their treasury management, they want BTC on their balance sheet, right? That is a thing that's happening in the United States across the board. And if you look at the numbers, I think it's like 30% of Americans either actively own some sort of crypto or want to own crypto. So if you take that percentage into mind, we have to be able to, like, there are good, honest people who are trying to get their taxes done, who simply, it's way over their heads. What I've seen with groups that can afford it is they simply keep all of their trading offshore if they're US citizens. So they might run it through their BVI organization, British Virgin Islands. They will, all of their ins and outs, because there is no tax calculation there. The only tax calculation is when it comes back to the founder. So if you have enough money, you can throw 100,000, a million, whatever you want, into your BVI trading org. and then do ins and outs, do all the looping you want, loop to your heart's content. And then when you want to bring some monies back into the States, you have that $1 million that you invested in BVI that is now worth 2 million that you're bringing back in. Cost basis is $1 million. You just made $1 million. So that's what you're paying tax on. But you don't have to go through the huge macerations of what you and I are talking about because it's offshored. But that requires real funding. Setting up the BVI org is about $35K a year USD. And then there's 15 to 20K that it costs to maintain that organization because there are all sorts of requirements. So again, you start to look at, gosh, am I going to earn enough money to offset that? Well, a lot of groups, that's a no-brainer. But to individuals, it's a clear tax loophole for the rich, right? For a wealthy company. So I really want to make sure that individuals can take care of themselves and be above board with the IRS. And that is a very difficult thing to do if you're in DeFi.
Well, yeah, no, the other comment that I would add on that is all of us that have been in crypto for a long time. I mean, it's always been like in the shadows and we couldn't really bring it up, to the CPA. They were just like, oh my God, that's some shit that you're investing here, nuts. And now that it's coming out in the public and it's shining through and everybody wants it now and it's becoming balance sheets and everything else, this is the next leg, right? So the next leg is when it's integrated into our working system that we have and use every day for payments and banking and whatever. Why is it when I want to do taxes or reporting or whatever, why is it so difficult? And why is it not in the open? And why are they not spending any time telling me, okay, you have Bitcoin and you have this, it's just a line item. Thank you very much. Have a great day. Why is it not like all the other crap, like the stocks and bonds and everything that the brokers send out?
I can tell you why. Because I've talked to them. This is really rude and it's totally going to get me in trouble, but I don't care. Trying to talk to congressional members about crypto is like banging your head against the freaking wall. The average age of congressional members is like 72 or something like insane, right? Like you're literally, they're like back on dial-up internet. So when you start talking to them about anything that resembles the level of complexity we're talking, it just doesn't stick. I mean, some of the staffers are amazing. Some of the staffers totally get it. They have their own wallet. They actually, one of the rules that they just passed is the ability for staff members and congressional members to be able to own crypto so they can even have an opinion about what they're voting for or against, because before then they weren't even allowed to trade, right? Or to own anything. So now that is through, I believe that actually passed like a year ago, something like that. Hopefully our members will get more experience going on and they'll see their Coinbase 1099 come through and it's going to be terrifying, right? So when there's motivation for congressional members to get it right, then I think things change pretty darn quickly.
Andrew, sorry, Wes, I was going to shut up here. I was just going to tell her, thank you very much. And I appreciate it. And sorry, I jumped on this with Marty so hard.
No.
You knew I was going.
DM me if you want to chat privately offline. I'd be happy to talk.
Oh, that's beautiful.
Anybody else? Mel? Anybody else?
Yeah, I'll go. Yeah, I'm not sure if 72 is the average age or the average IQ of our Congress. That's another story.
Yeah, I might have gotten it wrong. Maybe it just feels that way. I'm totally going to look it up while we're chatting.
Like we can explain it to them with the best intentions, but their ability to understand it is a whole nother category.
Yes.
But I wanted to go back to fundraising. I'm actually getting into this myself. Previous, product market fit in market right now, wants to expand to other chains, going into the usual kind of path. I do have some sort of TradFi sources I can reach out to, but are people finding it successful going to these conventions and meeting people that way? Or what you mentioned earlier a couple of different ways that people are finding success meeting interested parties that are investing in projects. And I know that they're looking for more larger, already in place projects, but where are startups getting success?
Yeah, it's a fantastic question. And honestly, the place I've seen the most success is when you already have a relationship. I mean, that's obvious, right? If you know people, they're more inclined to help you out and connect you, right? So if You've exhausted all of those resources. What I found the most success in is you go to your ecosystem. For example, one of the groups I'm working with right now is heavy into climate. So they are going to VCs that specifically want to invest in environmentally positive projects. And that they've experienced a lot of success around that. There's a Latino group I worked with that is going to groups that are really interested in supporting folks from their native countries or neighboring countries, that kind of thing. So they've been hyper successful. That's like super pre-seed funding, family and friends rounds, right? But these family office meetings where they bring in folks, sometimes that works. The problem is they're really low dollar amounts. They're like 50K, 100K. And it's really hard when you raise at those really low levels. Your cap table is going to be a total wreck, first of all, because you're going to have 5,000 people on there, right? So if you can go for larger amounts, if you can make a minimum of 250K, it is worth it long term. If you can't, we have to go down sometimes, right? And there's no
Yeah.
shame on it, but just realize that there is a catch, right? So I would rather raise at a slightly lower valuation at 250, then I can refocus my efforts on actually building again. And that's part of the pitch is like, look, if you come in, fund us at this full amount, 250, 500, this will sustain us till this next level. That seems to be the most successful for folks. Does that help at all?
It does. It does.
It's interesting.
So
Yeah.
no feedback on anybody really finding success at the convention kind of thing. It's more just for developers.
So when you say conventions, you mean like ETH Denver
Well,
next?
ETH Denver is coming.
Yeah, I think it's really, really good to get your name out.
Yeah.
So I'm going to be at ETH Denver next week because I want to promote a couple of these projects that I'm working on that are doing really, really well.
Let's meet up. If you're out there, I'll give you a DM.
Oh, that'd be awesome. Please do. Monday through Friday, we'll be there. And I don't know which space you're in, but Friday is DeFi Friday. So I'm looking forward to that. But
We'll be there.
But when you are fundraising, it's as important that people hear your name over and over and over again. So some of the most successful groups blanket people in not DMs, but X posts, things like this, so that they hear your name and they get comfortable with what you're doing. It adds a level of validity that seems to carry through in terms of making groups comfortable with you. When you are trying to raise large amounts, you have to meet with people in person. And it usually is a process, right? Like you might meet up with them once, explain your project, then come back and say, what'd you think? Here's my deck. A lot of people hold their deck back. They don't send their deck first. You want to get that interest so they'll actually read it, because otherwise they'll get the deck and they won't look at it. That process, expect a 3-month process from start to finish at a minimum.
Mm-hmm. Yeah, and that's what I've come to expect. I actually had a startup in consumer packaged goods, dietary supplements. Took it public on the TSX, had a huge team. Crashed it in COVID. That's another story. But so I'm used to going out and raising in a more traditional sense. This will be my first foray in Web3, but I suspect it's fairly similar. Any pointers?
Yeah.
What's the difference?
Yeah. There's it's a completely different world.
I'm pretty sure I know a lot of the answers already, but just pick one.
It's so interesting. So first of all, the valuations are along the line. They're much higher for less. So a company that is really just beginning building, they might come out with a $20, $30 million valuation. Whereas in Web 2, we'd be crunching numbers and we can be coming up with a $10 million valuation and thinking that's a stretch. Well, in Web 3, that would probably be a baseline 30 million valuation. It's a different mental process in terms of what your value is. And you have to understand that and be able to argue that and have really stellar financial models going into these conversations.
Financial models of revenue and EBITDA.
So, if you issue, are you going to issue a token? What that token liquidity is going to look like? What's your
finance model?
Yeah, and which like if you're on this blockchain, how much revenue will it bring, and what's the volume going to be on that versus a different chain? Like it's a really complex structure, right? It's not just you're going to go issue on the New York Stock Exchange. It's like you're going to go issue on 12 different chains, and it's all different incentive levels and all that kind of stuff. So it's a much more complex ecosystem, and one that is not entirely streamlined yet. You have to really understand it inside and out before you ask for a dollar.
Yeah, because I can imagine that a lot of these revenue sort of ideas, they might have a lot more upside potential than they do product market fit, and there's still good investment in that. Even if you can't really see how it works, you kind of have to still deliver that tacit opportunity revenue and really explain it well.
Quite frankly, I mean, I said this at the beginning of the discussion, but we're on AI from 6 a.m. to midnight every night. I mean, you are constantly running through what if this, what if that, if I bring this market maker in, what could be the pros and cons? Should I launch in the US? Should I stick to Europe? What should my legal structure be? All of these different things, constantly trying to dig deep and really understand the ecosystem. I feel like I'm studying every day for hours and hours and hours. It's hyper important to get your structure correct. Most projects in the US didn't launch in the US. It launched out of that BVI Cayman thing, depending on the exact infrastructure, Panama. There's a bunch of different places we used to go. But now we have a lot more organizations launching out of the US because of the environment being more friendly. But don't forget, we still don't actually have legislation. We just have Paul Atkins saying we're not going to go after you.
Yeah.
And, that is pretty high risk. So there is a lot of validity to understanding whether you should stay in the States when you hit the trigger point to go to a different country. It's a completely volatile environment, both regulatory wise and liquidity wise, which is what makes it exciting and interesting. And the opportunities are just through the roof, right? I don't think there's any industry that has more opportunity right now outside of AI, but you really, really, really have to keep on top of it.
Yep. I can imagine all of that would be super important to just maintain, don't be tone deaf to your investor as well.
We have like 2 to 3 meetings with investors a day. It's crazy. Constantly keeping people in the loop. I mean, the other thing is a lot of groups are going public now in the US, and it is a totally different environment for Web3 people to get into being a publicly traded company. And if anybody's considering that, DM me. It's a really different process than us crypto native people are used to. And it takes a genuine paradigm shift.
I strongly
So-
recommend against it in any regard. If you are able to stay private, please do. I think that a year in, when you realize the cost of audits and you have to have a very good CFO and just modeling your company correctly to be able to sustain that public responsibility, that if you're too young, that's going to break you. So you better be cash flowing and not looking for going public to be a liquidity opportunity for you and your investors, because that's kind of like going at it the wrong way.
Well, so I completely agree with you for a vast majority of the market. But the groups who are going public straight away, those are groups who are raising $1 billion. It's like this whole new world of institutional investors coming into the crypto space. That's how they're doing it. That's what DATs are. So for those folks, they have to be publicly traded. And you're looking at a bunch of TradFi people bringing in $1 billion into the crypto markets and trying to figure out the crypto. It's like inverse from our world. So you can see some folks who are from Web3 trying to go the other direction, who are struggling. And it's a paradigm shift. And you have to be really awake to that paradigm shift to be successful.
That was
Yeah.
very good.
Yes.
I look forward to meeting you.
Awesome.
We'll
Me
hang
too.
out with my team. We'll get into a good conversation because we can unpack a lot of that.
Yes, I'll bring some of my venture capital firm called Citizen X. I'm going to be there with a bunch of them. So, yeah, give me a heads up and I'll try to bring a couple of folks with me.
Okay. I'll be in your DMs.
Awesome. So, Marty, anything else for me, or are you going to be at ETH Denver? Hey, Marty, are you there?
Yeah, he's probably stepped away for 2 seconds.
That's still.
I'm back. Hey, Mark.
That's okay.
Let's see, we got a request here. Here's Mr. Proach. Do you want to ask a question? Go ahead. Mr. Proach? Anybody else? Step right up. And after this, we've got a short break, so we can go as long as we need to. Edra, do you have any time crunch?
Actually, I do. I do today. I
10 more
apologize.
minutes?
Yeah.
How dare you?
I know. It's all these deadlines. It's terrible, but
Take 10 minutes and give us your, we've asked everybody, obviously, it's the obvious question. What's your feeling on the market? What's your feeling on the world? What's your feeling on Bitcoin? Go ahead.
I usually have a very strong opinion, as you can tell, and I'm really at a loss. It's just a crazy environment right now. I mean, we always make informal bets with my clients to say what's the low in BTC going to be. Right now, we're betting sub 60 on BTC, which is really, really upsetting. But based on some of the charts and stuff, that's what it looks like to me. The most interesting chart I looked at, and this was about a week ago, was when you look at the BTC liquidity. They have on this particular chart, they have like the long trades and the short trades. And right around 62K, the liquidity for both markets dried up on BTC. But on ETH, it was sitting at like 2,200 when I was looking at it. The liquidity didn't dry up to like 1,300. And it's like, holy moly, there is room for ETH to drop way far.
So you're of the thinking that this entire move down might be powered by ETH?
Yeah, it feels like it's sucking it down, doesn't it?
Yeah, I mean, we know that Trend Research had that massive $1.2 billion long at 1835, and we came all the way down to 1835, liquidated it. It's come back to 1925, but I mean, that might not be the end of it. Maybe we're down here waiting for Ethereum leveraged long players to capitulate. And I think they might keep going down until they do.
Yeah,
I
unfortunately.
think we're in a high, I mean, and Andrea, clearly they're pushing for market structure for a very valid reason, because there is no market structure. I don't think there's any regulation in this asset class at all. Maybe on Coinbase because it's a regulated stock, but that's about it. But we all know the highest volumes come from offshore Seychelles-based exchanges and things like that. So there's no laws, there's no rules, there's no consequences, there's no policing, there's no surveillance, there's no auditing. So, at the end of the day, they're extracting liquidity and doing that however they want to. And I think the price is pretty much in their control, and they have an agenda we're not aware of. And until this market structure is passed and the same laws, 1933 laws, like on the stock market and commodity markets for wash trading and manipulation are in place, why would they stop, right? They're making hand of a fist.
Exactly.
So I think it's literally politicized, the price at this point. I think the people anti-market structure standing in the way, the banks, Coinbase, etc., all have the most to win, right? Why would a bank want crypto? It challenges crypto directly. Why would Coinbase want regulation? It challenges them directly. So once again, it's the people, the investors, the builders, the technologists that want regulation, but the exchanges and the banks and the financialized people don't, because they're making hand of a fist, liquidating bullish long people, long on the Trump presidency, long on regulation, long on this asset class, which has been pumped up since last year, June. It's been one big, long, bullish narrative in the media going forward. I mean, it's still every day. We've got Mark Selig, we've got Paul Atkins, we've got Donald Trump, his sons, just bull posting this asset class constantly. Who the hell wouldn't go long? And then it just feels like they keep liquidating the longs. I mean, if you look at the order books now, literally there's $400 million of longs right now in over leveraged longs across all exchanges to 62,800. That's the bottom of the level, which is my last blue line.
Yes.
But on the short side, there's $30 billion to 110.
That's pretty bad. Oh my God.
So my thesis at this point is that this is the way this market works, okay? I think what they do is they sell longs, liquidate the longs, take that liquidity, buy the spot asset, create a short squeeze, take out all the short liquidity, put that back into the asset after they've taken the next round of longs. And thus the asset price grows, the market cap grows, and that's where the liquidity comes from. I think it's an extraction exercise to build the asset. And until there's regulation, I think it continues.
Do you know what that's called? Manipulation.
By manipulation.
I mean, you have very powerful people in place making all their money while they can, and it's going to get shut down sooner rather than later. But it does feel like our window on getting regulatory guidance, specific laws into place, it does feel like that window is closing, because I'm not entirely sure that if the midterms go towards Democrats, that we're going to be able to get anything reasonable in place, because it's almost a scapegoat for the politics. I mean, you don't have people being reasonable saying this is a new market and we need to protect people. You have people just wanting to shut it down, right? So I just said a contradictory statement that I think we're not going to get regulation, but that people are trying to make money while they can. But it's definitely a manipulated market. And most of those big trades, as you stated earlier, they're done off chain. They are eventually put on chain over time, but the money moving in and off, that is crazy that we do so much off chain for the market's still too small. If any big player can move price, that's a market that just is not yet developed enough to sustain itself long term. So we just need to grow organically and not through these players who are manipulating the prices.
Yeah, I mean, if you go back and look at, I don't know, are you in front of TradingView? Do you have TradingView in front of you?
Sort of. There we go.
Okay, open up a chart of IGV.
Yep.
Expanded Tech Software Sector ETF.
Yep.
IGV. Now hit the plus button and do a compare with BTC USD.
You're much faster than I am.
So do a comparison between IGV and BTC USD, going back to 2017, however far you want. And you'll see that we have tracked software stock the entire time on Bitcoin. Through the whole bear market of 2022, the FTX collapse, the thousands of narratives that we've been fed had nothing to do with it. We were simply trading along with software stock.
That's kind
Look at
of,
that.
that's crazy, isn't it?
It's a breakthrough moment for you and everybody else I've shared this with. So think about the narratives we've been fed. Think about it. The crap we've been told that powers Bitcoin. When actually it's just the same investors that buy software stock have valued it as a software, which it is, just a software, until it's not, right? And so there's two chains of either this is an immature software that is requiring regulation in order to be more than a software, right? I mean, in order for it to store value, there needs to be anti-manipulation rules. So to store value, you have to have market structure. So potentially that's why there's such urgency for market structure, because the government has a plan to use this as a store of value. Because at the end of the day, it's the ultimate software to store value. The problem is the dollar price is completely disconnected from the blockchain. It's this like centralized, fictitious number, no different to the price of the Dutch guilder or the price of plutonium, right? It's some derivative-based human construct that's highly manipulated, whilst the on-chain Bitcoin is a highly pristine, hygienic, transparent financial vehicle. So I think you have this massive decup between closed loops, and that's why there's this urgency for market structure, is to actually let it grow from more than just a software to a software that actually holds value. And the question is, who's going to put the value in and how much will it be? So, you know, you have the chain of thought which says Bitcoin is for the people and this will be third world people and it's democratizing finance. And then you've got people who say, no, this is sovereigns. They're going to all, once market structure's in place and it can't be manipulated anymore, they're going to print a shit ton of liquidity and run this up and get out of debt and get rid of sovereign debt, because just like they did with gold. They just jacked it up to 5,000 overnight. The price of gold didn't just magically go to 5,000. People are like, the narrative is gold's pumping. Oh, no. Someone said the gold price is 5,000 now. It catches up. And I think they're going to do the same thing with Bitcoin. So my last take before we go, 1 minute left, is I think this is the most bullish thing I've ever seen in my life. They have literally caused the fastest possible bear market, which is basically when they manipulate the price down to remove every long possible and to capitulate all new longs till all people that long with leverage give up. And then I believe it's going to go to the moon, just like gold did. Literally, it looks like gold before this move. Gold did literally the same thing. It was
the question is, Marty, when? How long is it going to take?
When is the question? Now, if they put in market structure, I know from previous experiences in commodity markets, which was just US commodity market, it took roughly a year for them to actually put the plumbing in place to regulate it from the actual signature of the president. But this is a very unique asset because it's traded in 165 venues around the world in 16 different jurisdictions, right? It's a very unique asset class. So it's going to take not only US regulation, but then political pressure, sanction threats, tariff threats, whatever, to get Hong Kong to regulate it the same way and to police it. Remember, they extradited Bankman-Fried. He was in the Bahamas.
Right.
It had nothing to do with US law. So they've done this before. If they want to, they can literally pressurize every agency to enforce it. But they would have to do that. So to me, it's a domino game. They pass market structure. It survives the midterms. Potentially, it starts to get implemented. It survives the 2028 election. And then let's say by 2030, it's implemented worldwide. And I believe until then is an accumulation opportunity. That doesn't mean put all your money into it. That means continue to lower your average cost. Just like and this is a Michael Saylor approach. He says the same thing. Bitcoin's volatility is a feature right now. It's your opportunity to lower your costs. Nothing's changed on the chain. The technology is only getting better. The regulations are only getting better. The adoption is only increasing. All that's changing is the dollar price, which is not true. It's not hygienic. It is just a number being emitted from Binance onto the Oracle network. They can come up with that number however they want. I used to work for an exchange company. I know this. Nobody is surveilling their order book. They can put their own orders in their own order book.
It's amazing, isn't it? If you understand how oracles work and how they differ between different organizations, it really, you understand the ARB markets a lot better too.
And then the last bullish take, because I've trying desperately, unfortunately, my first metaverse historic conference on Spaces happened at the worst possible time. Literally at the bottom of the largest pullback in crypto history, I have to host a Spaces conference. The sentiment is low. The audience is depressed. Everyone is bearish. But let me tell you now, I watch on-chain data, and the large players, I keep track of them all. There's 13 large wallets, institutions that have been accumulating Bitcoin, have not sold any. They've only bought more. Why would Coinbase, Binance, Strategy, BlackRock, Fidelity, why would they continue to accumulate hundreds of thousands of Bitcoin?
Because
they'd be selling Bitcoin if it was, there is a bigger strategy at hand.
For sure, for sure. And I'm personally in that camp where I think it is going to be, I think it's the best hedge to the US economy, to USD, that we could possibly own. I think our futures are all in Cynthia Loomis's hands, and let's just keep praying for her.
I think we're in Binance's hands right now.
You think so?
Yeah, I think Binance created this price. They've created this market. Like I said before, I want you to think clearly about what I just said. What they do is they sell longs under leverage, and then liquidate them. Now that's liquidity they're taking from global participants around the world. Real money. Okay. They currently have $45 billion of USDT. Okay. They keep doing that. And then once they deem the time is right, in other words, they've capitulated longs to the point where their long ratio gets low enough, they start buying the asset on their order book, starting to liquidate the shorts. Okay. And then the price squeezes and they make a ridiculous amount of money going the other way. The spot price accumulates up, becomes greater and greater and greater, which stimulates FOMO. All of a sudden, all those people that exited start entering, causing more of a short squeeze. We get these ridiculous pumps. And by the end, Binance is sitting at $150,000 Bitcoin with 100 billion in their coffers.
It's a pretty good plan.
It's a genius plan.
I wish I could do it.
Right. And I don't think there's any coincidence that CZ got 4 months and that there was some kind of DOJ, US government type negotiation. And so we'll never know the truth. But I think it's part and parcel. I think this machine is being used because it is a very, very clever machine.
And Eric is clearly hopping on board with CZ. Eric is in the BTC markets and he's in the right place. So I don't blame him either.
Anyway, so Andrea, there you go. You got the message from the messenger.
Yes, I do want to correct myself. So Senate average age 64.
There you go. 64.3 if I'm not wrong.
Yeah, 60. Yeah, depending on average or median. And then the House is about 58. Yeah. That is the funnier one.
And I mean, as somebody who's 55 years old, I can tell you, you have no business making decisions for other people when you're 65.
Yep, exactly.
Like, I don't get it. These are people that don't understand technology. They don't understand the new world. They don't understand AI. They don't understand any of the problems of today. And they bear the burdens, traumas, and problems of the past that we had nothing to do with. So
that's the thing. Half of them are older than that.
Yeah, they're literally carrying the problems of the past into the future. And so I think we have to wait for market structure, wait for it to take form, and we have to wait for these senators to all move on, either through entropy and death or retirement, and for younger leaders to emerge. And let me tell you now, look at El Salvador, the first country with a young president. Look at that's the model for the world. And now we have North Korea. The guy's just named his young teenage daughter the heir. So she'll be taking over North Korea. This, I think, is the movement. This is how it works. The younger people get the power and they make vastly different decisions.
Yes. Yes, absolutely.
So until then, accumulate on the FUD. That's my theory.
Thank you so much.
Andrea, we'll do more of these.
Thank you so much. And anybody's feel free to DM me if you want to connect. I'm always happy to talk.
Sounds good. Thank you, Andrea, for spending time with us here on Solana Breakout.
Thank you, Andrea.
Anyone got any questions, send them to Andrea. She can take your business, no problem. She's one of the best. She's just a marvelous person.
Thank you.
Well, ladies and gentlemen, we've got DFDV. They're going to do a short presentation. Parker, we want to hear your thesis. I'm just going to leave it up to you guys. I just think it's a great bit of content and I want you guys to run with it. So DK, you do the moderating and Parker, you bring in the heat. Let's go.
All right, Parker, I'm gonna put you in the hot seat a little bit here, which is actually first to introduce yourself to the audience. I know we've had a lot of people tuning in and out, but a little bit of your background, who you are, would be helpful. Take it away.
Sweet, yeah. So a little bit about my background. I come from the TradFi world. So I got a very traditional finance degree, University of Texas, Hook 'em Horns. Then right after school, I did my CFA, Chartered Financial Analyst program, and worked at an investment advisor, so what you might call the buy side, traditionally speaking, about a $2 billion asset manager. It's managed a lot of fixed income portfolios, it's some derivatives stuff, some equities, kind of broad mandate there. And that's really kind of how I got to start. And then got into crypto in 2017, got into some ICOs in the early days, did well on that, diversified as any good finance bro does, diversified across, a whole bunch of shitcoins and got obliterated. But then really started diving down the rabbit hole in 2018, learning about what Bitcoin was about, the kind of the attempt to fix money, the kind of Austrian bend to the entire Bitcoin story narrative, you know, this non-state money, this reserve of last resort, if you will. And so at the end of 2018, I joined Kraken. I was there for like 6.5 years, spending a time in a bunch of different roles, both on kind of the strategy finance side and then also the engineering side. And then here in beginning of 2025, so just about a year ago, left Kraken to launch DFDV with DK, Joseph, John, and you know, all the guys here that many of y'all already know.
I'm curious. I knew you touched on it briefly, but like, what was your actual first exposure to crypto? Did like a buddy tell you about it? Did you read about it? Like, how did you actually get into it?
Yeah, so I remember it's March of 2017. I vividly remember one of my good buddies, if he's listening here, my buddy Art. We were eating some Cabo Bob's burritos. Anyone from Austin knows about Cabo Bob's. It's incredible. And he was telling me about this Ethereum thing. It was like this new app store, and it was this new money. And I specifically remember asking him, why do we need a new form of money? The dollar works great. So this was in March of 2017. Then in October of 2017, one of my buddies, the investment advisor that I was working at, he had been telling me about these ICOs. I made some money. And so I threw $300 into this ICO that was coming out called App Coins. It was like this coin from this alternative app store. And I remember it launched. And in the course of a couple of days, my $300 turned into 14 grand. And so all of a sudden that got my attention. And, you know, so I guess in many ways, it was the pure shitcoinery that kind of got my interest, piqued my interest. And then I started reading, learning, diving down the rabbit hole, learning what the space is all about. Of course, lost all the money that I made on app coins, but that was the hook to get me in.
It's funny. I think this experience speaks a little bit to your preference or leaning towards the theory that price drives narrative rather than narrative driving the price. That's not lost upon me a little bit as I'm hearing you talk about this.
That's a great point. I didn't even thought about that. It's amazing, but absolutely.
All right. So let's get into your crypto hedge fund blow up theory, which, you know, I saw you posted and was an interesting read. And I have to admit, I did not quite expect it to get to 2 million impressions and views. I'm sure you didn't quite expect it to either. Not to say that it wasn't, you know, that you hadn't given it a lot of thought or anything. It's just that it really took off like wildfire. So before we even go into what exactly you originally posted, sort of the trail of breadcrumbs you've been trying to follow, maybe first talk about like, how did you, like, I can't imagine you were sitting there and all of a sudden, boom, this whole theory came about before your eyes and you're like, I absolutely have to type this out. Like, walk us through the start of the thought process here. What were you thinking about, maybe beginning to sniff around on some of the stuff you posted?
So, apologies, I don't know if my connection's cutting in and out or if that's DK's, but so, you know, credit to where credit's due. Me, John, our CFO, and I think Pete were chatting on Thursday, and total happenstance, I just happened to look at IBIT volume. I was scrolling through different stuff that happened on the day, and that was the smoking gun for me. I saw the volume double what had been any other day. And then comparing that to Bitcoin spot volume on multiple venues, perps volume. I was like, what is going on? So John immediately thought to look up the 13F filings and noticed that a few of the largest IBIT holders are these random funds that no one had ever heard of, and they were holding their entire fund in IBIT, or almost entire fund in IBIT. So that was the tell, and that kind of like kicked off the dive down the rabbit hole. It was a quick dive. It drawing from my past experience and some other events that I had seen with hedge fund blowups. I was like, ooh, this has all the hallmarks of a big hedge fund blowup. And when you know, most of these big famous hedge fund blowups have to do with derivatives where leverage can get pretty wonky, leverage levels that is. And so just kind of pattern matching off what I've seen in the past with, big derivatives based blowups, I kind of quickly threw together this hypothesis and just threw it out there. Honestly, it was Thursday night, not really thinking much of it, kind of interesting, not really sure who would read it, and it took off. And that clearly was a bit of fuel for me to keep going, keep digging, and become, further convinced in my own theory, my own hypothesis, just because so many people thought there might be something here. So that was kind of the genesis there. Oh yeah, I absolutely had no idea it would get anywhere this big, but I guess in retrospect, it kind of makes sense, just given we ourselves, along with almost everyone else in the space, is just banging our head against the wall. Like, what the fuck is going on? It's been since October in the space, 0 cents. Like the amount of pullback. I know, Marty, you highlight the IGV correlation, software correlation. That, correlation wise, yeah, it seems to be there. But like narrative wise, it's like, okay, I guess Bitcoin is software, Solana is software, but like AI is software too. I mean, all of the economy is basically software at this point. Like, it just makes no sense why crypto and Bitcoin have just traded off so incredibly violently, and everything else, for the most part, is trading up. Whether it's gold, AI, S&P, currencies, doesn't matter, dollar up, dollar down, Bitcoin is just getting nuked. And some weird patterns of like somebody just incessantly dumping. And so we have this theory of like, well, maybe it was funds, or like, some Chinese, there's some info circulating about like some, scam houses that were shut down by the Chinese, and maybe they had a bunch of Bitcoin. The Chinese were dumping it all by year end. And so it's like the sum for seller in the market throughout Q4, but like nothing really stuck. And so is this like, just, I don't know, gnawing sense of like something is missing, when there's an effect and no cause, it's just like, it's haunting. Like, people want to know, why did something happen? And when there's no smoking gun, there's no clear explanation for something so powerful happening, it kind of demands, some kind of explanation. And so I guess in hindsight, it kind of makes sense that people were so interested in this, because it finally kind of explained something that people have been searching for, or provide an answer for a question people have been searching for a while now.
People always want answers. Let's actually go a little bit into the basics, because I think there's some folks who are listening who may or may not have read the post, worth checking out on Parker's X profile. But there's some like fundamental, I'm going to say basics that are worth diving into for those who are less familiar. Maybe explain a little bit behind the idea of a single entity structure, why a fund would go 100% into IBIT, and maybe some of the basics around that. I know that was sort of like the underlying premise on the post, so maybe an explanation there would be helpful.
A scenario example too, or like to make it easier for the audience, like maybe, for example, like the October timeframe, how juicy those puts would be if you're sitting on a mega bag of IBIT, how playing the puts strategy at that point, or anything like it. Maybe just some kind of example, if you don't mind.
Yeah. So I guess a couple things to lay the foundation here. So Bitcoin is by far the most volatile major asset on the planet. There's certainly things that are more volatile than Bitcoin, but they're not like widely adopted assets. The other thing that's fascinating is that IBIT options on the BlackRock Bitcoin ETF, are the 4th most liquid options on planet Earth. Let me say that again. IBIT options are the 4th most liquid or active options market on the planet, only behind SPY, which is the S&P 500 ETF, S&P 500 index options, and then QQQ, which is the NASDAQ 100 index ETF options. So really, Bitcoin is actually the 3rd most liquid options market on the planet, behind the S&P 500 and the NASDAQ. And so options live on volatility. right? Implied volatility is the number one pricing input to an option. And there are so many strategies you can execute around options with volatility. So the beauty of Bitcoin is, one of the interesting things about Bitcoin with this high volatility is that it also doesn't have any kind of native income, doesn't pay dividend yield. But because of this volatility with the options market, you can create synthetic yield, synthetic dividends. And so it's been a long, common strategy for anybody holding a large concentrated stock position or concentrated asset position, whether that's shares in Meta from the early days or shares in NVIDIA, rather than selling a giant position and generating realized gains that pay taxes on, all sorts of things. You can structure option strategies to generate yield, selling calls, selling puts, that kind of thing. And so we've known for a while, and I know personally some large Bitcoin whales that run these yield generation option strategies using Bitcoin. But with the kind of explosive emergence of IBIT and the IBIT options market, the ability to monetize that strategy has increased dramatically. So rather than, say, being able to generate $1 million a month in income or $5 million a month in income, you have a market that could support hundreds of millions to $1 billion a month in income. And because it's the most volatile, there's a lot of volatility premium to sell. So whereas a traditional asset, maybe you can generate, let's call it 10% a year in income using XYZ strategy, on Bitcoin using the exact same strategy, same tenors, same percentage out of the money, all of that, you might be able to generate 20, 25, 30% income on your position. So much more bang for your buck when you're thinking about generating income. And so you've got this explosive growth in liquidity, this huge amount of new capacity to generate income, monetizing that volatility. And so what you need to do if you're a fund or you're a large whale, what have you, is you need to take your Bitcoin and you need to get it into IBIT. So a common way to do that, or now common way to do that, is via in-kind contributions. So before you had to show up with, let's say $1 billion worth of USD cash, and then you'd get $1 billion worth of IBIT shares. But that, if you already had Bitcoin, that would require you to sell the Bitcoin, get the cash, and then turn around and put it in. And there's some potential capital gains issues, potential slippage issues. So with the in-kind creation and redemption that was debated past summer, people were able to contribute their Bitcoin directly. So now if you're a big Bitcoin whale, maybe you're monetizing the vol, selling some options, and you could generate a little bit of income, but the market was a little bit illiquid. Now, all of a sudden, summer of 2025, you can just move your Bitcoin on a tax-free basis into IBIT, and then you massively enhanced your ability to generate the income. And so at that point in time, you start selling calls, maybe even selling puts. And so, trading 101 or crypto trading 101 at least is isolated margin, right? So when you've got a large portfolio, a bunch of different assets, you don't want to expose the entire portfolio to a blow up in one asset. And so you use isolated margin. This is as opposed to, say, cross margin or cross collateral. So isolated margin allows you to put up one position as collateral for one strategy. And if that strategy blows up, the rest of the assets at your firm or in your portfolio are still safe. And so what you notice is that a couple of these funds on IBIT, based on the 13F filings, they've essentially structured isolated margin positions at the fund level. So they created a new fund and they put one asset in there, one asset, which is IBIT, and they can run an option strategy against that. And if it blows up, they're safe, no problems for the rest of the firm, that is. And so that's what I think was going on here. I've been going for a bit, so I'll stop for a second.
Yeah, no, super helpful. I mean, I think the number one question when looking at 13Fs, of course, is that you saw a lot of these, as you noted, Hong Kong-based funds that had 100% of their portfolio allocation into, into IBIT, and that sort of, at first glance, for those who aren't exactly familiar with this structure, can be a little bit eyebrow raising, and helping folks to understand exactly how this is structured is certainly a good starting point for diving into the theory a little bit more. The other thing you had noted is that Solana and Bitcoin were trading in tandem rather than Solana trading with amplified upside or downside with respect to Bitcoin. What exactly did that signal to you? Like, what's the key takeaway from that?
Yeah, and actually, I'm going to answer a different question or just make a comment before I jump into that. A lot of this will seem dense and complex. Like there's a lot of obscurity here. There's all sorts of complexities in how things are structured. That's the point. That's the design here. Hedge funds are notoriously a very secretive bunch. And so they hide behind all this complexity to be able to execute their strategies without the general public even being able to understand what's going on. So if this seems complex, it's because it's by design. That was another interesting component to this, is that specifically on the 5th, you saw the crypto majors all down the same amount, which very rarely happens. Bitcoin or Sol and ETH typically trade with beta to Bitcoin. But that's not what happened on that day, which given that size of a move, that signals to me some type of capitulation event, specifically within Bitcoin, where the traditional cross-asset ARB algos simply don't have enough capital to keep up. So traditional cross-asset ARB algo might say, hey, if Bitcoin's down 5, Sol should be down 7. And so if it's not, I'm going to go ahead and long Bitcoin and short Sol. And then once that move occurs, that correct appropriate spread occurs, then I'm going to close my position and make a profit. But that was not happening here. And so however much capital is allocated to that kind of strategy was completely overwhelmed by the massive amount of selling happening in the Bitcoin market, specifically on IBIT, but cascading into the Bitcoin market. So that was another tell that like something was wrong, something was broken fundamentally, especially on February 5th. And just further confirmation that like a blow up was in the works.
For those who follow us as well, Parker, how was our stock moving that day?
So DFDV stock was down like 25%, which was also an anomaly because we've been trading at a pretty stable MNAV ratio. So if you look at the different metrics on our website, go to our NAV and XPS tab, you'll see some different measures of MNAV. Some have a big discount, some have a premium, some have a giant premium. But regardless, those numbers have been roughly steady over the last 2 months. On the 5th, we had a massive depeg, and those numbers dropped by like 20% or so. And they, interestingly, on Friday and on Monday, have totally reverted. The gap was totally closed. And this is not due to us doing some kind of buybacks. This was literally the market organically closed the gap. So that was another tell that something was broken. And we know for a fact that some large holders of DFDV are some Asian-based hedge funds. And so the thinking was, well, if someone's blowing up, if someone's under stress, they're just fire selling every single asset they have to get liquidity. And so we are being thrown out, baby with bathwater situation and being sold indiscriminately, more so than even some of the other sold ads. And the only explanation would be that whoever's holding us is not holding the other guys. And so we're being sold off when the other guys aren't, because we just happen to be on the balance sheet of a fund under stress and they're just selling everything indiscriminately. So that was another, small breadcrumb. Maybe it was pure coincidence, but seemed to be contributing to a growing hypothesis, if you will.
I had a friend of mine back in the day who used to say some people don't really care about breadcrumbs. They don't really follow breadcrumbs or whatever. And he was like, I'm one of those people that just feasts off of breadcrumbs. And I'm starting to become convinced more and more that you are that type of person, sir. Apologies, you will hear my kids in the background. I'm on a road trip here, so if you do hear some toddlers, you'll get used to this, Parker. Let's talk about one of the other breadcrumbs leading up to this, which is your post had mentioned very out-of-the-money calls or very out-of-the-money options, as well as ultra-high gamma. And that's obviously, there's some definitions there and, again, foundational elements that I think would be helpful for people to understand how this is exactly related to your theory.
Yeah, so this kind of actually plays a little more into my second post, which at a very high level, I'll summarize my hypothesis or theory here, which is on the one hand, you had a fund, maybe a couple funds. We've actually already seen one, a lender blow up. So we know at least somebody blew up, but I think there's more. So a couple funds blew up, but on the other side of the trade, I think is one or more funds that kind of created this situation and has made, or is in the process of continuing to make, maybe a fuck ton of money. And so, I'm reminded of the scene in The Hobbit where you've got the rock golems, and they're like slinging their giant boulders around at each other. The party, on the journey, and the hobbits are kind of stuck, the dwarves, and they're just watching this unfold where these giant boulders are getting slung around. And I think that's a little bit what's going on here, where you've got some giant funds on both sides, and the great white shark was able to take out the giant black tip shark or whatever, but like two huge sharks going at it, or schools of sharks, and the bigger ones just ultimately went out. And so I think the mechanism that created all this was options. Obviously, we talked about IBIT a lot, but a specific type of option. And that is high gamma, and actually even a third derivative, high gamma potential, which is the Greek or the derivative called speed. So high speed options, kind of a fitting name. And this allows funds, especially that are going long, to get massive amounts of leverage with minimal downside at a very low price. So it's kind of the holy grail of leverage, right? Low downside. So if trade goes against you, you have fixed downside. Maximum leverage, sometimes leverage close to 100x. And low upfront cost. You don't have to plop down billions of dollars to get into this position. You can put small amounts in. And so the way this works is you can buy, let's say, I'll give an example. If IBIT is trading at, let's call it $40, so I'm talking about real numbers. If I'm looking at IBIT options, let's take the February 18th expiry. So that would be Monday of next week. I could buy, so IBIT's trading at 37 or close to 37 today. So I can buy some puts at 35 for, actually, let's even go a little bit further here. I can buy some puts at 30 on IBIT. So that's a big move. I mean, that's a 20-something% move in 5 days. Actually, 4 days, which is, you got a weekend, so like 2 trading days. So I can buy some $30 IBIT puts for right now, it looks like 9 cents. Yeah, right around 9 cents. So that's like cheap, pennies on the dollar, nothing. But if the price of IBIT were to drop by 20% or whatever between now and the 18th, the value of those options, so let's just look at a 37 option to showcase that example. So if the price dropped to the price that we're at today, let me back up. If we buy a $30 put option and the price drops to $30, the price of that put option will be roughly the same as a put option on a $37 strike today. So let's just say the price is where we are today in a couple days. The options trading at 37 strike on IBIT, they're trading for a little over $1 right now. So let's do some easy math. 10 cents for the $30 strike, $1 for the 37 strike. If it drops to $30 here, maybe tomorrow, let's say, then those options that you bought for 10 cents are now worth $1. So you just made 10x your money on a 20% move. So that's a significant amount of leverage there, right? That is, as my math is right, that's 50x leverage. And so what happens there is, so that's an example of a very high speed option where the delta is super low today. But what you have on those puts that are way out of the money, very cheap, expiring in a couple days, there's basically no chance that they're going to go into the money, right? So delta is basically zero. And in fact, on those, the delta is, what's the delta? Delta is like 0.04. So it's like a 4% chance that that outcome occurs. I get dropped into $30. It's not going to happen. So because the delta is so low, the dealers don't have to hedge very much. So when you buy these puts, they're not out there having to sell very much stock because it's not going to happen. That thing is going to expire worthless. You bought it for, pennies. But as the price moves towards the strike, delta goes up. And if you look at the delta for the 37 strike, it's a 0.41. And so as it moves up, the dealers are constantly needing to delta hedge. And so they sell. And as they sell, the price goes down further. And so the delta goes up further. And so then they sell more. And then the price goes down further. And then delta goes up further. And then they have to sell more. And it just creates this feedback loop. And this is especially exacerbated by options that are very close to expiration. So when you're only a couple days from expiration, any move close to, in the money becomes a massive change in delta, right? Because if there's only 1 day left on your option, then any move in or out of the money could kind of like make or break this option, whether it's going to expire or worthless or not. And so you have these wild swings in delta, and that's gamma. But what you want is an option for this type of strategy. You want an option that is going to have gamma that increases rapidly, because gamma increasing rapidly then means delta is increasing rapidly. Again, very complex stuff. This is by design. This is how the hedge funds hide what they're doing. And so these options that are very cheap, very high speed, also high gamma, but high speed, and you can use those to create massive amounts of selling pressure from the dealers, because the dealers just programmatically delta hedge. They just do what they're basically told by the market. And so if you can influence the market, you can tell them what to do effectively. And so in my example, you put down 10 cents or 9 cents, and you could potentially have created 40 or 50 cents of spot selling in the puts, actually potentially more if you right up to expiration. So let's say the 37 strike options that are expiring tomorrow, the delta on that is 47. So you're talking 0.04 delta to almost a 0.5 delta. So like 10x, north of 10x kind of spot control or spot leverage, if you will. Spend a little time in ChatGPT, and then you can also build out a little model. But you can start to see how a small amount of options demand structured very specifically can lead to huge amounts of buying or selling pressure in the spot market. And when the options market is far, far more liquid than the spot market, you've got this like liquidity arbitrage game that you can play effectively.
What I love, by the way, for those in the audience who are tuning in, if you've been listening to Parker speak for the last 5-ish minutes here, this thought process is like what he frequently does on a day-to-day basis at work, where he'll just say, you know what? Fuck it, we're doing the math right here. We're doing it live. And he just goes and spins it up. And even last weekend when he was diving into the theory, and I remember probing some questions and going into it with some skepticism. And he was like, I'm going to do the math. And I was like, oh, okay. Respecting the math, sir. So I guess my general takeaway or question for you after all of this is, do you think folks, as a general, or I'm going to say general commentary here, do you think folks underestimate the amount of price action that can happen in crypto as a result of these like TradFi wrappers, ETFs, and the options that are associated with them?
Yeah, absolutely. It's tough to really explain, but an options market that's the third or fourth, depending on how you want to look at it, most liquid options market in the world. I mean, that is like saying Bitcoin has arrived is a massive, massive, massive understatement. Like you think about the most important companies or even assets on planet Earth, the oil market, the gold market, the market for AI stocks like NVIDIA, massive indices like the Russell 2000 or the Wilshire 5000 or Russell 3000, whatever. Bitcoin is a more liquid options market than all of those. Like it's an absolutely incredible feat that we have here. And so I think, unfortunately, what you've had is a situation where Bitcoin derivatives in general have grown exponentially off the charts over the last year or so. And if you look at it, spot volumes have not really changed much. And so that's created this, giant mismatch just in the last, 12 months or even less.
Without naming anyone specifically, Parker, do you feel pretty good about knowing who it is that blew up?
I have a pretty good guess. Yes. At least one firm. There may be others. There absolutely could be others. I think the block fills blow up was very interesting because, in the press release, I don't know a whole lot about block fills, but they said they had, 2,000 counterparties they were lending to. And I'd be shocked if a lender had gone all in on one counterparty and the one counterparty blew up and took the whole firm down. I mean, that's like, come on, guys, that's 2022 shit. Like, really? You make the exact same mistake lending a whole bunch to one fund and taking down the whole lending business? So you'd have to think they'd have position limits in place. And ultimately, maybe multiple funds went down, running the same strategy on the back end, and that's what ultimately killed block fills. So I actually think there's a decent likelihood that multiple funds blew up here, but I have a good idea for at least what one of them was.
Parker, can I throw a little curveball at this theory?
Please.
I don't want to sound like a broken record for anybody that's been on the spaces for 3 days, but the correlation with general software, right? With Bitcoin right now. So at what point, so you think that if this blow up didn't happen, Bitcoin would have decoupled from that software sector?
Yes.
So the sort of downturn from October 27th, when Microsoft dumped 30%, wouldn't have happened as drastically, and we wouldn't have had the second move down from the 95 level? Or do you think we would have still had sort of a correlation with software, but we would have continued up and not done the secondary move down?
I don't even think we would have had the move down from October 10th. Like, I don't even know if October 10th would have been as violent as it was. And I certainly think we wouldn't have traded off from mid-October down through end of the year. Yeah.
Because
But,
the timeline that I've slowly been uncovering just as a sleuth is that the government went into shutdown on the 1st of October. The TGA, the Treasury General account, got drained entirely on October 9th. October 10th, we saw obviously the dramatic cascade of Bitcoin. But then from October 15th to the 27th, we saw all software stock do a very similar 30% dive. And then they rebuilt the TGA around January 1st, 2nd, 3rd, started the government up around the 11th. And then Bitcoin continued down with the second 30% move.
Yeah.
And stock, they followed.
Can I add real quick that
Yeah.
since we know that the SPY, two versions of essentially the S&P and the Qs, are heavily weighted in tech sector and software as well, and we know that options are in the trillions for that specific sector, is there a chance that correlation? I mean, I know there is. I'm interested in thoughts on how the same IBIT option strategy that's bringing Bitcoin down can be applied to most of the software sector in that IGV that would be correlated to Bitcoin. Makes sense, right?
Yeah.
The same players. I don't know. I'm just causation, correlation, etc. I get it, but it's just I think that's interesting too. Is that so many of those software stocks are also heavily options played and could have similar players doing the same thing with them at the same time.
Yeah. So what I'm describing, this happens to a small degree everywhere, but the linchpin here, the reason this works with Bitcoin and doesn't work elsewhere is because of the mismatch between options liquidity and spot liquidity. In most other more developed markets, SPY options, Qs options, ETF, smaller ETF options, single stock options, all of these, there's a much better balance between spot liquidity and derivatives liquidity. And so you can't really use the derivatives market to push the spot market. It just doesn't work that way. And so even with massively liquid options market, like on SPYs or on Qs, the spot market is very, very liquid as well. And they trade at the same time, right? Yeah, NASDAQ 100 futures that trade overnight, but the vast majority of the activity is occurring during open hours, New York. And so there's just no ability to gain the spot price by exploiting a mismatch in liquidity between the derivatives market in general and the spot market. And that uniquely exists in Bitcoin and has uniquely existed for the last, let's call it 12 months or 9 months or whatever, and will go away, I think, fairly soon. So these games, while they can sort of be played, they can't be played to move a major asset down 40% in and of themselves. So I don't think the same dynamics are at play with, say, IGV or anything else.
Thank you.
Parker, where to from here? So, all right, one major fund blew up, maybe several major funds blew up, or several other funds blew up. What does this imply? Like, what are some of the key takeaways here?
Well, so I mentioned at the beginning of the discussion that, the analogy of the rock golems in the Hobbit slinging at each other. I think there was big fund on the other side of this trade that basically took the opposite position as the funds that blew up and made a bunch of money here. And they basically uncovered this liquidity mismatch and realized there was an opportunity to really push the spot price. And so executed a strategy with a lot of money to create an epic event akin to Soros breaking the Bank of England. And in my post, I gave some examples like Soros breaking the Bank of England or John Arnold blowing up the gas market or long-term capital management or Paul Tudor Jones or some of these other big famous hedge fund trades where, a titan of finance got their name and got their start and made billions all in one trade. I think this was an epic, legendary level trade. It may never come out because there's a bit of a gray area here, but I absolutely think that there is a giant fund that has tens, if not hundreds of billions of capital across their whole firm that basically ran this trade and took the entire crypto market down. And to break from there is, and I'm not accusing Jane Street, although they are one of the largest funds in the world and very secretive and know crypto very well, but again, not accusing them. But the Indian regulators accuse them of essentially running a very similar strategy in the options market on some bank stocks in India, where the options market, the options liquidity is far greater than spot liquidity. And so they were able to, Jane Street allegedly was able to exploit that gap in spot and derivatives liquidity to move price around and make a bunch of money. Now, the reason they don't say it's definitely Jane Street is, funny enough, they sued some former employees that went to Millennium, saying that those former employees took the strategy to Millennium, which is another giant fund, but took that strategy to Millennium and started utilizing it to make billions as well. And so anybody could have seen this court case that, funny enough, came out, or this allegation, the beginning of this court case, that came out, funny enough, in July of 2025. So a couple months before October 10th, 2025, when things really blew up. So anybody could have seen this and, you know, got their wheels spinning and decided to go big on one of these trades. And the hallmark of these kind of big, epic, legendary trades that make these giant titans of finance, again, whether that's Paul Tudor Jones or George Soros or John Arnold or whoever, a key hallmark of these trades is these guys just going absolutely balls to the wall, like putting up tens of billions of capital. And you're like, oh my God, like these guys have some cojones. And they just push it and they go all out and they go big. And so I think it could have been anyone. Could have been Jane Street, could have been Millennium, could have been someone else, but somebody went really big here. And I think single-handedly, you know, well, they kicked off this kind of Bitcoin decoupling, this big Bitcoin short, if you will. Confluence of factors were accelerants to help further accelerate the move, but I think there's someone big behind this. So what does this mean? What do we take away from this? All right, a big fund bullied crypto down. Like that sucks. We've been bullied all, you know, by all sorts of big institutions. I think this is actually a pretty simple fix. And I think it's just a symptom. It's a growing pain. Unfortunately, it sucks to think of Bitcoin having been around for so long and yet still having growing pains. But look, Bitcoin is the third most liquid derivatives option or derivatives market in the world. Like, there's going to be some growing pains, right? Spot needs to catch up. And so whether that's, and I, you know, highlighted this a few times, but whether that's the CME turning on 24/7, 365 trading on their futures products, or the Clarity Act coming in to bring more institutional comfort to market making in the spot markets on the US side, you know, Coinbase, Kraken, these other kind of more regulated venues. I think the ultimate solution here is more activity moving on chain. So being able to see who's building what positions, when, where, and how, like that's impossible to hide on chain. It's all there. And so ultimately this blowout doesn't actually even have anything to do with Bitcoin per se. Like if silver had these same dynamics, this trade could have been exploited. It's just the dynamics appeared in Bitcoin. And so Bitcoin was the market that got exploited, but crypto is the ultimate solution here. Like it's the same rough dynamics at play that caused a global financial crisis and that continues to cause these giant hedge fund blowups and these market meltdowns in the global finance, global financial infrastructure. And so the solution continues to be put more of this on chain. Like we need more transparency. We need to be able to see what's the aggregate risk in the system across all sorts of derivative instruments, counterparty risk, all of that. And so I think the ultimate takeaway is like, we need to get clarity passed. We need to get more products moved on chain, and we need to just continue to grow the space. And I think the problem will solve itself. More spot liquidity will make this really hard to pull off ever again. But this is a pretty big reminder of why we need to put stuff on chain, and we shouldn't have all this derivatives activity just trading in TradFi exchanges and OTC between banks and so on.
Can I chime in here?
Please.
So I spent 3 months at a popular crypto exchange. I was there as a project manager working on order types, and one of the side projects that I took upon myself to do is really try and take a lot of the insights and understanding that I had built in this group and trading and watching order books throughout the years, try and funnel it up to the executives and explain what I saw. And what I saw was that in 2020 to 2023, everybody was very cautious about using a VPN to trade on a perp in the United States. There was actual old school trading of, hey, you buy the spot coin, you trade the spot coin, you have some limit orders on the order book. And in that environment, we had exchanges and spot markets that actually, I think, were participated in democratically by a large amount of people with their tokens that they held. Now, fast forward to today, you are probably a bit of a sucker if you're holding a lot of these random spot coins because you could just perp trade. It seems like that's the vibe of retail. The retail liquidity is putting their, USDC on synthetic order books and gambling on the price speculation. So who is it that's placing their limit orders on the market in the spot? You need a spot, and that was one of the objectives of this exchange, was to always try and find more liquidity partners for deeper books and deeper depth. And this was before 1010, and I actually described the mechanisms that were going to destroy this market. And I think I defined what 1010 was going, how it was going to break, and how far it would need to go before it broke, and why it's going to break, because there's no democratic liquidity participation anymore in the spot market. Right now, it seems like the market makers are almost advantaged or incentivized to hold the asset on both sides of the pair. And the kind of market situation we have right now is, if somebody dumps a lot of supply, they're going to stand back. They're going to walk away. But with democratic participation of a bunch of random people making their own decisions, they might have absorbed that supply. So we don't really have that cushion of democratic participation anymore. Our cushion is a bunch of market makers that are probably collusive, and they're really the only ones that are placing depth on the spot book. Now, if the indexes and most of these prices are dominated by spot, then the market makers are also incentivized to be able to flush the books. And Marty has a theory, I don't disagree, that there might be collusion between markets and exchanges, where they say, we have a lot on the books down here, we'd like to offer you a discount on your borrow of a bunch of this asset so you can flush the books, eliminate our liability on our delta neutral synthetic casino book. So what I'm getting to, long story short, is that back in 2022, 2023, it was a different trading experience, and we didn't have all these levered products, and generally a participation of retail liquidity was placed on spot order books. Now we don't have that. Markets are going to market makers to try and buy these tokens and provide that depth so that we can actually trade these things, but it's not democratic. It's collusive. There are very few of them. And the kind of products that we're developing in our industry are not actually placing limit orders on spot order books. They're locking away these things into leverage positions. And there are reasons why some of those liquidity might actually touch the spot book in one way or the other. But if that doesn't happen, the control is within the hands of few very powerful market makers. So we just generally don't have a environment that sustains the democratic cushion liquidity that we need. And I think that we've turned it into volatility as a product market fit.
Yeah, I think I somewhat agree with that. I don't think the market has gotten worse. I actually think the spot market is better than it was. It's just that the spot market improved by, let's call it 50%, but the derivative activity increased by 10,000%.
I was going to say something over 1,000. Yeah.
Yeah. And so I think the spot market is more democratic than it was before, right? You do have real asset allocators, RAs, that are going to buy some of the Bitcoin ETF, and they're just going to buy it spot, and they're going to hold it for 5 years as a 5% allocation in a global macro portfolio, and they're never going to sell it. And when they buy in the ETF goes and does a spot order, and it's just like very democratic. But that activity has been completely dwarfed by the derivatives activity. And I think ultimately, go ahead.
I was going to say the fact that you take tokens away, you're solving the distribution math problem, but the participation on the spot order book with liquidity democratically is really the focus. So I agree that it could be a healthy market if everybody were to buy the tokens and solve the distribution issue. But if they just keep them off the books, then the democratic participation of depth is not there. It's a collusive elite game that is providing depth. And when you provide that depth, you can liquidate the positions because you're in control of the depth. You're not going to buy or sell your own asset.
Well, and I think this ultimately, this gets at the crux of the problem, which is, especially on the spot side, like this market, crypto markets are the fastest growing markets on planet Earth. And regulation has just not kept up at all. And so what you've created is a situation where the derivatives market has become completely untethered or unrestrained, rather. So it can grow as fast as it wants, but the spot market has been restrained. We don't have clarity. We don't have 24/7 trading on the CME, but we've got all these structural limitations where let's call it a Citadel, may not provide the same level of liquidity in the Bitcoin spot market as they would in other markets, simply because of some of these structural impediments. Sure, maybe, and I'm just going to use the name, not accusing them, but sure, maybe Jane Street is able to run roughshod over crypto right now, or let's just use Wintermute. I'm not accusing them either, but they're a more crypto-oriented name. So let's just say Wintermute is a good example. Wintermute they're a big fish in a small pond, right? They're big in crypto, but no one's ever heard of them outside crypto. Maybe they're able to push crypto prices around, but as soon as Citadel and Virtu and these other giant bank trading desks get involved in spot Bitcoin, Wintermute is like, games are over, because if they try to push the price in one direction, they're going to get completely obliterated.
I agree.
It's only the biggest fish that can move the price. And what you have in the spot market is a artificially constrained pond where the one bass is able to dominate. But as soon as you open it up to the ocean, it's going to trade like every other market. Not saying that's perfectly better, but it's certainly better than what we have today. We got to get through these and eliminate these extra barriers to everybody getting involved in the Bitcoin spot side.
I agree with this 100%.
Any player like Wintermute or whoever you want to name, if they're big enough to play this game and dominate it, it's just them actually causing exposure and risk for themselves to a bigger player. Right. So again, if you fill the room with bigger players, then it becomes a democratic, competitive environment between bigger players. You maybe have a higher level of competition for who's big enough to move the market. Maybe they don't even attempt it. So the 24/7 markets are super important. Those low volume sessions, I think it was Crypto Face who made the market cipher indicator. He liked to call it the Chinese AI sandworm. And we actually think that it died on 10/10. But on low volume sessions, you would see just obvious fraudulent liquidation hunting.
Yeah.
Right? And then it would sort of like solve itself and prepare itself for US market open. And you could just see this game being played on low volume. And that seems to have died, which I'm thankful for, but not thankful for the waterfall that happened afterwards. Big players, many more of them. I want a bigger competition, because you're right. The big fish in this pond right now, they've had it too easy for too long. And maybe they know that. Maybe they know that the market structure bill and the ability for the players to come in is, the writing on the wall, the clock is ticking and the sands are running out of the hourglass. It's going to be time for them to either put up or shut up. Maybe they end up divesting themselves of a lot of their holdings because they know that they're not going to play that game anymore. So it'll be interesting to see, once legislation is sort of engaged and we have a timer set on it, what happens then and what kind of markets we experience when we have the engagement of legislation on the way, but dates that we have to wait for. Maybe it's a year or two. Maybe 2027 is when we actually see the full force of it. That, I think, is the next conversation. Okay, we got market structure. How soon?
Agreed.
Are we in the same place?
Hopefully very soon here, not in 2027.
Right.
Parker, we are coming up on time and want to be respectful of your time, especially as a new dad and obviously our next guest. So I'm going to leave you with the final question. One of the questions I actually asked Joseph before we concluded his talk. In your mind, who is one of the most underrated figures in crypto and why?
Underrated figures. Joseph Onorati himself, our CEO, because he was the CEO of the first Canadian Bitcoin exchange. I don't know what all stories he told on the Winter War stories earlier today, but he's done some incredible things, and he's super humble about it. Kraken would not be where it is today without him specifically. He ran the entire customer support organization, was chief strategy officer. I mean, he single-handedly kept Kraken alive through a number of different, trials and tribulations. Yeah. Most underrated, least talked about figure that gets no credit, although it has a lot of credit due, is Joseph Onorati.
Parker, thank you for the time.
Gabriel, our next guest He's running a little late, so no rush.
Great talking to you, Parker. Thank you. That was a great conversation.
I'm gonna
That
drop.
was-
I've got a time limit here, so see y'all.
Thanks, Parker. Appreciate it.
Welcome back.
Austin, Mr. Fan.
Nice
Good morning.
seeing you,
Ladies and gentlemen, we've got a special guest.
How you doing?
We're really good, man. We've been doing this for 3 days, 9 hours a day, bro.
I know. When do you sleep?
I don't know, bro. This has been, you know what? Austin, mano a mano. This was an experiment. Me and JC, when I went to the NASDAQ bell ringing for DFDV, we were a little tipsy. And I told him my dream was to have a Spaces crypto conference. And he was like, let's see if I can help you do that. And we put it together and we booked I think, the most amazing lineup. And Elon Musk's technology has worked flawlessly. It has not crashed once. There hasn't been a single issue. Ladies and gentlemen, we've got the man behind DoubleZero, Austin Feder, in the house, and he's going to give us the latest and greatest. We've had him before. So we'll catch up in what's new. Any updates that you can share, maybe even consensus news, anything in the Solana world you want to share, anything in the general macro perspective. But ladies and gentlemen, here's Austin. Take it away. So tell us who you are. Tell us about DoubleZero, what you're doing, and I'll ask you questions when you're done.
Yeah, certainly. Thanks for having me back to be a part of this crazily, drunkenly conceived idea. So DoubleZero is a project we started about a year and a half ago, and we launched in October. And the mission of DoubleZero is to let high-performance blockchains like Solana exceed what's possible on the public internet. And to do that, DoubleZero has a high-performance global fiber network. And so this is exactly the same types of fiber optic cables that high-frequency trading firms use, that OpenAI uses, that Google and Microsoft use to move data around more quickly than the public internet supports, and also to do it in a much more sort of predictable way without all of the random latency that gets introduced by the public internet. And so that means that the system performs the same, whether it is 10/10 and the market is tanking and everyone's trying to send transactions everywhere, or whether it is, just any random Tuesday. And that's really the point of the network. Now, you might sort of ask, like, okay, well, obviously all these big companies, they have private fiber networks already. We are the only fiber network in the world that is run by multiple independent parties. So we have 15 different contributors, just like blockchains have many different people involved as validators. And that means that you can trust the integrity of the network. And if one provider misbehaves or cheats someone else, the data moves over their network instead. And so this is really a network built on blockchain principles for blockchains, other types of high performance systems.
Also, Austin, let's start at the beginning. So tell us, in your opinion, what is wrong with the public internet? And what is the public internet? Austin, let's go there.
Sure. So the
know what the internet is.
Yeah, the public internet is incredible, right? It's this great resource that's changed society and has changed the world. The thing about the public internet, though, is it's not built for performance. It's built for cost optimization. And that's incredible. And here in Hong Kong today, you can spend $20 a month and get a gigabit internet connection here. In New York, I spend $70 a month for a 2 gigabit internet connection, let alone the folks in South Korea who have us all beat by a factor of 10 on their internet connection. But it's all built for cost optimization. My server can talk to a server anywhere in the world for a very low cost. The expense of that, though, it's very inefficient from a speed and performance perspective. It doesn't take a direct route. It's sort of like getting on the bus versus having your own private driver. The bus will get you going where it's going to go, but it's going to get where a lot of other people need to go as well. And so it's not the direct route to get there. And so the public internet really came across by accident. It was a bunch of independent networks that started connecting into one another, and that became the global internet today. And there's about 10 companies in the world that actually run the internet. Like, we don't think of anyone as running the internet, but of course, some companies have to actually run the thing. And so there's sort of this nested tree architecture where data rolls up to these tier 1 ISPs, then it rolls back down to sort of your local internet service provider. And the system's beautiful. It works great for music streaming or, BitTorrent or Twitter Spaces. But, even some of the largest Web2 companies nowadays that we think of as like internet companies don't actually use the public internet that much. Facebook is one of the largest investors in the world in private fiber and one of the biggest builders of private fiber because the internet's too slow for them to deliver Instagram reels to everyone in the world who wants to watch them. And, if you stop scrolling Instagram, you stop looking at ads, and that's bad for them. So that's kind of a quick overview of where the public internet isn't suitable for how successful blockchain has become.
Then the follow-up question I always wanted to ask you is, how come Vitalik or Charles Hodgkinson or Bachman or Michael Saylor, how come these people don't know that?
It depends on what the goal of the project is, right? So Bitcoin is intentionally extremely slow. You can validate a Bitcoin block on a dial-up modem, basically. And so what they're trying to do is something very, very different. And in the case of Bitcoin, that's kind of the point and vision of Bitcoin. It doesn't have to be fast. It has to have this kind of global reach capacity. When you look at sort of Ethereum for years has said, we don't want to be fast. We actually want to be very, very slow. And there was a virtue in that, the way they described it. But I've had conversations with Tomas and the other executive directors of the Ethereum Foundation, and they realize that for layer twos and for fast execution, what DoubleZero offers is very, very interesting to them compared to the public internet. And so even if you're kind of this like decentralization, maximalization, everything should be slow at the settlement layer point of view, there's still a world and a role for DoubleZero in the execution environments that run on top of that. And Cardano is just its own thing.
Right. We had Nick Dukoff earlier today, and he said something that astounded me. I'm still thinking about it. He said that 200 millisecond latency or settlement on a blockchain is to a human being in a UI instant.
Yes.
So he kind of laid out that 200 millisecond settlement was as fast as we could ever conceive. It's pretty much the threshold we need to achieve. Does DoubleZero have a sort of throughput latency target?
Yeah, so 200 milliseconds, just to put that in people's perspective, that's faster than a Formula One driver responds at the beginning of the race when the lights go out and they have to hit the gas. That's about 300 milliseconds for the best ones out there. So 200 milliseconds is the same thing as instantaneous for a person. For a computer, though, 200 milliseconds is an eternity. Like Wall Street trades sometimes in nanosecond precision, which is way faster than 200 milliseconds. And so when we sort of look at these things, there's never fast enough. It's sort of like, saying, oh, how much RAM do I need for my computer? Or how much money do I need? Like there isn't really an answer of fast enough or oh no, that's enough. And so with DoubleZero, there's kind of two components to this. One is speed, right? Is this faster than the public internet? And in general, we're about 30% faster than the public internet across every route. And in some environments, we are 70 to 80% faster than the public internet. But the other component of it is consistency, is that even when the public internet is flooded with transactions, I mean, it's really interesting. We go back to the flash crash on 1010. We have a bunch of observability systems that are watching the performance of the public internet. What we saw during 1010 is the public internet in Europe got worse. The crypto, this like tiny little thing in the grand scheme of things, we're only $3 trillion of market cap. It's not actually like that big yet. We hope it gets bigger someday. Even that affected the quality of the public internet in Europe. The public internet got about, significantly worse for a few hours because there was so much crypto trading going on. That's crazy.
Austin, I've got even more data for you. I run 4 streams of my liquidation level charts on Restream to YouTube, X, and several other, and Telegram. And we host the space every day. We're on the space talking and trading. When there's volatility in crypto, like on 1010 or actually whenever there's a large volume spike, all the streams go down, everything is dead, The internet literally goes down.
Yeah,
I can validate
right?
crypto.
Isn't that
breaks
interesting?
The internet. That is something I have not heard anyone say other than you.
It's really interesting because we think of the internet as this giant, powerful, super robust system. And in some ways it is, right? From a resiliency perspective, you got to remember, what was the internet originally built for? The internet was built for the US military. And it was built as a way for, if a communication line is cut, can the system sort of automatically heal and keep information moving? And it does that really well, but it doesn't mean it does it fast or efficiently. And so we took from a first principles approach and said, hey, if we are going to change this, if we're going to rebuild what's possible, we need to start with a fundamentally different paradigm. And that's DoubleZero.
And from your original thesis, like your napkin sketches about DoubleZero to where you are today, has the course altered? Have you stayed on track? Are you where you wanted to be? What has been the major obstacle?
Yeah, it's a good question. So I would say that I've been really, really delighted at where we are today in terms of the network growth. So if you go to doublezero.xyz/dashboard, you can see in real time all of the fiber links contributed to the network. We just passed 8.8 terabits per second of global network capacity. This is where I was hoping we would be at the end of 2027. So it's really, really impressive how quickly the network has grown, how quickly the contributor network has grown.
Remember when you first came on, I looked at this, there were like 2 lines.
I know.
What's going on?
We've grown up, man.
Actually blown up.
Yeah. Oh, things are going well. So that's kind of where we're at today. And so what we have now is we have a huge amount of capacity on the network. And that means we can expand to support many other types of things. There's a bunch of AI companies we're talking with about using DoubleZero for transporting data. And the beauty of this is no matter what the future evolution of crypto looks like, whether crypto AI intersection becomes a really big thing, whether it's trading at 100 times the volumes we see today, whether it is the centralized cloud being broken up into multiple components, the decentralized cloud, all of it is going to need so much more bandwidth than we have today.
So like when one says we need more bandwidth, let's talk about the reduced latency, increased bandwidth, right? Can you explain to people what exactly that means? What does it mean?
Yeah, so at the end of the day, bandwidth is sort of the available amount of throughput a system has. So you can think of it as like how wide the highway is. Is it a 1-lane highway or is it a 16-lane highway? And latency is effectively how fast you're allowed to drive on that highway. And so you can think about it as if you have like a 2-lane road and a bunch of, grandmothers driving, you can't drive that fast. But if you have a 16-lane highway and every single car is a self-driving car in perfect communication with each other, you can run at 250 miles an hour. And that's kind of the way to think about what the difference here is. The public internet has all of this merging. It's the pipes aren't that big, right? The highway's not that wide, and you have all these different cars coming on and off. And even if there's enough room for every car, the act of merging slows everything down. Increased bandwidth and reduced latency, it's all about direct routing. It's all about making sure that the highway is not overstuffed with traffic, so everyone continues to keep moving. And it is really the only way that we've seen systems unquestionably improve. We have done so much great work in crypto over the last few years to make the software really good, right? Solana, Agave, and Firedancer are incredible pieces of software. You see the same thing though in other ecosystems where the software now is actually really good and really powerful. What's missing is it's limited by the public internet. It really is the analogy of like, you've got a Ferrari, but it's stuck in traffic and there's a lot of potholes on the road. So you really can't drive it that fast at all. And the whole vision of DoubleZero is to give this new infrastructure layer so that anyone who wants to, whether it's a Solana builder or another ecosystem or even a non-blockchain system entirely, can access this faster communication speed than the public internet allows. And I think one of the things here that's really important to dig in on even more is what we have in the cloud providers. The innovation of the cloud was that I can go to Amazon or Google or Microsoft with a credit card and 40 seconds later have 40 servers ready to go. That doesn't exist today when it comes to connectivity. There's no website I can go to and say, I need 75 gigabits per second from point A to point B. You have to call up people and it takes months to get everything installed, and you have to sign a 12-month commitment or more, and you have to wire money. And it's a really tedious process to actually get this private connectivity spun up. And so what you have is the big companies doing it. You've OpenAI doing it, and Jump, and all of these trading firms. But anyone who's sort of in that space who doesn't have, a $20 million budget to spend on global connectivity and a team of 5 engineers to hire to run it, they're stuck using the public internet, using just Amazon's network or just Google's network. And so part of what this is all about is breaking down the vertical integration and the sort of semi-monopolistic practices that we see today on the internet, and making it so, on Solana, anyone who has $300 a month in a trade server, if they have alpha, if they can think they can out-trade Galaxy, they should be able to do it. And DoubleZero provides them the infrastructure layer to do that.
So Austin, that's an interesting thing I've never really considered. Let's discuss it. So if there is this AI boom and insane productivity expansion, won't they run into the same problems without something like DoubleZero?
They have already. So AI, the limiting factor for AI growth at the moment is power availability, right? These GPUs take an ungodly amount of power. The US power grid doesn't have enough capacity to support this. That's why we have data centers being built out in the middle of cornfields or in the middle of Texas, because they can get electricity there. What else do they need there? Fiber. And the entire model of AI basically breaks the entire model of Web 2 from a data flow perspective. Almost every service you use nowadays exists on the cloud. If you're using Google Docs, all that data is stored on the cloud. If you're using your iPhone, all your photos are stored on the cloud. All of these systems are stored on sort of clouds that are nearby your phone or your computer. There's a data center, on the outskirts of your city or something like that. But AI is different. AI has such high power requirements that they can't build these things right up against cities. They're building them out in new areas where they can get the power. But now, all that data that you're processing, all the code it's shipping down to your computer and back up to its processing center, it's now going much further. Like if you're watching Netflix, that data stream of Netflix is probably not coming from more than 150 miles away from you. If you're using an AI system, it's almost certainly coming from hundreds, if not thousands of miles away from you. And so the bandwidth problem just multiplies and increases over time. And so, we see the exact same thing happening in AI and the need to build out a lot of additional fiber capacity. And we're going to see a de-vertical integration of AI. There's going to be a lot more specialization and work done between different AI systems, and that requires even more data movement. That's what DoubleZero is built for.
Right. So basically, at the end of the day, AI inference at scale requires, models running in different physical geographic locations with a shared state, much like a blockchain, right?
That's a great way to put it. Yes.
So it's literally the same exact use case.
Yes.
Wow. Did you think of that when you started DoubleZero?
We had a sense that there were a lot of markets outside of crypto that needed intense data movement. But no, we did not think that AI was going to need this level a year and a half ago when we were drawing up the concept for DoubleZero. It's been such a fast growth in both the data use requirements of AI and how good the systems have actually gotten. It's been a nice surprise.
That is just the most amazing thing. We're all aware that we're going through this massive macro paradoxical flux, right? And there's a lot of fear that comes with that. Obviously, people are afraid for their jobs and the effects of AI on productivity. And there's optimism in conjunction with pessimism. But at the end of the day, everything runs on the internet. Everything we're talking about, literally everything. This is the underpin. This is the layer zero. This is the underpinning now of AI, of commerce, of industry, of productivity. And you're literally building it. There was a lot of investment in the fiber, right? There were plans by Facebook to run their own fiber, etc. What's the status of the physical network? Are we seeing data center investment? We're seeing massive investment in data centers and in technology coming into the US with Trump's plan, etc. Is there equal investment in the fiber? What's the status of the maintenance of the internet? And how are you getting new fiber?
Yeah, so this is actually a really great point that is usually too subtle for us to get into, but fiber speed does not scale according to Moore's law. So if you look and say 10 years ago, what was the top of the line GPU? And today, or CPU, and today, what is the top of the line CPU or GPU? That's probably somewhere between 35x to 100x performance difference. The top of the line fiber 10 years ago was maybe 200 gigabits per second. The top of the line today is 800 gigabits per second. So that's a 4x increase versus, a 35 to 100x increase. And so it's much harder to scale bandwidth than it is to scale compute. And so what that means is there's always this gap between how powerful computing systems are and how much data can be moved. And so we see that gap as a huge amount of opportunity for us. And you might think like the public internet is getting better over time. The public internet is not getting better over time. The public internet is at best staying still or getting slightly worse because demand is massively outstripping the input of new supply. This is partially because historically, telecom businesses are not high margin, high return businesses. They're not the 60, 70% margins you get on a cloud provider or something like that. They're lower margin businesses because they've never had this ability to monetize their network effect. And that's one of the main differences with the DoubleZero network is it is like a private network is an anti-network effect thing. It makes no sense at all until you think through. But if I build a private network, I don't necessarily want you using it. I want it just used for me. So there's a lot of redundancy built into these systems. It's basically just wasted cost. With DoubleZero, it's a resource sharing network. And so it actually can create a lot more monetization potential and it can make a much more economically efficient use of these fiber lines. And so, that's kind of our whole play is that we're going to be able to generate new infrastructure investment because we're creating an entirely new way to monetize physical infrastructure.
Fantastic. Now I'm going to get a bit nerdy. Are you ready?
I'm ready.
I remember from computer science in my master's, we learned about the maximum constraints of fiber. I remember, and you just correct me if I'm wrong, there's a theoretical maximum amounts of data that can be sent through fiber, actual light, which was I believe 1 petabit per second. Is that correct?
So the thing about theories is we come up with new ones all the time. So in general, yes, there's somewhere around that where you start to see like, we don't know how to get it higher than that. But it's sort of like peak oil. Like every time we think we're running out of oil, like we just get better at finding more oil. So I imagine that number, well, it may be the limit today. By the time we get close to it, we'll have very smart people who have figured out how to make it even faster.
Right. So unlike microchips and microcircuits and Moore's law, we have glass, right? Fiber, which is glass, right? And there is a theoretical current limit. I mean, I think, let me rack my brain. There was something called the Shannon limit or something. There was something like the non-linear Shannon limit or something. It was the thing that actually limited the ability of light to travel through glass. And Moore's law, which is like this theory of...
Marty, you continue to surprise me.
God, I'm bringing this up. I don't even know how I remember it. There was Moore's law, for everyone listening on the space, you need to learn this. Moore's law is this theory that there will be infinitely continuous expansion in compute. In other words, our ability as a human race through materials, resources, capacity, now AI, will constantly make faster microchips. And it's a recursive pattern. The faster our microchips, the faster our microchips, because they start to have a network effect of invention and innovation. But fiber optics is glass. It's like a physical element. And the speed of light is known to be a capacity. So can we get faster than the speed of light? Probably not.
Yep.
Will we be able to obtain the speed of light in our network? Austin, that's my question.
Yeah, so there is actually a lot of optimization left on fiber. And so there's sort of, the Shannon limit formula, like you were talking about, it basically describes you can think of it as almost like a signal to noise ratio. And so it's saying for a given communication medium, what's the theoretical maximum you can push over it? So there's two ways to make that number go up, to use crypto parlance. One is you have a cleaner medium, a less noisy medium. So we've gotten much better at manufacturing the actual glass that goes in fiber optic cables than we were 20 years ago. So a modern new piece of fiber that's installed, it might have 160 or 180 channels, basically wavelengths of light that it can simultaneously support. And each one of those might be able to do 800 gigabits per second. But the beautiful thing is, as we get compression technologies that get better and better, they basically figure out how to fit more wavelengths of light over the same piece of glass, and they figure out how to fit more data over each wavelength. This is all still running through solid fiber. And the downside of solid fiber meaning exactly what it sounds like, it's one piece of glass through the entire piece of fiber, is that the speed of light through different mediums is different speeds. So the speed of light through glass is actually only about 2/3 of the speed of light through a vacuum. And so one of the new innovations that people have been working on for many years at this point is what's called hollow core fiber. And hollow core fiber does not have glass in the middle. It is hollow. And so the light bounces kind of off the inside of that, but it can move much more quickly because it's now moving through a vacuum or an inert gas as opposed to moving through fiber itself. And hollow core fiber, it's still in its infancy. There's a few deployments, but it's still mostly a research project. But that's kind of like the next frontier. And that will necessitate ripping up all the existing fiber and putting in new types of fiber. But everything else we're talking about is just like upgrades to existing systems.
Okay, here's another question for you. We're all very aware, and I mean, every single space we've had out of these 17 spaces, it's come up, the Clarity Act, market structure regulation. How involved are the regulators and the governments and the military in this pursuit? I mean, if blockchain is seen as a public service, and the digital dollar is now, and tokenized assets and regulated assets will be tokenized, then firstly, these networks will become public domain, probably regulated by the Secretary of Commerce or something, and these will become national security.
I think it's one of these interesting things where what we see is regulators actually understand the infrastructure layer and the importance of the infrastructure layer quite well. So DoubleZero, back before we launched in September, we actually received a no action letter from the SEC.
There you go.
Which is,
that's exactly what I wanted to hear.
yes.
No.
And so, this was the first time they'd issued one to a crypto company in, I think, over 4 years. And this was really, a mark of saying they understand what we're doing. They don't think the token flows and the token payments here qualify as securities. They think it is like a classic infrastructure company just powered by blockchain. And it obviously uses a token. A token is integral to the functioning of the network. And they understood the difference between that and, organized Tesla stock or something like that, which is objectively a security. And so, we were really thrilled to see this engagement from the government. We have certainly had other governments reaching out to us, not as much on sort of like the national security perspective, but from the perspective of we think this is a tool for economic growth. How can we bring DoubleZero to our data centers and our countries to help us become a blockchain innovation hub? And so, yeah, we've had some early conversations with some governments around the world to see if they're interested in this sort of thing as an economic development activity.
I'm sure it's going to be an interesting explanation. I mean, a whiteboard session I'd love to be with. trying to explain to, I mean, they're just learning about blockchain and decentralization. Now they have to learn about the inadequacies of the network. I mean, it's quite an education.
Yes, it is. But in some ways, it's less of an education than DeFi is, right? Like companies understand physical infrastructure in the ground and what they sort of like. If you think about DoubleZero, you know, if you want to downplay what it is and say, oh, it's not actually whatever, it's not that exciting. It's an orchestration layer for private fiber. It is a new way of combining all of these existing assets into a global system that produces new results. That's very different than DeFi, which is sort of a net new concept or category. And so, you know, in some ways, I think DoubleZero is, while from the crypto perspective, the most ambitious project in blockchain that many people have seen in a very long time, from a traditional infrastructure perspective, the folks who work on fiber networks and the regulators who think about, you know, how do we keep undersea cables safe and secure, this is actually maybe more similar to them than other things in crypto. And so we've had a great experience engaging with regulators and governments around this.
So Austin, look, when it's all said and done, do you think that you're like the new AT&T? Or do you think you're like the new, you know, are you the new cellular network? How would you compare what you're doing?
Yeah, when I'm talking to people outside of blockchain, the way I sort of talk about this is we are doing for compute or for bandwidth and connectivity what the cloud did for compute. It's a completely disruptive business model on top of a proven market with proven demand, and that we all know has to grow and scale and isn't doing it in the correct way today. When we're talking with crypto people, we're talking about is the fact that Wall Street's been running on this technology for 15, 20 years, and crypto is finally big enough, finally mature enough that it needs the same level of high performance infrastructure to truly compete with traditional finance. Because if we're honest today, we're not competing with traditional finance. We are nibbling around the edges of traditional finance. And I think we can take bigger and bigger bites, but to do that, we need to rethink the infrastructure layer that all of this runs on.
How do you feel about being put under the label of DePIN? Do you feel like DoubleZero is DePIN? For the people in the audience, that decentralized physical infrastructure, correct? DePIN, what stands for decentralized physical infrastructure. What's the N again? Networking. No.
Networking. So, you know, in a strict sense, like you look at DoubleZero and you say, yeah, this looks a lot like DePIN. I think the challenge with DePIN is all DePIN systems today make the same trade-off. They are lower quality than their centralized counterparts, but they're deployable by users. So Helium, each cell tower that they have is much worse than a Verizon or AT&T cell tower, but you can deploy it anywhere in the world yourself, which is huge benefit. Filecoin, right? It's slower than centralized storage systems, but it has all these decentralized properties that we know and love. DoubleZero is the opposite. DoubleZero is significantly faster than the public internet, but it's lower reach than the public internet. And so in some ways, we're the opposite of DePIN, which is sort of a funny way to put it, but that is, I think, the correct way to think about what we are doing here.
So just a quick question. So these spaces that we run, I know they're not like at capacity, I guess only when Donald Trump and Elon Musk have a conversation, but they're operating over the public internet, right?
Yes, they do. But sometimes it's not all over the public internet, right? It's only the last mile. I don't know about how X runs on the back end, but if you're watching a YouTube live stream, let's say you're watching the Super Bowl on YouTube TV or something like that, the public internet is kind of only the last mile. They're using Google's private fiber network to get the Super Bowl copy to New York City, and then they're distributing it over the public internet once it arrives in New York City. So usually there's a hybrid approach employed.
And the next question I have is, we've all seen the movie and heard the narrative that, you remember when they create, to get faster trade times in arbitrage on the New York Stock Exchange, somebody built a company in Omaha, Nebraska, and tried to create a fiber network directly to Wall Street to get reduced latency in high frequency trading to get a faster trade. Do you know that story?
Oh yes, this is Flash Boys.
Right. Won't that become a similar narrative with DoubleZero? Because if we have this abundance of high frequency trading on on the maturity J curve of blockchain, then faster transaction times. I mean, we spoke to Gito yesterday. The day before yesterday was Gito, and they were saying that without DoubleZero, they probably don't have a future.
Interesting.
Because to compete for the arbitrage, you're going to need the faster connection, especially when building.
It's true. I think the difference is, though, when Flash Boys built that fiber network, or when Jump builds a microwave network, or Citadel or DRW, they're building it just for them. It's only available to them and their traders.
Right.
DoubleZero, this is a neutral open access network. So you, as a trader who thinks you're 19 years old, you think you've got some incredible alpha, you've got this idea about how you can build a better trading algorithm, you can come and deploy on DoubleZero, and you have the same level of performance access that Galaxy or Jump or Citadel has when they're trading. And so it levels the playing field, takes it away from timing games of who can build the fastest little network link in this one specific area, who can drill through a mountain faster. Because blockchain, there's 800 validators on Solana running 300 data centers all around the world. That's too many places for TradFi to wire them all up. And so this is where decentralization can become a real advantage to blockchain. It can prevent these players who have billions of dollars a year to spend on research and development from being able to front run and outcompete traders who maybe they don't have the budget to spend on infrastructure that a large, massive trading firm has, but they have their own alpha, and it levels the playing field so that competition becomes much more open. That's one of the main reasons we built DoubleZero as a neutral open access network.
Where did you get this ethos personally of trying to keep decentralization, or let's use the word democratic access to information and financial arbitrage? Like, where did this come from in your life? Like, most people are capitalists looking to benefit themselves. They have no interest in everybody participating. And I think that's part of the problem is TradFi has that sort of capitalist Citadel wins, everyone loses type of mentality, while crypto is much more. I always actually tell people I think crypto in general is quite socialist, right?
Yeah, I mean,
it's almost Marxist.
There's a component of this that says like, so there's a, let me kind of like take a step back for a second. There's a company called Equinix. And Equinix was founded, I believe, in like the late 90s. But Equinix's whole vision was we are going to build neutral data centers. At that time, most data centers were aligned. So you'd have a data center owned by like AOL or something along those lines. And they would always preference their own uses above the uses of any other customer, right? It's sort of this idea of like, like everyone in the United States is on the same roads, but if the president's motorcade comes by, you're going to get pulled over so the president can pass, right? Equinix's whole business philosophy was we are not going to be biased for or against any customer at our data center. And now that has made them like one of the largest, if not the largest data center company in the world, because they made this commitment to neutrality. And so I don't think neutrality and capitalism are at odds at all. I think they're actually very compatible when it comes to this. And this is actually the problem with many sort of like semi-authoritarian governments around the world is the beauty about the United States is for the most part, you can come here, you can build a business and you can compete with your competition and you don't have to bribe anyone in government to do the thing you want. Government's not going to be stacked against you just because you come from, you're new to the system. That's not the case in many other countries. If you're trying to start a business in many places in the Middle East, even some of these crypto hubs in the Middle East, if you don't have a minister of something on your side, it's going to be very hard to get started. And so, DoubleZero is built on that philosophy of building an open access network that everyone can use on equal footing. And everyone also, I will say, will pay to use. This is not a socialist network. We definitely charge fees. It creates more economic opportunity than if we sort of said, oh, we're going to accept some money from Jump and put them faster, or, penalize Galaxy or something along those lines.
So before we wrap up quickly and take questions, do you have any competition?
We have no competition today in the crypto space.
That is insane to me.
Yeah. I mean, it won't last, right? Every good idea gets competition.
Maybe
at
there's
some
someone
point.
in the
But
audience, a young person that's having a light bulb moment to compete. I'm so sorry, Austin. I didn't mean it. Is Amazon looking at you? I mean, them AWS must be like, what is this all about? Google must be like, are we behind? What are they doing over there? Like it's just 8 terabyte number. These are numbers that probably scare the living bejesus out of PhDs. Like, how are you staying without competition? Like, do you think it's just because it's visionary? You've got a first mover advantage. What is it? How did you get this far without a competitor?
yeah, I think it's a lot less about the number, the bandwidth number. Google's got orders of magnitude more bandwidth on their networks than we have. And it's more about the traffic management. It's the ability to have all of this coexist together in the same system. And to have this be something where you could have Solana validators and AI companies and other types of blockchain systems and trading systems and all this stuff running across the same type of network and same environment. Like, the traffic management system on DoubleZero is quite advanced relative to what any of the cloud providers do on their networks. And this is truly the first high performance fiber network and we've done a bunch of looking and we can't find another one, that's run by multiple independent parties. And that's the blockchain ethos here, that every contributor runs their own system. And because they all run their own system and they all contribute it to DoubleZero, we get some huge advantages over what traditional centralized systems are able to do.
Okay, so given the current state, you're currently supporting, I believe, 50% of Solana's 805 validators, right? So you're roughly 411 or something. Is that correct?
Yes.
So that's half the stake.
Yes.
And we know that Solana has now at least 6 clients, I believe, 5 with a couple of version changes. We've got Agave, Firedancer, Frankendancer, Lighter, and we've got 2 block builders, right? We have Jido, and now we have Harmonic. So given all of those, are they all running DoubleZero on DoubleZero? Do you have participation from all of the different clients?
We do, yes. And we're actually, as you mentioned, we're working with Jido to get BAM, their new version.
It's so exciting. BAM and Harmonic.
Yeah, exactly. So we have Harmonic block builders on DoubleZero. We've got vanilla stock Agave builders. We've got Firedancer builders. We've got Jido Agave and Jido Firedancer builders as well on DoubleZero. So it's getting pretty exciting. We're now trying to scale up even to additional capacity as well.
So here's a big question for you. Let's say that Clarity Act passes, market structure is implemented, banks go full stablecoin. We get $10 trillion of USDC and USDT issued on Solana, and the entire world starts to have the option to get paid and earn their salaries in stablecoin. Banks have stablecoin accounts. Merchants are able and legally able to have native wallets and accept stablecoin directly. Can DoubleZero support that?
Sure. I mean, the entire infrastructure system of DoubleZero, the beauty of how this has been built, and this is a real credit to my co-founders who have worked in high frequency trading and network carriers and this sort of thing for their entire career, is that this is built as a very low level generic network. There's huge amounts of optimizations we've done, but we can support any type of system on top of it. From the network's perspective, if it's running a Solana validator or a SUI validator or some banking core software built in the 1980s, it can support all of it. And that's really the entire point and purpose of this thing.
Question, How was the Lightning Network ever going to succeed if it hadn't gone to this level?
I think the beauty about crypto is we prove out concepts very early on, and then we optimize them over time.
Right.
And so, our whole thing here isn't like, oh, we have to throw away all of the existing blockchains today and build new blockchains on DoubleZero. It's that we actually can just improve what exists already simply by switching it over from running on the public internet to running on DoubleZero. And that will give software developers a whole new area that they need to optimize and build for, and more power and potential than they thought they ever had possible to build these systems for. Our goal is basically to make this be the software people's fault again. Right now, it's the hardware people's fault. The internet's too slow. We want it to be the software people's problem again.
So have you ever got an email or a text message from the Lightning Network team?
We have not talked with the Lightning team now,
Sui,
but we'd love to.
Sui?
Yeah, we've definitely, we've talked to Sui, we've talked to Aptos, Near, Monad, Mega ETH, a lot of these different teams, Optimism, Arbitrum, they're starting to take note of what we're doing and figuring out if they can incorporate it into what they've built. And in some areas, there's, we got to make some of these systems faster in order to get there. And in other areas, we're in conversations with them. So again, we're a neutral network designed to support all types of high performance systems.
Okay. So those people on the call, this is Austin Federer and this is DoubleZero. So Austin, if we go back for the people in the audience for the final time and go through that analogy again. So if the internet is a highway, let's say it's the I-10 between Los Angeles and Las Vegas, and on-ramps are the way you get on the freeway, and people are trying to go in all different types of vehicles, motorcycles, cars, private cars, trucks, semi-trucks. They're trying to go from A to B, and they're all coming on the on-ramps, trying to get to different off-ramps. And they're backing up with traffic jams because for whatever reason, there's a pothole, there's a car accident, there's a slowdown. Then the current public internet is gridlock at high demand times at rush hour. And DoubleZero is like a parallel toll highway where you can simply pay a small fee at the on-ramp and have absolute freeway 100-mile-an-hour speed to get your destination. Is that a good analogy?
Yeah, I mean, that's the entire purpose of this, is to build faster communication systems that are more dependable and allow everyone to exceed what's possible today. I think you're gonna have the barbells of, Bitcoin, which runs on a 5016 modem, and then you're gonna have Solana and other blockchains that are willing to run on private networks. And I think everything in the middle may end up being a little mid-curve.
Well, there we go, people. Austin, it's an absolute pleasure to talk to you, and I'd love to meet you in person one day. Maybe we can share a beer. Let's open it up to questions. Anybody got a question for Austin before we let him go? Go ahead, Wes, Ted, Jesse, Devin here. There we go. Teddy, you got any questions for Austin?
Oh, no, just incredible. Interested in so much, but yeah, we don't have to get into it. He covered so much on that just now.
Yeah, I think that was about the best presentation of DoubleZero I've ever heard.
Yeah, and it's worth editing some of that and getting it out there on the web.
We will be, Austin, with your permission, I'm going to chop out this 1 hour and distribute it again.
Of course.
I think this is about as good a description of what you're doing as you'll ever hear. And so have a good time. Hope you're well. Stay alive. Keep doing what you're doing. Keep us in touch. Follow my page. Subscribe and come on the office space if you ever want to vent or be amongst crypto people. I know it must be tough out there in a world with, we're so early. We talk about it all the time. If I go to my local bar here, nobody knows about crypto. I went to the Waste Management Golf Tournament on the weekend, and I was sitting there on the 16th with all these stands with hundreds of thousands of people. And I thought to myself, I'm probably the only person here that knows about crypto. And that's the world we live in. We're just early and we're revolutionizing everything. And I think these are the early conversations we'll always remember.